through AMC. We'll be speaking with the management as well shortly. They are huge, right? They're, right now, in terms of average quarterly assets, they are the largest. And they have a large equity share, and having more of equity assets under management usually is, very profitable as well. What do you think? Subscribe, avoid, and what about the pricing at which they're coming?
So, unfortunately, we are one of the lead bankers, so I would avoid giving any.
Okay. So you won't take this one. Let me ask you. Okay.
Rima, should we revise the just the basic offering? I mean, if
okay,
I think
we'll
do
just
it a little.
yeah, just
we get the graphics up in just a bit.
But all these companies have been humongous wealth creators, right?
Yeah.
I just was noticing HDFC AMC has a market cap of 1 lakh.
13,000.
1 lakh
14,000.
Right?
Yeah.
SBI mutual fund is the leader, of course. I mean, I think about 11 lakh crores in assets under management. ICICI is about 10 lakh odd crores.
Yeah.
But as you said, Surabhi, what matters is equity AUM, because in debt assets, you make very little money.
So SBI is larger in terms of AUM compared to HDFC, but in terms of actively managed, ICICI Pro is larger than SBI, and plus
because
in terms
SBI
of
has, I think, all the NPS, etc. as well, and they have.
And some accounts are dormant where you haven't seen action for the last 12 months, but because they have a large equity exposure compared to the rest, the largest, their profitability is also higher. But we'll discuss that.
Large equity exposure and the fact that active assets, like you're saying, versus passives. Passives, you don't make money as a money manager. But there's a few basis points here and there, but active fund management is where the money is.
Well, I think it's one of the best businesses, right? It's like you can have 10 people to start with. What are the costs, right? Costs of people and distribution, mainly, right? And you can have 10 people managing 100 crores, 10 people managing 1 lakh crores, 10 lakh crores, whatever. I mean, obviously, the size increases, but it's so non-linear, the cost that you got to put in, and of course, I mean, the profits that you can make. That's why it makes it so attractive. We'll take a break here. We'll come back with some technical trading ideas. Sudeep Shah and Mitesh Thakkar on the other side. Stay tuned. Coming up.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Okay, welcome back. There's 15 minutes to go for the pre-open session. Hormuz is here with the big movers from yesterday, and what lay behind the price action. Hormuz, over to you.
Good morning, Prashant. And we spoke about a lot of these names yesterday throughout the course of the day in the broader markets, the rebound that we saw. Shakti Pumps was one such name. And all the pump names were in focus yesterday considering the order wins that they won from the MSEDCL. Now, the Shakti Pump stock snapped an 8-day losing streak yesterday. It was the biggest single-day gain since January of last year. Volumes were the highest since October of 23. And over 2.5 crore shares were traded yesterday on Shakti Pumps. The 20-day average of just around 5.5 lakh shares. And out of those 2.5 crore shares, only 19 lakh shares were marked for delivery compared to a 20-day average of 2.5 lakh shares. So the stock is down 40% this year, but bear in mind that in 2024, the stock was up 6x. Now, Neogen Chemicals was the other one among the top Nifty 500 gainers yesterday. The second straight day of gains that came in after 6 days of losses for the stock. The volumes have been on the rise for 5 straight sessions now, and Thursday's volumes were the sum total of the last 173 sessions put together. The kind of volumes that which the stock moved yesterday. 86 lakh shares were traded. The 20-day average is only a lakh, and out of those 86 lakh shares, only 4 lakh shares were marked for delivery. The 20-day average here is less than 60,000 shares in terms of the delivery volumes, and the stock has halved so far this year in 2025, and in 2024 the stock was up 50%, so it effectively cancels itself out. And lastly, Premier Energy is one of the biggest, most successful listings of last year. Only the second day of gains that the stock saw in the last 10 sessions yesterday. The stock made a 52-week low intraday and then staged a rebound, ended around 4.5% higher. 39 lakh shares traded, the 20-day average of 9.5 lakh, and 8.5 lakh shares marked for delivery, 20-day average of around 4.5 lakh shares. The stock made a post-listing high of close to 1400, down around 35% from those levels, and is now trading around about its listing price, which is close to 900 rupees.
Thank you very much for that, Siddharth. Any of these stocks in your coverage? Shakti Pumps, Premier Energies and Neogen Chemicals?
So I think only Premier Energy is something that we cover. So if you look at the overall renewable energy space, the capacity expansion that they have been doing, that is something that has been a good growth story. But in terms of sentiments, I think there has been a lot of flip-flop, especially from the US, and that is leading to some sentiment change. Otherwise, what we believe is that some of these companies, both Premier, Vari Energy, we believe these are good companies from the long-term perspective, especially given that there is a lot of focus on renewable energy, and these companies have been adding capacities, which is leading to the growth.
What about Honasa Consumer? They've marked their entry into the growing men's personal care and grooming market. They've acquired Reginald Men's for 195 crore rupees, but Mangalam was telling us that the TAM of men's grooming is 20,000 crore rupees, and this is a fast-growing acquisition. I mean, your reading?
Unfortunately, we don't cover Honasa, so I would not have any specific views on that space right now.
Okay. That's Honasa, but related space, Swiggy. Siddharth, there's been so much of debate. By the way, I read something which said that this 10,000 crores they are raising, one criticism, it was one of the brokers, I don't remember who, one criticism was that a lot of this is probably going to go in customer discounting. All the cashbacks and the offers will come back, not necessarily fresh customer acquisition or, going into the expansion of the business. Your thoughts on Swiggy right now?
Yeah, I think some of those expectations is unwarranted. We have seen the worst phase of discounting over. Like, I think the entire sector, especially if you look at even Zepto, which was leading to some of these discounting, is now looking for an IPO. So they are focused on profitability. So I think the competition is definitely there, but it is much more matured in the sense that bulk of these funds that has been raised will go towards a calibrated capex expansion. Among the two listed players, I think there is much more room for upside in Swiggy, given that this company is now transitioning towards profitability, supported by an operating leverage, efficiency in the food delivery business, and Instamart, the GOV is improving on a sequential basis. So even we expect that the Instamart to achieve break-even by the first quarter of FY27, which should lead to much more re-rating going forward. And yes, there is some competition which is intensifying. Swiggy's execution, strong capital base with the fundraise, that keeps him much more stronger in that sense. So we like Swiggy. We have a buy rating and a target price of 550.
Okay, the war chest with these quick commerce companies. For Swiggy, it stands at 17,000 crore rupees. For Eternal at 18,300 crore rupees. And for Zepto, according to reports, at 8,500 crore rupees. But just back to ICICI Pru AMC, the IPO opens today. So some quick numbers. One, the issue size is 10,600 crore rupees. This is a pure offer for sale. Now, it was incorporated about 30 years back as a joint venture between ICICI Bank and ICICI Prudential. ICICI Bank has a 51% holding, Pru has a 49%. But in this offer for sale, only Prudential will be selling 10% holding. ICICI Bank is not participating and they're not looking to raise any fresh equity. Now, some stats about the size of this company. It is India's second largest AMC in terms of an overall AUM, but the largest in terms of the active management. So their active management, the actively managed AUM market share stands at 13.3%. And in that, their equity mix is also loaded more than the others, and equity mix is about 55-56%. On account of the fact that it has more equity, more actively managed, it's also the most profitable amongst the AMCs. So the operating profit market share for ICICI Pru stands at 20%, higher than SBI, higher than HDFC AMC, and higher than Nippon India. The revenue, EBITDA and profits have grown at a CAGR of 32% over FY23 to FY25. So they've enjoyed the tailwinds of the, rising, the strength seen in the AMC business with financialization of saving, rising retail demat accounts, etc. Now, in terms of pricing, and analysts say it's fairly competitively priced. ICICI Pru AMC implied market cap will be 1.07 lakh crore, which is similar, slightly lower than HDFC AMC market cap, which is 1.13, 1.14 lakh crore. So all that is good. What are the risks? The risk is regulatory because of the SEBI proposal that came out in October about capping TER. Will that compress margins, increase operating ratios, increase the operating costs, pardon me. Secondly, competition. Jio BlackRock has lost. Many discount brokers are also planning to launch their AMC business. And third, generally the equity business is cyclical. So when there is a downturn, you do see the AUM or the financials getting compressed. But that is the mega one, and I think it's the fourth one from the ICICI group, which will come out.
Yeah, absolutely. And, definitely like Prashant mentioned, because most of these AMCs, HDFC, of course, is the one that's been the maximum, the biggest wealth creator in the pack. But most of the AMCs have done well and they have created wealth for investors. So let's see if ICICI will do the same.
One of the ways to look at how attractive the business is, just look at the line of companies lined up to launch.
Everyone wants to set up an AMC. And Prashant, I asked this question to a lot of the mutual fund CEOs, saying every day there's a new AMC launch. Is it really that great a business? Isn't it going to become too hyper competitive? And most of them have responded saying that there's a huge opportunity. Considering that we've barely scratched the surface.
Yeah, so you report on the 20,000 crores of SIP money. What was the number? 20?
It's touching 30,000 crores, 29,500.
SIP.
Just SIP flows, gross SIP flows of 30,000 crores coming in every month.
There you have it. I mean, that's the raw material, and the raw material is in abundance, right, at this point in time.
And the anchor book also is very well subscribed. If we have those numbers, they raised about 3,021 crore, Temasek, GIC, LIC, JP Morgan, Aberdeen.
And a lot of the local AMCs.
A lot of the local AMCs also want a pie.
Want a pie. The local mutual funds want a pie of ICICI Pru AMC. All right, we'll take a break on that note. To come back on the other side, we'll have the pre-opening rates with us. Also, Parthav Jhonsa of Anand Rathi Institutional Equities will join. We'll talk about metals, specific spotlight on Tata Steel, and then, of course, our technical experts with today's trading calls.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Welcome back. So we'll start getting our pre-open rates in just a bit. And the implied open has been telling us it's going to be a good start. I mean, 100 plus up. The question is, can the bulls build on that? Let's bring in our technical experts. Good time to discuss the trades of the day. We have Sudeep Shah joining in, and we have Mitesh Thakkar as well. As always, gentlemen, good morning. Mitesh, so we're probably set for a gap up, but then how to trade it?
Yeah. So I think, you raised a very pertinent question when you said, let's see whether, it can be sustained. I think, if we open close to about 26,000, I think 25,950, 940 becomes your immediate pivot, which is where, the 20-day, the short-term moving averages are placed. So I think as long as we remain above that and post hitting 26,000, there is no immediate selling pressure, then I think we might head back to the earlier highs of 26,200, 50,300 zone. So I think that's the target area. Closing about 26,300, of course, will be a very different setup altogether.
Okay. Sudeep, hi, morning. What about you? Nifty or Bank Nifty trades?
Good morning. See, Nifty-wise, I feel I agree with Mitesh that 26,000, 26,050 now remains an important level. Even if we see the call writing data, 26,000 and 26,100, they have we've seen additions yesterday also. So there, I feel this zone of 26,050 has utmost importance, and above that, one move up to 26,200, 26,250 is likely. So 26,050 on the upside is important, and on the downside now 25,800, 25,850 zone remains a pertinent support.
Okay. Gentlemen, let's also get down to stocks. By the way, the pre-open has just started, and I think we'll have to wait for it to settle because right now it's showing about 70 lower on the Nifty. HDFC Bank, Bharti Airtel, these rates are yet to settle. They're a little all over the place. Yeah, I think now it's beginning to stabilize a little bit. Let's do the stocks while the indices settle down. Mitesh, what are the names you're going with?
Yeah. I have 3 buys and 1 sell. On the buying side is ABB with a stop at 5214 for targets of around 5,300. Indus Tower is a buy with a stop at 404.5 for targets of 422. A buy on Policy Bazaar or PB Fintech with a stop at 1924. And look for targets of around 2,000 on the upside, and 1 sell call, which is ONGC. Keep a stop at 243. Look for targets of 228.
Okay, and Sudeep, your stock calls for the day?
The first stock that I like is Lupin. Yesterday, we have seen a decent move in most of the pharma names, and within that, Lupin remains very strong on the weekly charts. We have seen a lot consolidation right from May 2025 till yesterday, and we're seeing signs of a breakout there out of that consolidation band. So 2040 remains the stop loss, and 2150, 2180 is our target. The second stock that we like is Bharat Forge. Now, this stock had moved in the last month up to 1440, 1450. Post that, it retraced back, say 50% of its move, and 1350 acted as a strong support. And yesterday, we have seen one more positive candle over there. So what we feel is from here on, we may see a continuation of that previous rally, right, which has started from 1200 levels. So from here on, 1340 remains a stop loss, and 1480, 1520 remains an important level on the upside, and which are our targets for the next couple of months.
Okay. All right, gentlemen, stay on. We'll have some more questions for you in a bit. By the way, the pre-open is a little curious, you'd have to say, because our immediate sense of optimism on that phone call between the two great leaders, the Indian Prime Minister and the US President, that's not exactly being mirrored. It's very muted, 40-point sort of an up move. So maybe, a sense of hesitation in the market. Sensex up about 100 points at this juncture. So we'll see. We'll see how it builds. But as promised, let's also get to a conversation on the metal space with a specific spotlight on Tata Steel. Of course, the company and the stock is in focus after it announced a major expansion, a lot of capex programs. To talk about this, the outlook ahead for Tata Steel and for, of course, the metal space overall, Parthiv Jhonsa, Vice President at Anand Rathi Institutional Equities, is with us. Parthiv, thanks so much for joining in. So it's a large expansion that Tata Steel announced yesterday, right? They're looking at doing it organically and then the tie-up with Lloyd. where they're looking at expansion in Maharashtra. What did you make of the announcements and the kind of capex that will be required?
Hi, good morning. Thank you for having me. So let me just start that, yes, this is a growth capex, which basically Tata has come out. And this is not just for the Tata, even for Lloyds equally is as important as that's for Tata. And now the entire capex or the entire growth journey, what they have laid out, day before yesterday, is basically taking care of, taking NINL from 1 to 4.5 million ton at Miramandli, and thereafter, they have even tied up with Lloyds, wherein they are so main focus of that JV is to basically, take that slurry pipeline which is going through Babil, which is basically connecting their mines to the Kalinganagar kind of a facility, kind of a pipeline, and which has a further potential to take it to a port-based kind of a pipeline as well. Another aspect is basically they have developed this one low carbon technology at Netherlands, which they are trying to get it in Jamshedpur and trying to put up a 1 million ton kind of a pilot project, which is at a much lower capex than your regular greenfield project, which usually requires, just to give you a ballpark, it requires almost about 7 to 9,000 crores per million ton. This will be done at a 2.5 to 3,000 crores kind of a capex. So it's practically about 1/3 the capex. So that's also very positive, where you can feed slag, you can feed low quality ore, which also has a lower emission compared to your blast furnaces, which also helps you to adhere to your European standard or CBAM norms to an extent, right? So all these things, all these things basically gives them a growth journey going forward. We have always been talking that, okay, Tata Steel has given out a growth journey, which will basically double down their domestic capacity, but there was a lot of unknown variables that how will they take it post 28-29. But now a lot of clarity has been given out by the management. So a big cheer for the management that they have laid out, not only taking their flagship or legacy facilities, but even taking care of the new facilities. Now the beauty is, because these facilities are new, they already have engineering in place, so the time taken to set up a blast furnace at NINL would be much shorter, would be much faster than what they have done at the other facilities, right? So you are saving on your time, you are expanding faster, you are taking that opportunity of India being being the fastest growing in ferrous space. So that's basically for Tata.
Hi, this is Rima here. Could you give some numbers? What, according to you, would be the total capex that you're factoring in, and how will it be funded?
So let me just put this across. What is the total capex? So as I told you, the Jamshedpur is expected to be close to about 2.5 to 3,000 odd crores, which the management has already given out the number. The other number, which is basically the NINL, which is the largest chunk of the entire thing, the management has already clearly stated that they will get back in the next couple of months. They also are doing some preliminary work at their end. But if you want to just put it across, usually a greenfield requires almost about, say, 8,000 odd crores. So just multiply that by 4.5. So you'll get about 35 or 1,000 crores kind of a capex. I think, but it is expected to be a bit lower than that, because you already have engineering work in place. You already have a facility. You already have a major land bank in place at NINL. You already have mines in place. So your overall capex should be much lower than that.
How much lower? So what are the numbers that you're working with? I understand the management will get back with the official figure, perhaps, by March or in the next couple of months. But how much lower than 35,000 crore?
I'll not give out a very specific number out, but let me just put it across. It will be substantially low. Let me just put it across that way.
Got that. And how will
I want to avoid giving it, because the management clearly have indicated that the numbers, even they are doing their own. They have gone to their own drawing board and they are doing their own calculation for it.
Got that. Will funding be a concern? How will it be funded, to your mind? What did the management say about that? What could be the peak debt for the company, since Europe refurbishment is also on?
See, I think your domestic is at a very good space compared to your European subsidiaries for Tata. You're already doing a good, 15,000 kind of an EBITDA, and that would keep on continuing going forward till at least till 2030, till the time they have their own mines. What I believe is capex, the debt would not be a problem for Tata at the end of the day. They would be able to, furnish that debt, and they'll be keeping it below the threshold, whatever they have quoted in the past.
Okay. And the other, talking point in the markets is that what if the safeguard duty doesn't come? What will be the impact on steel prices?
So I was just on a call with a couple of my my channel checks or my vendor networks in today morning itself. So some backward calculation we did, just to give you perspective, China, CFR is almost what, say, $500 odd. When you add close to your all the duties and your port handling charges, net it works out to, as on date, without the safeguard, it works out almost about 10% higher than your domestic HRC, right? If safeguard does not come, this is the gap. You are at almost about 10% discount to the global prices. Now, Bao has already taken a 14% hike yesterday. $14 hike yesterday, which is basically expected to come in India in January. What I spoke with a couple of vendors, there is some very minor price hike because of the supply-demand dynamics, almost about 500 rupees in major markets like Bombay and Central India. So there is a 500 rupees price hike, which is currently there in the market. You can expect another 1,000-1,500 hike in coming weeks by the time you reach first or second week of January. So overall, so if you consider month on month, it will almost be about 1,500 to 2,000 rupees of a hike, which is expected.
Got that. And just looking ahead to 2026, I think this year belonged to copper. But
Yes.
next year, between copper, aluminium, which base metal are you more bullish on?
Let me just give you some background across not just copper, aluminum, just across the top five. Copper, yes, I'm bullish today, and I think for the next 2 to 3 years, because of the global copper crunch, number one. And number two, no major mines are coming up. If you see, I had recently initiated on Hindustan Copper also, where I clearly mentioned this, that the global capex towards copper right now is basically going up, and it's been 4 or 5-fold over last about a decade or so. There are no new major, resource which has come up in last 2 years, right? So the global copper crunch is going to remain. I think the LME at $11,700 might remain around this level. And what we are building is around 11,000 kind of a level on a LME over next 1 to 2 years. So copper is going to be the favorite out of all the five, even for next year, followed by aluminium. Aluminium being the second, biggest commodity after steel. There's a lot of demand coming from all these sectors, whether it be legacy sectors like infra, construction, to the new age sectors of, renewables or EVs and so on and so forth, right? So copper, thereafter aluminium, thereafter you have, zinc, right? Zinc is, again, though the prices are, as I always tell, prices are globally global driven, but the demand is very Indian centric. It's because it's at the end of the day, it's related to steel cycle, right? Thereafter, you have nickel and then lead.
Okay, thank you very much. A great conversation. So many insights you've shared with us. Let's get in a few 9-10 calls. Mitesh is now back with us. Mitesh?
I'll go with a buy on ABB for targets of 5295.
ABB 5295. We'll come back to you. Let's get in let's get in Mangalam, because Honasa, at least in pre-open, is up 4-5%.
Yep, Honasa, actually as a stock, it's been quite an underperformer, barring a few episodes, post numbers, etc. When we've seen a spike, it's still below its issue price at 325 rupees. So it's understandable that the stock's seeing a bit of a spike because the news is fairly good. They've gone ahead and forayed into the men's personal care segment by acquiring Reginald Men for about 195 crores in enterprise value. They'll first purchase this, 95% and then 5% over the next 12 months. It's a very interesting business. The main product of theirs is a sunscreen, and it started about 3.5-4 years ago, where FY24 revenues were close to around 40,000 rupees. That jumped all the way up to 20 crore, and thereafter the trailing 12 months, 74 crores. They have gross margins of over 70% and EBITDA margins of 24% as well. Fairly strong in the south, 80% of their revenues coming from there. So the opportunity of scaling geographically is also extremely crucial. And the valuation for a company that has been growing so fast has been fairly, attractive as well, at 2.5 times implied EV to revenue and around 11 times the EV to EBITDA. Men's personal care market on the whole is about 20,000 crores, likely to double to 40,000 crore by 2032. So fast-growing company in a fast-growing segment with good margins. The street likes that.
Okay, all right. Mangalam got that. So Honasa definitely topping the charts this morning in terms of stock reactions are looking good, 1.5% higher. Actually, there are a lot of other stocks that were in the news as well. So let's quickly run through the list and how they are placed. Tata Steel is in focus because of the expansion. We just discussed that with the analyst as well. So minor gains coming in over there. Some of the pharma stocks, Synoris Pharma, by the way, is the one that really stands out. Gain of almost 5% on this one. Thermax is reacting quite well to that brokerage call that came through as well. And there is Astra Microwave. They've won an order. Yes Bank, where there's a lot of uncertainty about, the management change that is underway. So that's a stock that's a little flat at this juncture. We should pull up L&T, by the way. Reddy's, of course, right? Reddy's court issues with this, manufacture of semaglutide here in India and then overseas sales. Novo Nordisk is challenging even that. So Reddy's is in focus. And then there is, of course, Interglobe. The uncertainty continues around Interglobe as well. But the stock that I was referring to was L&T. It's reacting very well to the brokerage call that Sudarshan gave out earlier in the morning. It was, I think, a Goldman Sachs call where, the view is fairly optimistic. Stock's the best performer on the Nifty this morning as we are all set for the open. But 72 points higher. Guys, we'll have to say that, it could have been any other morning. That excitement around the phone call, that absolute, frenzy. That's missing, but maybe for good measure, slow and steady.
I think we should get up rupee also, because if I last checked, I think rupee also opened at a fresh record low.
90.47 on the screen.
Yeah, so...
Around where it made a new low, right? I mean, I think 48.49 was the low yesterday.
48 was a low.
52 also.
Got first rates coming up. Let's just look at the Nifty first ticks. So 25,970 is where we're opening. 59,440 is where we're at in the Sensex. It's about 80 and 270 respectively on those two indices. Nifty Bank is starting with about 1/3% gain. That's about 190 points. The Midcap index is up about 1/3%. The small cap index is, starting higher as well. So general slight lift to sentiment is what you have. So yesterday the screen looked better. Hopefully the screen stays better. At least 1/3% gain that we are opening up with the Nifty stays through the course of the day as we wrap this Friday and the week out. Let's see. Maybe it gets better. We got the Nifty heat map, which should come up on your screen, and then we will move forward from there and look at the broader market, etc. So everything, I think about 40 names are higher, and L&T is on one end. We, of course, discussed that with Sudarshan a little earlier in terms of brokerage calls. Wipro's on the other end, but more up than down, definitely. 25,980 on the Nifty. Surbhi.
I am checking the rupee, like Rima said, and indeed today morning low is 90.55. And at this at a time when the dollar index overall has been cooling off, the dollar has been cooling off. The dollar index for, just for reference, is actually just at 98.36. So overall the dollar is weak, and yet the rupee continues its slide. So we'll keep an eye out on the currency. Let's see if some stability comes in. But on the equity screen, let's see what's working. Hindalco, Tata Steel. So the metal stocks continue to do well, and they've been the biggest theme this week. There's L&T, which is up 2% right now. Adani Ports is 1% higher. Some of the financials are looking good as we start the day. So that would be Axis Bank, Bajaj Finance, Jio Financial, Bajaj Finserv, ICICI Bank. A lot of the financial stocks, both bank and non-bank, are looking pretty smart this morning. There's also Reliance, 0.5% up. So that's helping the bulls cause on the Nifty. On the downside, there's Max Healthcare, Eternal. There's some selling in Wipro. Then there is Shriram Finance, which is not part of the overall financial rally, but not too many losers. More gainers and 90 points, not bad. Smart start for the Nifty, Rima.
Well, Thermax is moving smartly. That's up more than about 3%. This is after Kotak upgraded the stock to a buy from an ad. Target price set at 3,575. So these industrial, capital good companies, both L&T and Thermax, seeing a lot of interest. IDBI Bank, where Ritu was pointing out, Fairfax has emerged as the front runner. So IDBI Bank seeing some interest. That stock has gained close to about 2.5%. The rally in gold continues to keep the levels high on Muthoot Finance. So that's opened up in the green. Honasa, not quite the 4% up move, but then again, it's a small acquisition. The company is spending about 195 crore rupees. So it's a subdued opening. Keynes Tech continues with the green from yesterday. So that's got a gain of nearly about 2.5%. And I think we should pull up into Globe Aviation as well. Every day we do a check at about 9:15 to find out what the mood is on that. And Interglobe will also come up.
Okay, all right. I think we've got the market open across the board. We'll, come back to individual names in just a bit from now. Manishi Ray Chaudhary is with us. Manishi, good morning. Good to have you with us here. And we also have Anandya So I want both on. Let's have Anandya on as well. And we'll do currency before equity. Usually we go straight to our equity guest. Anandya, good morning. Is it perplexing? I mean, the dollar index is down about 1% in the last 2 days. I mean, that itself is kind of large and unusual for dollar index to move like this. But on the other hand, you've got the rupee, which is making a fresh low even this morning. What's going on?
Yeah, very good morning, and thank you for having me. You're absolutely right. If you look at the dollar index, the USD-INR move is not making sense. But when we go deeper and look at what happened over the past 1 week or so, the US bond yields have hardened. That's not just US, even the Japanese, the bond yields have hardened, because of which what is happening, we are seeing outflows from the Indian bond market. So in the month of December, there are outflows. FA have been selling in the bond. They have been, of course, selling in the equity. So overall, $2.5 billion outflow till now in December is basically weighing on the rupee. So the dollar index is not much playing out. It is the outflows which are playing out, and RBI is intervening, but in a very sporadic way.
Anindya, that's worrisome, what you just described. I mean, the equity outflow picture we've been, of course, mapping and tracking through the year. But this bond outflow, because it was, actually, whatever little money you were getting was in the bond market. What is your call? Could this exacerbate? And then what about demand coming in from importers? So what are we looking at? Absolute near term. I mean, we're talking today, tomorrow, absolute here and now.
Right. See, as long as the bond yields, because even the yields have continued to harden since last night in the US, even after the Fed rate cut. So that is not a good sign. And we have now the Bank of Japan. Now, if the yields continue to harden, and then I think we could see even more outflows from the bond segment. The FPI selling can happen there. Importers, they have been covering themselves, so there the risk is not there, but the risk is from the FPI outflows in the bond, and then, of course, the spillover into equity. And I think the RBI may have to come in heavily around the 91 levels, otherwise it can break through the 91.
Anindya, we thought that RBI would come in heavily around the 90 level because that was the psychological level, but that's been surpassed, and every day we're sub 90 and making fresh record lows. Have you had any conversation with RBI officials, even off the record? This crawl-like depreciation, till what level will it continue? What is the comfort level now?
The actions are clearly spelling that they are comfortable with the current levels. The kind of, you can see it as, because the inflation domestically is extremely low. So we are taking the benefit of a weaker currency. If the inflation was high, then this would have not really played out well. But because we have a low inflation, RBI wants to give as much as possible support to the export sector. And so it's a kind of a trade war environment, and you are trying to use the currency as a tool.
Yeah, no, absolutely. Lots of economists have argued as well that, it acts as a bit of a shock absorber, the depreciation, especially in an environment like this. Anandya, the phone call last evening, I'm sure that on the currency side, which is a lot more sensitive to things like this, right? This kind of stuff is the lifeblood for at least people who are trading Forex. What's the reading? What's the read-through? There's not very much mention of, a trade deal or progress there, but of course, lots of other stuff mentioned.
Absolutely. If I take Commerce Minister's comments and things, so it looks like the trade dealers, of course, is going to come, but when, it's still not clear. So we have to wait for that, but it's so well analyzed and researched that we may not see a big impact from a trade deal. I think a bigger impact may happen if the Fed is forced to intervene in in their bond market, because they would also be concerned about these rising yields. They've already made an overture by saying that we are going to buy bills in the coming weeks.
In a way, Anandya, QE is back, isn't it? $40 billion a month.
Yes, if we leave aside the semantics, it is a QE.
It is QE, yeah.
I think the total quantum is 40 billion is in T-bills, and then buying 10 billion worth of some other kind of paper, which is what's going on. Thank you, Anindya, so much for joining in and weighing in on what's happening in the currency markets right now. You have a good day. We'll connect again soon. Let's head to Manishi. Manishi, now what to do? The currency is eclipsing the equity market action. But back to the central point, if you see the market, equities this morning or currency, markets are not paying too much heed to this phone call. And I think markets want to see something far more concrete, which is what they've missed all through this year. Now, what is your sense? I mean, are there enough risks to the upside, or should I say, risks to the downside view? We all are waiting for the turnaround in earnings. We all are waiting for that trade deal. But how's it looking as we enter the new year?
Right. Thank you very much for having me. It's a good day to be here, in a sense. So, the point that you made about this phone call about the trade deal not having the desired impact, I think that's partly because this has been talked about, this has been well telegraphed over the past 2 months almost. The market has been waiting for the trade deal to come through. If you look at the basic variables which influence an equity market, earnings, currency, and interest rate, only one of them, the interest rate, has been in its favor over the last, few months or so. We are still waiting for the currency to stabilize. We are still waiting for earnings estimates to move up. And even the worst part is that in both these parameters, for earnings and currency, rest of Asia, particularly the North Asian markets, are doing way better. Asian earnings estimates are showing an uptick. There's an upward inflection led by the North Asian markets. We are seeing Indian currency being the worst performing, but much of Asian currencies haven't done that badly. Many of them are actually up. So that comparison is actually becoming stark in the minds of the FIIs, and that is reflected in what they're doing in India.
Yeah, no, absolutely.
Genuine selling over the past few months.
Absolutely. It's becoming more and more difficult, I guess. I mean, from an institutional equity sales team perspective as well, I can just imagine, how to sell the India story, where you have tax eating into your return, you have now the rupee depreciation eating into your return. So it's tough out there. On that point of North Asia doing well, Manishi, yesterday I was having a conversation with Adrian Moat. He's someone who's watched these Asian markets, including India, for many, many years, right? And I asked him that question, that if investors want to diversify away from blue chip AI trade in the US, can they come to India? Will we get some money? And his view was that even after the run in, say, South Korea, some of those South Korean chip stocks are still looking reasonable. And that was news to me,
Yes.
But what's your sense? Because we are living in hope that as the world wants to diversify away from semiconductor, chip, AI, all that, we'll get some money in the new year. But will we?
Right. I think it's absolutely right. The point that you said that Adrian made. Some of these, like SK Hynix or Samsung Electronics, they're still trading at single-digit P multiples. If you look at TSMC in Taiwan, the P multiple is a little higher. It's possibly in the late teens. But then earnings growth potential and the moat, the business moat that the company enjoys by virtue of being a monopoly, that is significantly stronger, and it's basically a very significant tailwind for continued interest on the part of the FIIs in these stocks. So I completely agree with that point, that despite the fact that these stocks have run up so sharply in 2025, I think there will be investor interest in those stocks in 2026. Also remember that in this whole AI and AI enabler space, these stocks are way cheaper than their US counterparts. So if someone is concerned about monetization of AI and consequently the valuation of the core AI stocks, then these Asian champions, the Asian enablers, are one universe that he can look at.
Okay, I think I should take a coffee break to digest that. Something like an HK Hynix, despite the mega rally, is still in single digits, Rima. And
SK Hynix.
SK Hynix, as Manish has pointed out, and all of our IT big boys, despite all the drubbing, still in the 20s.
20, 22, so yeah.
Right.
Yeah.
Manisha, give us the big picture, right? Now, going into 2026, how is your portfolio looking like, and what are the key changes that you've made in the last 1-2 months? Because, Samir Arora was making the point that don't look at India's performance, say, on a year-to-date basis. If you just look at it from October, India has actually outperformed the emerging markets, even in dollar returns. So if you look at the near-term momentum, it's in favor of India. So tell us the changes that you've made, and then looking at 2026, what's the outlook?
Okay. Great. So we have actually added to India slightly. Just about a week ago, we rebalanced our Asia ex-Japan model portfolio. We're now marginally overweight on India. So compared to about 18% benchmark weight, we have about 19.5%. We're not going overboard, but we have a marginal overweight. We're also overweight Hong Kong, China combined. We're also overweight on Korea. We have a marginal underweight on Taiwan, but we do like the Taiwanese technology universe. And, we don't really have much of a weight on the ASEAN region, some bits and pieces in, in Singapore and Thailand. So great. So now coming to India, there are 3 or 4 sectors where we have significant presence. The private sector banks, I've been talking about them for ages now. And I think the outperformance is just beginning to set in over there. The consumer discretionaries, autos, and various other things aligned. And that would include some of the hospital chains or the diagnostic chains, because affluence necessarily brings about more health consciousness. I would look at some of the, the conglomerates. Like I do have Reliance Industries, which is present in a multitude of, businesses and has an earnings upgrade recently, primarily because of the oil business, the oil and petrochemicals business. The sector that stands out as being absent from our portfolio is IT services, because unlike many of Asian tech companies, Indian IT services is an AI loser. I mean, their business is possibly already getting disrupted, and until and unless these companies rediscover or reinvent themselves, their core business model is going to be significantly at risk.
By the way, both the stocks, the capital goods stocks, or let's say the industrial stocks on which we had broker upgrades this morning, both are doing really well. Thermax, where a Kotak upgrade came in, is up about 3%. And L&T, where Goldman Sachs thinks that 5,000 is possible. The target price on L&T is 5,000. That's the top index winner now. 2 to 2.2% up on L&T as well. So on industrials, Manishi, what's your view? Do you own anything here? Because again, one point of debate here is that as the government's fiscal condition perhaps starts tightening up, and we've seen some dip in the GST collections as well, maybe we may not get that big booster, year-end capex spending, government spending. So just your thoughts on the industrial side of the market now and whether you'd buy anything?
Right. No, that's a good point. In fact, I sort of, forgot about it. We do have presence in industrials. I mean, there's 2 stocks that we have in our Asian model portfolio, Larsen & Toubro and Adani Ports and SEZ. The latter could also be a beneficiary if the trade deal goes through and the trade volumes pick up and so on. So broadly on industrials, I mean, we like the space because the government's focus on creation of infrastructure, we think is likely to continue, even though we have had a short-term pivot this year in terms of supporting consumption. Second, this whole infrastructure build-out theme is not really local, but it's also global. We think that much of that global boom in infrastructure creation would have a rub-off in terms of the stocks that you mentioned, particularly the large, broad spectrum infrastructure builders. At some stage, we would also be positive on the defense stocks, because we think that Asian defense is an important theme that will have to be played in addition to European and US defense stocks. This geopolitical tensions and defense spending is likely to be a theme that'll be with us for the foreseeable time horizon.
Manishi, great chatting with you. Thank you very much for joining in. And I hope we get one more conversation in before the year closes out. Thank you once again.
Thank you very much.
Moving on now to Thermax. That's buzzing in trade after the Kotak institutional upgrade. Vinny is here to tell us why they like Thermax a little bit more now.
Hi, good morning. So yes, an upgrade that's coming from Kotak Institutional Equities on Thermax. Upgrade to a buy from a previous ad rating. Target price is at 3,575 rupees. Now, when you look at Thermax as a stock, also in the last 6 months, it was down almost 20%. So there was a correction in the stock price and in terms of valuation versus its peers. When you look at what is coming in for the company in terms of order inflows, that has started improving. And that is what even Kotak is highlighting, that the company seems to be poised for growth and improvement in terms of margins from here on. They're saying that the portfolio will start benefiting from scale up in the existing business. Do not forget that the company has been, cutting down on those lumpy orders and only looking at good orders. So the order book has started improving, and that will lead to improvement in terms of margins for the company going forward due to the reduction in troubled orders. Also, rebound and underutilized chemical business and positive mix over there in terms of the product segment is a good positive for Thermax, and that is why the stock is buzzing in trade, and Kotak has upgraded the stock as well.
Okay, all right, got that. Thank you, Vinny. So, both of those stocks continue to be in focus. Let's move on now to our first management interaction of the day. NLC India is a company on our radar. The stock has not done too much in the last 1 year. It's been down about 6-7%. But the company recently declared commercial operation of its power plant at Ghatampur. And this is a pretty important plant for NLC India. Mr. Prasanna Kumar Mottapalli, Chairman and Managing Director of NLC India, is with us. Mr. Mottapalli, thank you so much for joining in. Good to have you. I know in the last 1 year, we've been discussing the timelines for Ghatampur quite often. So this is what we really want to understand. The plans now, as the unit has been commissioned, how does it ramp up? Then we want to look at your 2030 targets as well, whether there are any changes. And of course, renewable energy, what's happening with that side of the business and whether you're looking at coming to the market for a listing anytime soon. So let's start with the Ghatampur Unit 2 first. So just give us an idea. It's been commissioned. When does the full ramp up happen? What is the revenue contribution? In the past, I think you've given a guidance of about 8,450 crores top line contribution. But I'm guessing that's when the whole plant is up and running. If you could just walk us through the numbers now.
Good morning, madam. As you rightly said, our Ghatampur unit number 2 declared commercial operation on 9th December. And immediately on that day itself, it reached its full capacity of 660 megawatt. The unit is operating at full capacity since then, more than 660 megawatt. So as on date, both the units of Ghatampur are operating at full capacity of more than 660 megawatt. And we are planning all the activities for unit number 3 are also in fast track mode. And we are expecting that in the current financial year, we will be declaring the commercial operation of the entire station. And coming to the contribution in the unit number 1, during its operation, it contributed more than 2,600 crores. So as you rightly said, that 8,000 crores figures was for the entire station. So proportionately around 5,500 to 6,000 crores top line addition will be there with the Ghatampur.
So this year, just to clarify the numbers again, full year whole station contribution is going to be 8,450, and this year you're saying that even Unit 3 will be commissioned in all probability in FY26 itself. So what will be the revenue that will accrue because of Ghatampur this year?
Approximately around 4,000 to 4,500 crores, because the unit number 3 will be in the last quarter of the financial year. So it will be around 4,000 to 4,500 crores.
So then what is the 5,500 to 6,000 crore number that you shared with us? What was that?
Pardon, madam?
Just 2 minutes back, you also shared a number of 5,500 to 6,000 crore.
No, madam. Actually, total 3 units running at the 8,000 crores.
Okay. And this year it will be 4,500 to 5,000.
Exactly, madam.
Got that. So in H1, we've seen lower lignite production. I think in Q2 itself, your production was down 8%. What is the expectation in Q3, Q4? Is there any number you can share with us? And there were some land issues also.
Madam, the lignite production reduction in the H1 of this current financial year, that is mainly attributed to less power demand. because lignite is we cannot transport it for longer distances. So whatever is the requirement, the production is done, and there is no reduction in the lignite production because of the land issues. Land issues, the majority of the land issues have been sorted out, and none of our mines are getting affected because of the land as on date. And further land acquisition activities are also in fast progress with support from state government and central government. So there will not be any issue because of the land non-availability in the lignite production.
Okay. And what will be the total lignite production for FY26?
Our target for FY26 is 25 million metric ton, and we are hopeful that we will be reaching that figure this financial year.
Okay. So let's talk renewable energy. Can you just tell us how the whole renewable energy plan is shaping up? What are your, your targets for this year? Capacity addition next year? How much more capex are you going to put to work? And then the big question, when are you looking at a listing?
Madam, as you rightly said, NLC is a leader in renewables, and we were the first company in the country to add 1 gigawatt renewable capacity. So taking that forward, we want to increase this 1.4 gigawatt to 10 gigawatt by 2030. That was our target. And in the current financial year itself, already we added 160 megawatt, 150 megawatt in Barsingsar, Rajasthan, and 10 megawatt in Tamil Nadu. So this year we are expecting addition of around 600 megawatt. By March 31st, we will be adding around 600 megawatt. And many projects are in pipeline, like 600 megawatt Khavda renewable project is in fast progress, and 810 megawatt Pugal solar park work is also fast progress.
Sir, just to understand, you said that your original plan was 10 gigawatts by 2030, right? Now we have 4 years left. 25 is over.
We will be adding more than that, because already the projects in pipeline already they are crossing 8 gigawatt. So we are hopeful that we will be doing much more than 10 gigawatt by 2030.
So there's no slowdown then. Yeah, so got it. So there's no slowdown in terms of your plans there. So then what about the listing? When will you bring this entity to the market?
Madam, all activities for the listing are in fast progress. And as you know, the cabinet approval also we got 2 months back. And all activities are in fast progress, and we are hopeful in the H1 or latest by Q3 of the next financial year, we will be coming up with to the market.
Okay, we'll leave the conversation here. Thank you very much for joining in. There's work coming in from NLC India. I think lots of numbers he shared. 10 gigawatt of renewable capacity by FY23.
By 2030.
Sorry, by 2030. Hopeful of an IPO for the renewable business by H1 of next year. If not H1, then at least Q3 for lignite production, 25 million tons. And even for the Ghatampur thermal power plant, this year contribution at 4,500. And next year, once all 3 units begin commercial operations, then the revenue contribution should be closer to, I think, 8,000 crore rupees. So that's the work coming in from NLC India. We will slip into a break. The Nifty is up close to about 0.5%, above the 26,000 mark. Midcaps are moving up. Now you're seeing a little bit of the optimism. The start was a bit quiet, a positive, but now some gains are being built on. Rupee continues to trade at pretty much record low levels, 90.47. Get into a break. On the other side, we'll invite Nimesh Shah of ICICI Prudential AMC. He will join in to talk about the IPO that opens today. Stay tuned.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Okay. All right. Let's talk about ICICI Pru AMC. It opens today. The company is looking to raise 10,600 crore rupees. It's an entire offer for sale where Prudential, which has a 49% holding in the company, will bring down their holding by 10%. ICICI Bank holds a 51%. They're not selling any stake. This is a pure offer for sale. But just some stats. Now, this, while in overall AUM terms, it's India's second largest AMC. In terms of actively managed, it is the largest. That's one. Secondly, and its market share stands at 13.3% in terms of actively managed. Secondly, it's got a very high equity skew versus the others. So the equity AUM mix is about 55%, 56% of the overall. Third, it is the most profitable AMC amongst the ones which are listed. So the operating profit before tax market share for the company stands at 20% as of FY25, higher than an SBI, which is at 16.8%, or an HDFC AMC, which is at 16.8% also. Fourthly, the revenue, EBITDA and profits have grown at a CAGR of 32% over FY23 to FY25, and the implied market cap is also competitively priced to say an HDFC AMC. ICICI Pru comes at 1.07 lakh, while HDFC's market cap, AMC's market cap is at 1.13, 1.14 lakh crore. Just some risks. The big one is the regulatory overhang because of the recent SEBI consultation paper, which is looking to reduce the caps on the total expense ratio. Will that hurt the overall margins, increase the operating costs? That's one. Two, competition. So many discount brokers are coming out with their own AMC. Jio BlackRock is scaling up. And third, the cyclicality of the equity business. So that's just a quick, roundup of and some key numbers about ICICI Pru AMC. And we have with us Nimesh Shah, MD and CEO of the company, joining in. Thank you very much, Nimesh, for joining in. Just want to start first with the risk. That's the regulatory, because we know we've all been witness to the strength of the AMC business, the financialization of saving, increasing, rising retail participation. But the risk and the overhang right now is that SEBI consultation paper on capping the total expense ratio. So first, for those who don't know about it, can you briefly explain what is SEBI, what is SEBI saying about TER, what they want to do, intend to do? And two, what, according to you, will be the impact? What is your expense ratio? How much will that come down, compress your margins and profitability?
Before going into that, let me say that I and Survi would have discussed this since last 15 years.
I think so.
What is the
Every
risk?
consultation paper we sit.
I think the brilliant thing that SEBI has, I think this industry has been regulated brilliantly by SEBI all these years. And the best thing part of this is that our expenses have always been controlled. Right? So if my BIPs are going down, over the years my BIPs have gone down. If what I charge to the fund, but what is going down, what I am charging to the fund goes down. As I charge lesser and lesser, as my AUM grows, I charge lesser. That is anyway there. And as I charge lesser, my product becomes better and better for the final investor. So as margins go down, as seen in this industry, look at the last 10 years. As the margins go down, the volumes go up so much that profit only goes up. So I am the one to say that this is the best thing to happen to this industry, that regulator has converted it into a very pure product, which is good for the final investor. We can have a debate whether the margins for us are good or not, what you are asking me, but there is no debate that this is a very good product for the final investor.
Of course.
But having said that, Nimesh, having said that, and your point is completely taken, and I think the whole industry probably echoes that view, that every time some of the other regulation has come in, eventually it's grown the market. So ultimately it's been good for the business. But having said that, if we talk about, the operating profit, so we talk about the yield, and yours is the best in class, no doubt about that. Looking at operating profit before taxes of, over 3,000 crores. Is this a peak? Does it necessarily go down from here because of A, regulation, and B, competition, and huge competition from passives? I mean, you have the likes of BlackRock coming in, Jio BlackRock, trying to change
many
the game
questions.
here.
Let's do one by one. So first, the elephant in the room. It's not that big a deal as it is made out to be. SEBI has come up with something which is, first thing, it is not affecting even the bigger AMCs so much, right? It is not that. And second thing, we are discussing with SEBI, right? SEBI has said it's a consultation, come and talk to us. As MFI, we are talking to SEBI The idea is to rationalize some of the charges, right? I don't think, even if there is an impact, I don't think it is that major in my mind, right? I don't think, when SEBI has been very constructive always, and this time also, the idea is to rationalize things, and I think they will be rationalized. I never get worried, as you know, over the years we have discussed, I've never got worried about all this happening. Right, some impact it will happen. We know how to manage our business. We have done it earlier also. So I don't think that is a major impact. Second thing, competition.
The competition part of it, yeah.
Competition is very good, right? Last so many years, the number of mutual funds have only increased. But look at the top 3 mutual funds. Their market share is more or less. As long as in this industry, SEBI has created a product that as long as you are doing well for the customer, your people will give you money, right? It's a very simple business. Manage money conservatively. If you manage money conservatively and people have a good experience with you, whole thing is, we have always seen, and whether you do it by native intelligence or artificial intelligence, if you manage money well and somebody has made money of you, there will be, my guys did a lot of analytics and came to that if a customer has made money out of you, he will invest further. They're identifying those. But that was natural intelligence also told me the same thing.
Now it's been AI.
Now it is AI-driven new wisdom, which was always there. Yeah. That if a customer makes money out of you, then money naturally flows into those funds only. You have been seeing those funds which were 2,000 and 3,000 crores are now 75,000 crores, right? Because they have done, if you give more than 20% return over 20 years, will the fund not become 75,000 crores in size? And you said, is it the top of this one? We could have said the same thing even 5 years back, 3 years back. I believe there is an infinite market. The young person has started coming into capital markets first. So from traditional products, even if you look at the bank deposit number, it is 230 lakh crores. Why are we getting excited that it has become 80 lakh crores today, mutual funds? Right? We are only 1/3 of the banking industry today. And our products are reasonably good for the final investor. He has had a good experience with us.
Yeah. Nimesh, allow me to come in. Morning and congratulations on coming to the market. So just a couple of questions here. And my question largely is, look, I mean, it's a fantastic business. I was saying this, I mean, the non-linearity is just, I mean, with the same number of people, you can manage, a small amount, large amount, very, very large amounts. So, I mean, the unit economics are absolutely fantastic. Very few other businesses like that. So that absolutely works.
We have to invest more as we grow in size.
Yeah,
but 15 fund managers today. I had 3 fund managers some time back. So we over-invest on the investment side.
Are you really saying that 3 to 15, I mean, the cost
over the last 10? Yeah, cost will increase.
No.
Investment side.
No, my point is that, in a regular manufacturing business, I mean, to increase output, you got to put up a manufacturing plant. You went from 3 to 15. I'm just saying the non-linearity is still amazing. Yeah. I mean, the unit economics in that sense. My question is very simple. It kind of points to what Surabhi said, which is, where are we at in terms of, because the opportunity set seems to be very large, long runway of growth. But say, and I picked this data out, when this is the week where we completed 26 years at CNBC TV18. In 2011-12, mutual fund share in household savings was 0.9%. It stands at 6% right now. Where can it? That's the bigger, broader kind of tailwind here. I mean, what's your sense?
See, I'll talk about the industry level. I only look at all this macroeconomics. I don't look at the GDP to our AUM or anything. I look at one number. How much money is there in the banks today? 230 lakh crores is this. If we are in the business of capital markets, slowly the depositor over the years, a depositor of 10 years back is becoming an investor today. We had 1 crore investors when we launched mutual fund Sahi Hai. Today we have got 5.5 crore investors. Those investors will gain in wealth. So I was talking to one of the FIIs that he was following up with big time with me on investing with the company. And I asked him, well, how do you look at this industry? He said, it's very simple. If you look at the numbers, 9 to 9.5% you will grow only because of your SIP and STP book, right? So that is this one. We are sitting on 6.5 lakh crores of equity. There is a mark-to-market growth also.
I think I know which investor you're talking about. Okay, fair enough.
So 9 plus 9, I'm saying even if the country gives 9 to 10% return on a nominal growth of 9 to 10%, what is the return that will come into the markets? So you get the beta of the market, you get the alpha of the market. So that is...
we agree with you. I mean, I'm not saying that. I think it's one of the few businesses which has this earnings growth. But is there any way to think about the... Look, I mean, in India, there are 14 crore demat accounts. I mean, just trying to look at the data in another way, right? 14 crore demat accounts, unique accounts, working population of, say, 50-55 crores. I'm not talking about existing savings going into, increasing the share of household savings into mutual funds. I mean, it's X, it can go to Y. I'm saying purely, are we here in India at a peak in terms of penetration, in terms of the share of savings can increase into mutual funds? That may happen, but just in terms of penetration levels, are we there?
The number of, intuitively, the number of investors who have gone direct and who are making losses, right? Half of them may go away from the capital markets completely and the other half may come to us. I don't know what will happen, but I always tell my securities people that good, you're doing KYC for us. They are losing money doing direct stocks. They might come to us.
But
I don't know.
So the other, and I know we're grilling you on every possible, black swan event or scenario or risk factor. But the share of active, the whole active versus passive debate, and one of the reasons behind your stellar profitability is that you have the largest, active AUM in the country.
Correct.
But now as the market evolves, investors mature and deep-pocketed players, which are passive first players, now whether it is Zerodha, whether it is Jio BlackRock, when they come in and make a big splash, is that going to, create more challenges in terms of retaining profitability at levels where it is today?
All what I said on growth cannot work if we don't perform well. There is a risk. If you ask me what is the risk in this business, I see one clear risk in this business. No amount of sales and distribution can sell a product which is not working well for the customer.
Correct.
So unless we generate alpha, unless we generate more than the benchmark, we can't sell. Right? It won't sell because then people should buy passive. No, if I am being paid fees to beat the benchmark. So unless I beat the benchmark, I cannot get money. Then otherwise ETFs will grow. So the way we have structured,
which is what we've seen in the West. I mean, that's the way, say,
in the West there are two issues. There are two issues. One is that the fund managers are not beating index to a great. Some of the fund managers are not beating index. 90% of our AUM over a 3-year basis has beaten the index right now. So one is, and second is, if you invest in ETFs, there is a taxation advantage versus mutual funds. That is not there in India. So these are the two reasons. If I don't beat benchmark, why should I get money in active funds?
Absolutely.
We should only go, and CNBC will itself tell its customers, please invest in passive because active is not generating alpha. So I cannot, so that is the risk in this business. If you ask me what is the risk on all these big numbers, is performance. So if the fund performance is not there, that is a risk.
Okay.
That you can't run away from that risk. That risk
Agreed.
is, and then passives will become bigger.
Then they'll take
Today, on the retail side, passive is not as big.
Yes.
On the retail side. If you see here last year, if 100 rupees came in active, 6.25 rupees came in passive. In the retail side, not in the Insti. Insti, the pension money comes in passives.
Absolutely.
Otherwise, the retail money today is relatively
largely inactive.
Because we are performing. Mutual funds as an industry is performing. If we don't perform, passive will become bigger. I completely agree.
No, the golden rule is always money chases returns. But just some numbers. I think your revenue yield is about 52 basis points, which is higher than that of HDFC AMC, which is at 45 basis points. But the profit yield, I believe, for both of you is similar. So can you explain on the nature of expenses which drives this compression from revenue to profits vis-a-vis HDFC AMC?
Actually, we always look at one figure, number is operating profit, because there are various businesses. This is an outcome. Only when the analyst told me, I realized this is 52 bips, 37 bips, because we look at each business is different. There is a liquid fund business where mainly there are institutions investing. There is a debt fund. So debt fund, there is equity funds, there is alternates. All the 52 bips you see is a summation of all these different businesses. There, one only addresses institutions. One is a retail business. Equity is a retail business where debt is more or less institutional business. And the bips are very different. So if the equity markets grow, then suddenly my bips will look better because my mix has been improved. So we don't know what will happen on that side. But I know vis-a-vis competition or vis-a-vis other players in the industry, maybe my cost is higher, but my revenue is much higher. Right? So when you are doing alternate business, the alternate business is at a higher cost income ratio than the mutual fund business, right? Because we are investing also in that business. Not only in the mutual fund, the way we are structured as a company, there is a mutual fund business where is a very conservative business where the retired school teacher is my target customer. That's how we look at the mutual fund business.
You know, the alternatives business has grown at over 40% CAGR, right? Could you give us a sense of what this, what will it do for your fees and profitability and as a meaningful profit center?
Yeah. So if you see West, right? Again, in the US, 10% of AUM is in alternates, but 44% of the profitability comes from alternates, right? So alternates, does it have a higher margins? They have a higher margin because you can have profit share also over there, right? If we do better, we may not charge any fee on a PMS or a AIF. We can say zero fees. And if we make money, if the customer makes money, after that we can make money. So there are a lot of permutations possible.
And here you're,
mutual funds is very, there is, BIPs are decided by the regulator fixes everything. On the alternate side, there is a flexibility how we negotiate.
What can it be for you? I mean, you're also in talks with ICICI Ventures to acquire mandates.
That is the third business. Correct. So one is the alternate business right now for me is we have got a substantial PMS business, right? We are one of the largest in the industry as far as individuals are concerned. Then we have got a credit business. We started that business 3 years back. The first fund was 1,600 crores. The second fund was 3,200 crores. And we are raising the third fund. Then I think we are very, very focused on another business, which is the commercial real estate, which is done very well in West. Prudential had done it very well in UK, where they own huge amount of office spaces. What happened in 2020, that when the builders wanted to sell off their A-grade buildings, a lot of American outfits or Canadian outfits went and purchased a lot of buildings in this country. Why can't we do that? So commercial real estate is a good yield business, right? It's a good yield business and meets my risk criteria, right? That there is no construction risk. You take ready-made buildings. So I think it's a very good business, commercial real estate. Maybe later we can do a program only on that. That's that good a business. So alternates is a very important business. Third business is if we get the approvals from SEBI, we have yet not got approval. There is a very good business somewhere in ICICI. There were where we have proposed that we'll take over that. That is private equity.
The ventures, yeah.
ICICI Ventures is into private equity business. They've got a ready-made team over there. I get those funds, I get those teams. But that is yet to get SEBI approval. That's why I'm not talking about.
How large is that? The mark-to-market?
Today, there are a lot of other benefits. And AUM-wise, it's not, it would be some $500 million or something like that. But I think we wanted to, if I want to start a private equity business, I will have to first create teams, etc., which will take 5 years. This straight gets me into the market.
What's the timeline for a potential regulatory approval for this?
I don't know. We have applied to SEBI. As soon as SEBI approves, it can happen.
This is a complete offer for sale. Will Prudential have seller's regret by the end of it?
See, we talk about long-term investment. Yeah. Prudential has invested in this company for 28 years. Yeah. And they are doing a part exit for themselves. Yeah, sure. For 28 years, I guess, is defining all our long-term definitions are cleared in 20 years.
We'll have many more conversations, but it's fantastic to have you in the studios. Good luck with the IPO.
Thank you.
And thank you very much for joining us.
Thank you.
Thank you.
Okay, what we're going to do is take a quick commercial break here. We'll come back, Manisha, with commodities and focus on the other side. Stay tuned. More comes up.
"26 years of CNBC TV18.
Fly Emirates, fly better.
26 years of CNBC TV18.
Welcome back. It's time to talk commodities. We have Manisha Gupta joining in with the latest. Manisha, what do you have your eye on?
Well, metals, and because even as we are heading close to 2025 end, it still is the precious metals, base metals continue to trade very, very strong there. When it is majorly about the treasury yields which have continued to decline. The dollar index is now trading at an 8-week close, is down by 9% for this year. You also have the US Fed now looking to expand balance sheet by $500 billion. And some market participants are reading this as a quantitative easing. Very bullish again for gold and silver there. I'll start with gold and silver both because they're headed for the best annual gain since 1979. So gold prices gained 1.5% in the overnight market, and we are trading above 42.70 at this point in time. 43.81 is an all-time high, still slightly far away from that. But when it comes to silver, it has been a 4% of a gain overnight, and this is trading at an all-time highs of $64.32 an ounce. For the gold prices, it also has to do with the Chinese official gold reserves, which have continued to increase for a 13th straight month for the month of November. And they added around 30,000 ounces, and it holds at a record around 2,305 tons as of now. So Chinese silver buying has just about continued every single month in last 13 months there. Take a look at silver prices then, and we are up by 120% in 2025 till time. Silver is trading at a record highs, not just in US, not just in India, but in various other countries like China, Germany and Australia, and the list perhaps could just go on. The third metal on your screen should be copper prices because they're also trading at a record highs of $11,800 a ton. For copper, we've seen a gain of around 36% in this year till time. And for copper as well, it's trading at an all-time highs in US, in China and the Indian markets also. Well, there are strong growth projections coming in for copper from US. The China stimulus measures perhaps could add some more support to the prices. Also, when you look at the demand and supply concerns, the kind of deficit that copper is looking at is going to be supportive going forward as well. And then there's a very interesting International Energy Agency report which says that in 2024, the demand for refined copper was 27 million tons, which will grow to 33 million tons by the time it's 2035 and 37 million tons in 2050. And the production details perhaps could not be as fast. So that means that copper perhaps could continue to be in deficit for the years to come, clearly supporting those prices. And then you have the other metals like platinum, palladium, which are also trading on a higher side. We've seen palladium prices trade at October highs. Here as well, we've seen prices gain up because of the China auto sales, which is up 3.5% at an 11-month highs for the month of November. Zinc is trading at around 2-month highs, aluminum at a 1-month high. So everything that you say as metals, whether it's precious or base metals, has continued to gain even today in the Asian markets therein.
Thank you, Manisha, for that. On that note, we'll slip into a break. On the other side is our special Indianomics segment. Lata speaks to former SEBI whole-time member Anand Narayan on the cap on mutual funds investing overseas and other issues.
"26 years of CNBC TV18.
You want to talk business? Meet me in the Onboard Lounge.
26 years of CNBC TV18.
The 105-page order issued by SEBI alleging index manipulation by Jane Street, a high-frequency trader, in my opinion, is one of the most thorough investigative reports I have read, and I have been 3 decades in the market. Now, the credit for that report goes to the man who led the investigation, Anant Narayan, former SEBI whole-time member. Anant has other achievements in SEBI in terms of trying to curb Benami holdings of shares via offshore accounts, as well as SEBI's thinking on AIFs, on stock exchanges, clearing corporations, and above all, investor awareness. My guest today is Anant Narayan, former whole-time member of SEBI, and of course, before that, a very seasoned forex trader and thinker. Thank you very much, Anant, for joining us and for being kind enough to come to our studio.
Thank you for having me, Lata.
Well, let me start. Actually, I thought of inviting you because of that Business Standard article that you wrote, where you point out that it is very good that, you know, Indian savers have become investors, come to the stock market, but there are some downsides to this development.
Sure.
Can you tell us what may be the downsides?
So you're absolutely right, Lata. The fact is that the Indian investor is now, really coming towards the capital markets. In fact, as of March 2020, at the time of COVID, we had about 4.2 crore unique investors. That number, SEBI says, has now gone up to 14 crore unique investors. And this is a great trend of actually getting risk savings, patient money coming in and aiding the part of capital formation. Now, that's also translating, by the way, into actual flows coming into the capital market from domestic savers. By the way, while these numbers have grown to 14 crore, the surveys conducted by SEBI show that this trend could actually continue and could reach as high as 25 crores or so over the next few years, as the chairperson of SEBI keeps saying. Now, in terms of flows in FY25, what we saw was across mutual funds, across pension funds, insurance companies, and individuals coming in directly into the capital markets, Indians poured in something like 8.8 lakh crores, which is
FY25 alone.
In FY24-25 alone, which is an equivalent of $100 billion across primary and secondary markets. This, by the way, it was a record and more than twice the previous record. And that trend continues now. So despite about 1.3 lakh crores of FPI outflows during FY24-25, we still had 7.5 lakh crores of net demand for equity across primary and secondary, which, by the way, was an all-time high record, again, 60% higher than the previous high. On the supply side, across IPOs, FPOs, rights issues, QIPs, and offer for sales, we had, again, a record supply of 4.6 lakh crore. Now, for the ecosystem, a record demand for paper and a record supply of paper is the ingredient for capital formation. So it's all great news, right? At the same time, there are a few things to ponder over as we look at this particular trend. Now, there are some structural issues and there are some issues with relation to the investor themselves. So the structural issue, one thing to notice is this gap between the demand for paper and the supply of paper. This has been growing significantly over the last 5 years. So from close to being well matched, it went to 2.4 lakh crores as of FY24 and then rose to a record 2.9 lakh crores in FY25. Now, clearly when you have now, how is this gap being met? It's being met by strategic investors, by owners, by promoters, including foreign owners and promoters, selling in the secondary market, right, and diluting their stake. Now, these are the ingredients of a seller's market. When you have such a large demand context and supply coming in at a price, now that also raises questions about valuation. SEBI would never raise questions about valuation, but it does.
When there is so much of money coming in, share prices are becoming a little unreasonable.
You could argue that...
From an FPI point of view.
Correct. From, ceteris paribus, everything else being equal, this context seems to favor higher valuations, at least in pockets.
Yes.
Now, we are seeing a result of that as far as net FDI and net FPI is concerned. By the way, not only in public markets has this demand grown up dramatically, even if you look at the unlisted space, including through the alternate investment funds of SEBI, regulated by SEBI, in the last 1 year, closing at September 2025, we saw
2.7 lakh crores of additional commitments being made by, probably HNIs, etc., to buy unlisted paper. Most of the AIFs invest in unlisted paper. 66% or so goes into unlisted paper. So across public markets and unlisted markets, the domestic demand has gone up quite dramatically.
Okay.
Now,
let me come to your solution. I mean, I'm rushing you because I want to get to the other meaty question. Your solution is, one of the solutions could be that we must remove this $7 billion cap of mutual funds investing overseas.
Yeah.
That may be a little difficult at a time when rupees are under pressure, but why do you say that?
Look, again, look at the structural implications of this mismatch, right? For one, you could argue that it makes more sense for strategic investors, including foreign investors, to exit right now at good valuations. And we're even seeing MNC names get out at valuations which are much higher than what they get in their own home country, right? Similarly, for fresh investments to come in for FDIs, they might like the name, they might like the story, but they might find the valuations a little too pricey given the demand context.
Yes.
In terms of the investor side, if you look at the assets under management in mutual funds, the equity portion or the risk portion has grown by more than 5 times over the last 6 years.
Oh.
The non-equity side has grown not even by 2 times. So there is a mismatch in terms of the asset allocation across different asset classes. So from both these perspectives, there are 2 solutions that I think one should debate. One is, we as Indian investors, we need more asset classes beyond just equities. We need commodities, we need fixed income, we need hybrids, we need InvITs, REITs, munis, all of that entire bevy, and they should be available at scale in a tax-friendly manner as a choice for asset allocation. Yes. Given there is so much of risk savings coming, we need better asset allocation for better investment outcomes. From a external perspective, you might think that restricting money from going outside is actually good for a balance of payments. I would argue that could be actually a perverse outcome here, where by restricting money from going outside, you're actually making it difficult for capital flows to come in. And as many people have pointed out, including yourself, right now the problem seems to be net capital inflows. So in a funny way, it's just as you have in the case of the trade account.
Yeah.
When you try and put trade controls, import controls, you think you're doing a favor for the trade deficit. Actually, you end up making your trade exports non-competitive and therefore lower, right? In a funny way, this could be playing out in the capital sense as well. By restricting folks from going outside, you're making your markets inefficient. You're giving wrong price signals to companies who don't have to take very high risk and do investments to get the right valuations. And on top of it, you're actually restricting capital inflow. So now, to your point, I think, yes, we've got to allow for more asset classes. We also have to, in a graded manner, nobody's suggesting do a big bang thing tomorrow. In a graded manner, allow Indians to invest overseas and diversify their portfolio. I think the mutual fund route makes the most sense for the simple reason that when you and I invest through a mutual fund, our units remain in the country in rupees. When we eventually redeem, the money has to come back to India. If we go through an LRS, that money is probably lost forever. It will go out of the country and it will go out forever. Similarly, for an average Indian, the LRS route is not user-friendly. There is a TCS involved. There is an opening an account in an overseas jurisdiction who might not pay attention to you because you're too small. Given all of these, I think increasing the mutual fund limit, allowing our good fund managers to do the asset allocation on our behalf and move some money outside, maybe $1 billion every month over the next 12 months or so, might be a good way to let off some steam. At worst, it will mean a part of RBI's reserves come into household balance sheets as external assets in the form of equities or some other mix. At best, I think it could net result in capital flows coming back into the country as the markets become a lot more efficient and is perceived to be a lot more efficient.
Fair point. I mean, I hope, this argument washes with all the regulators. Clearly, the mutual funds will be happy. But, my viewers will want to ask you this question. After your Jane Street investigation, did you see any difference in the way high-frequency traders behave? Did you see a reduction in, market-leading behavior?
So, Lata, 2 quick points on your preamble as well. One is whatever speaking orders come out from SEBI, they're a SEBI work. They're not a work of a particular individual. Second, I really don't want to comment about any specific enforcement action. SEBI never does that. I have certainly not done that. And the matter is sub judice anyway. So I really don't want to speak about that particular case.
Okay. Let me come to another issue which in which you may be at least involved as a member. The restrictions on derivatives. I mean, clearly it was for all to see, the weekly expiries. Do you think more controls are needed?
The first thing I would like to reiterate, and I think the chairman of SEBI has done this on multiple occasions as well, nothing will happen without adequate data being put out, without adequate debate happening, and without adequate consultation happening. So rest assured, every time we see markets going through some palpitations of rumors of something coming up today, tomorrow, that ain't happening. So just to, get the perspective right, the first set of consultation papers were put out in July of last year, 2024. The first circular came out in October 2024 after significant consultation and after many changes from the original draft. Similarly, the second consultation paper came out in February of this year, and the circular came out in May of this year after significant consultation and tweaks. Now, to again recap what the issue was, and we've said this at multiple occasions, there were three issues that we were grappling with as SEBI. First is, of course, the extraordinary amount of losses that small investors seem to be facing, particularly on index options on expiry day, 93%, and that to over 1 lakh crores of total net losses and so on and so forth. That is a clear area of concern. And the concern and the debate has always been, should you have some suitability appropriateness filters to actually ensure that only those who are aware come into these markets, right? The second part, which we've pointed out again, is a structural issue. Now, we've noticed that on expiry day, the cash equivalent amount of volumes that get traded in index options is sometimes 700, 800 times the volumes being traded in the underlying cash market of the constituents. Now, this is almost like the LIBOR issue, Lata, where your benchmark is being set in relatively illiquid markets compared to the derivative markets. And therefore, the chances of the cash tail wagging the derivative tail is very, very high. And that obviously raises questions about the need for greater supervision, surveillance, and maybe some regulatory measures as well. So that's an issue that we are grappling, or we have been grappling with. The third issue is that, literature tells us that a healthy derivative ecosystem is one where a majority of the contracts are beyond 1 month. Long-term investors or even speculators do the best when they have a lot of long-term contracts available. In India, we've noticed that most of the contracts mature over the next 1 week, let alone beyond 1 month. So getting the term structure of derivatives right is again something that we've tried to grapple. Now, against all of this, two things that we will keep in mind, and I'm sure when I say we, I mean SEBI. Now, I can't speak for SEBI anymore, but nevertheless, I'm sure SEBI will keep this in mind. One is we've taken a significant number of steps, whether it is the October circular, the May circular, and so on and so forth. So what is the impact of all that on volumes is something that SEBI, I'm sure, will look at, and they will put it out in the public domain, and that can then answer your question about whether more steps need to be taken for these three objectives, right? The second thing that we can't lose sight of, many market intermediaries and market infrastructure institutions, depend upon derivatives for revenues. Now, that's a real politic. That's something you cannot ignore. And if you do something dramatic in terms of trying to, reduce the volumes in the market dramatically, with the best of intent, you could have unintended consequences in the entire marketplace because you're simply upsetting the apple cart of the entire ecosystem. So whatever has to be done in a very thoughtful manner. I have no doubt that SEBI will continue to be extremely thoughtful in whatever it does. It will be consultative. Nothing will be taken in a precipitate manner.
"26 years of CNBC TV18. 26 years of CNBC TV18.
You're watching us here on Chartbusters. We're live to you from CNBC TV18 Motilal Oswal studio. But let's talk about L&T. That stock's among the top gainers today as Goldman Sachs has upgraded the stock to buy, raised the target price to 5,000 rupees.
Okay, moving on to the next stock that is there, Hindustan Zinc, that rallied. The rally continues for the stock. It's up 3% in today's trading session as silver continues to hit record highs. Zinc prices too have rallied to a 2-month high.
Vedanta too contributes to the rally in metal counters. The stock is up nearly 2% after it won the bid to mine nickel, chromium and platinum group elements at the Injana block.
Another capital goods player, Thermax, is buzzing after Kotak upgraded the stock to a buy from a previous ad rating earlier, expecting strong growth and margin expansion are the key drivers. The brokerage has set a target of 3,575 rupees on the stock.
Good morning, you're watching us here on Chartbusters. We come to you live from the CNBC TV18 Motilal Oswal studio. I'm Mangalam Malu, with me Vinny Motiwala. As you can see at the bottom of your screen, the market's doing fairly well. The Nifty briefly crossed that 26,000 mark, but maybe some sort of supply around that 20-day moving average from the lows. It's seen a rally of nearly 250 points, so that's good for the bulls. The question is where we go from here towards the end of the week.
Absolutely. Hi, Mangalam. Good morning. Yes, an interesting day, 26,000. I just want to keep an eye out on that, right? Because I think that's a mark everyone watches out for as well. So we'll watch out for what happens there. We're off the day's highest point as of now. Let's look at the advance decline ratio, though. Advance decline ratio today is in the favor of advances versus decline. So that is interesting in the day as well. And overall today, Nifty IT, that's not managing to hold on to great gains. It's down almost 0.2% as of now in the trading session. Broader end of the market, that's managing to hold on to decent gains. The Nifty Midcap is up 0.5% in today's trading session. Small cap also is managing to hold on to gains of almost 0.7%. That's what we'll be keeping an eye on. A lot of individual movers as well. And metals, Nifty Metal, that's the top sectoral gainer, so we continue to watch out for that one as well. But let's welcome on board Saumil Mehta of Mirai Asset Share Khan as well to give us a check on the markets on the technical front. Saumil, good morning. And today also we're not managing to hold on to 26,000. What are the levels that now we are keeping an eye on for the Nifty as well as the Nifty Bank?
Good morning, Vinny. Good morning to everyone. Absolutely positive on the markets. Medium term still remains positive. However, in the very short term, we've seen an ABC corrective in the last couple of weeks. We have taken support around the lower end of the Bollinger Band on the daily charts. We have also taken support around 40 daily moving average, 50 daily moving average, and we have bounced back. That's a very good sign from here. I think the most important level to watch out now is 25,800, 25,820, which is the 40 daily moving average. And my strategy would be to buy on declines. From here, my targets would be the all-time highs, that is 26,325. And above that, I'll be expecting 26,800, 900 levels in the medium-term outlook. Very specifically on the Bank Nifty, I'm expecting our outperformance here to continue. A small triangle pattern is being forming here, and I'll be expecting this to break on the upside. Crucial support, 58,800. That will be the first support, and the second support, which is 40 daily moving average. Very crucial in the medium term outlook, which is 58,480. So these are the two levels I'm looking out for, but my targets on the upside would be 60,100 and above that 60,400.
All right. So that's about your indices. Stocks that you like, Saumil, this morning, what are they?
Two stocks, one from the bank side and the second one is from the auto side. RBL Bank is looking great to me. A flag pattern has been formed and it's already broken on the upside. Taken support at 40 daily moving average. Great setup for a short-term trade. In fact, even medium-term trade. Stop loss would be 301. Target would be 335. The second stocks which I've chosen is Ashok Leyland. Already in the uptrend. I think this will continue in the medium term, in the short term both. A small consolidation has broken on the upside. momentum indicators has given a fresh buy signal. So here the stop loss would be 157 and target would be 170.
Okay, thanks for that. We'll surely keep an eye out on those individual stock names as well. And Saumil, thanks so much for joining us this morning. But let's shift focus now to a special segment where we will get you a few ideas for profit from Money Control Pro. Jitendra Gupta of moneycontrol.com joins us now to talk about the stock that he's tracking closely. Jitendra?
Hi, thanks. Engineers India is heading into the second half of FY26 with record momentum. The company is sitting on highest order book supported by strong domestic refinery capex and growing traction in overseas consultancy projects. Management has even raised its full year growth outlook and it signals confidence in execution and the broader capex cycle. Year till date, if you look at Engineers India has booked close to 4,000 crore of orders and it expects to close FY26 at about 8,000 crore. Moreover, the pipeline remains strong with IOCL, Paradip expansion and Andhra refinery projects. Of course, several petrochemicals and specialty chemicals assignments are expected to move into execution over the next few quarters. Sector capex and private petrochem investments could open up opportunities. New areas like biorefineries, hydrogen, coal gasification could be another exciting opportunity. It has order book of close to 13,000 crore. Which is 4.3 times its annual revenue, provides strong revenue visibility. Execution has been strong. If you look at revenue in the first half, grew almost 37% on a year-on-year basis. Management has raised its FY26 guidance to close to 25%. Overall, at current levels, the stock trades at around 18 times FY27 estimated earnings with close to 1,000 crore of cash and 2.5% dividend yield. Valuations looks reasonable.
All right, meanwhile, just keep an eye out on a couple of these FMCG names as we're watching out for, names like Dabur, HUL. The ticker team's alerting us. We're at the lower end of that range. And also at the same time, we are seeing some traction in a couple of these mid-cap IT names. So we have Birlasoft, which has moved higher. Alongside that, Emphasis too has recovered from the lows. Take a short break, come back. On the other side, we have a lot of the market and stock-specific action.
"26 years of CNBC TV18.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
26 years of CNBC TV18.
Well, the stock of the moment is Eternal. For the last few trading sessions, it's been doing well. On Monday, it saw a bit of a decline on the day, Swiggy announced its QIP, and there were comments coming in from the quick commerce head of the company as well, saying that maybe we are near a bubble territory for quick commerce. But since then, after that decline, the stock's actually seen a good enough recovery. Yesterday was higher, the previous day was higher as well, and today as well at the high point. And let's see if Swiggy is also following suit or not. Swiggy this morning was up by around 2%. They saw strong subscription to their QIP and ended higher yesterday as well. Right now, as we speak, Swiggy too has spiked up 5% right now, 420 on that stock. But we now have the management of Escorts Kubota joining in, Bharat Madan, who's obviously the whole-time director and CFO. Thanks a lot, sir, for joining in. You made several announcements on the product front over the last few days, targeting the construction segment using Kubota technology. Could you tell us in detail about those launches?
Yeah, so I think the ISKCON in Bangalore, we have showcased 4 products. So the commercial launches happened for the mini excavator, which is 2.2 ton category. So this was one of the segment where we were absent. So we had higher and the lower HP category, tonnage category in the mini excavator. So this is a mid segment, which we have introduced now. So this will help us in bridging the gap in the product portfolio. So as you may know, so in mini excavator, we are already the market leader in India with about 26% market share. And this is one segment which is growing in India gradually, and we're seeing the shift is happening gradually from backhoe loader to the mini excavator because of the advantages which the product category enjoys. So we feel, I think going forward, the market will continue to grow, and this is one area which we feel we can really, maintain our leadership position, because Voda is a global leader in the mini excavator category, and they got a $3 billion revenue line, which is coming only from this particular product category. So this is one, I think, area where we want to focus on. The rest of the 3 products, as you mentioned, I think both on the backhoe loader side, which is again is a concept proto model which we introduced, which will be coming with a Kubota engine. So Kubota is again a global leader in the suppliers to the industrial OEMs, and the engine is one of the key features, which Kubota enjoys, and most of the industrial OEMs globally are using Kubota engine. So we intend to introduce Kubota engine in the backhoe loader, which we have introduced in the last exhibition in construction equipment space. So this one is coming with the Kubota engine. So earlier we were using our own engine, the Escorts engine, and now it will be coming with the Kubota engine. And this product is being launched under Kubota brand name. So Kubota will carry its own brand name on this product. The other 2 categories in the pick and carry crane segment. So as you mentioned, there's a 72 feet high boom, which is essentially for the application where you need a longer length for the boom, which will obviously get introduced. And then there's a Hydra 15, which will be essentially used in the pick and carry segment. So these 4 products, which are going to be compliant with the new emission norm regulation, are being showcased today, I think, in the Bangalore exhibition.
Right, sir. So mini excavators is where, you all have a big market share as well, 26%. But you all are also focusing on that construction segment. The increase in terms of focus, that's increased. But contribution, that's seen a sharp fall this year. It's down to almost 10% in the first half of FY26. Do you see this increasing going forward, or will it remain around these levels? What could we expect here?
Last year, construction segment was about 17-18%, and we believe, I think this year, obviously, the industry is a bit down in terms of volumes, but I think the pace will start picking up, we expect from next quarter. And I think it will continue to be in this range because both segments are growing. I think the AD segment has grown well this year, while construction was a bit subdued, but we think the ratio will be in the same range. It will be roughly 80-20 sort of, ratio, which will remain between the agri business and the construction equipment business.
Right. And what about the volumes in the construction segment? That too dipped by more than 20%, right? Are you seeing any improvement there? What would be your year-end target on that segment?
So next quarter normally is a good quarter. March quarter is typically a very good quarter for the construction equipment segment. And also because the reason with the public spending is high because the budgets are going to lapse in March. So the spending from the government side, we see normally a big push-up happens in the last few months. So we expect March quarter should be a good quarter, but we don't expect it will really be able to neutralize the degrowth which you've seen in the first 7-8 months. So that really will be a issue this year. But next year we expect the industry should revive back and go back to the level, I think, what we've seen in FY25.
So, sir, considering the improvement that you are expecting in volumes in Q4 and in FY27, what's the volume growth target that we could expect in FY27?
So which means the number, if we look at this FY26, if in the first 8 months we're in 20-21% sort of degrowth, on a full year basis, we expect that degrowth may come down to maybe 4 to 15% level. So FY27 means that this degrowth will again get neutralized. So we'll go back to FY25 levels, which will be roughly, I think, about 6,500 to 7,000 sort of equipment what we sold in that year.
What about the tractor segments? The growth continues to be healthy. In November, total sales were up, 18%. Domestic was up 16%. April to November as well, we're looking at domestic sales up 11%. Can we expect the FY26 growth to be on the back of all of this more than 15%?
I think we have already indicated in our last call with the investors too that we expect now the industry to grow in double digit. And this indication was to have the lower double digit sort of growth rate. Though I think looking at the last few months, the growth rate has been quite good. The buying October, which was already a very high base of last year, I think September and November both had seen 30% plus growth now in the industry. And I think there are like 2-3 reasons which obviously have been playing. One is obviously the good rural sentiment because of the good monsoon, and then your GST got happened, and then there's a good subsidy program which has been introduced now in a state like Maharashtra, which is doing very well, and that subsidy program will continue till end of March. So we expect, I think, these next 3-4 months also will show a very good growth rate. So we can expect the industry maybe in the range of mid double digit, 15% can also happen, 15 to 18% growth can also happen.
So, certain reports suggest that unseasonal rain and the depressed kharif crop prices are weighing heavily on the farm incomes and sentiment too. Now, anything you have heard from channel checks, what should we keep an eye out on now?
So not in our strongest state other than Rajasthan, where we saw the impact was there because of the extended rain. So maybe half of the Rajasthan was impacted. But in other states like Punjab or Uttarakhand or even in Tamil Nadu now, we're seeing the extended rain and this impact of this cyclone. So that's not really much because we're not very stronger player in these markets. So Rajasthan was a bit of impact, I think, which we saw because of the extended rain. But having said that, in the Rabi season, we don't expect that impact should be there. So we expect the Rabi season should be very strong. And that's a season which is a good season for our market where we have stronger market share. So we expect in the northern and central Indian belt, where the Rabi season is strong, after this good monsoon and extended rain, the season actually should do very well.
Right. There were some reports of the management looking to delist Escorts Kubota. Is there any truth to that?
No, I think they're all rumors. So there's no such plan, no such discussion happening anywhere. So that much I can assure you.
All right, that's good clarification that's coming in, that, all the delisting news pieces are nothing but rumors. So good to have that clarity. Thank you so much, Mr. Madan, for joining in and giving us your, business performance, the outlook, and at the same time, quelling all the rumors around delisting too. We'll slip into a short break, come back on the other side, more on the markets and stock-specific action. Stay with us.
"26 years of CNBC TV18.
Fly Emirates, fly better.
26 years of CNBC TV18.
Welcome back. Let's also get some updates on the trade negotiations between India and the United States. That's the big story. That's something that will be an important cue as we move towards the end of this year, with most of the major cues behind us right now. Parikshit joins in with the details of what's transpiring. Parikshit.
Well, a consequential phone call between Prime Minister Modi and President Trump when the two nations are engaged in a critical phase of negotiations to seal a bilateral trade agreement. Yes, they discussed the entire comprehensive strategic partnership. There was a discussion on global issues and on sustaining the momentum in efforts to enhance bilateral trade. Now, trade deal specifically wasn't mentioned, but yes, our sources tell us that the talks happened in a very positive environment. The talks were substantive, and yes, it's a positive indication on the progress of the trade deal. Perhaps Sergio Gore, the incoming US ambassador to India, has given more flavor to the negotiations and the phone call that happened yesterday. He described it as a great call between two leaders and two friends, and he said that Prime Minister Modi reiterated India's support for President Trump's peace efforts in Ukraine. So clearly, the United States is tying India's efforts to supporting them in ending the Russia-Ukraine war with the trade deal in some way or the other. Now, back in India, the trade negotiations took place between Rick Switzer, who is the Deputy US Trade Representative, the Indian Commerce Ministry. He called on the Commerce Minister Piyush Goyal, the Commerce Secretary Rajesh Agrawal, who's India's chief negotiator with the United States. They discussed the contours of the trade agreement. But what we are now told is that India has already given a very good offer to the United States. It is really up to Donald Trump to sign on the dotted line. While things have been progressing well, we've made the best proposal we could. It really now remains to be seen whether the US government, whether the US president will sign on the dotted line or not. There seems to be an attempt to address and bring in some more agriculture-related items in the trade deal at the last moment, which could add to the complication. But clearly, we don't have clarity on the trade deal as yet, whether it will happen by the end of this year or not. We also reached out to the White House to ask them about the progress in the trade deal and what the talks, the phone call between the two leaders mean at this stage. And they only confirmed that there was a phone call, and beyond that, they were not willing to comment anything. So very interesting times, and the next few weeks could perhaps unravel what can happen next.
Absolutely, Parikshit. Thank you so much for the latest update that's come in on the Trump as well as Modi development and the call that was made there. But with that, we're absolutely out of time on this edition of Chartbusters, leaving the markets with an uptick of around 62 points for the Nifty. Bank Nifty holding on to some mild gains, and the broader end of the market continues to do better. But with that, it's a goodbye from Mangalam, myself, as well as the team who put the show together. Thank you so much for tuning in. Up next, we have Trading Hour.
26 years of CNBC TV18. 26 years of CNBC TV18.
You're with us here on Trading Hour. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Hormas Vatakia. With me, Mangalam Malu and Ritu Singh joining us from Bangalore this Friday morning. And it's been that kind of a week, right, for the markets. We've been up, we've been down, but so far we've been holding on to gains. So far, so good.
Yeah, it's technically speaking, between the 50-day moving average and the 20-day moving average. 50-day moving average stands at around the 25,700 mark. 20-day moving average a little over 26,000. If you look at the week's low, the Monday low, that is pretty close to the 50-day moving average. And if you look at today's high, that's pretty close to the 20-day moving average. So it's between these two markers that the market has been oscillating. But today goes to the bulls so far. The good part is that the broader markets are doing a lot better. We have 1,800 stocks which are advancing as against 900 stocks which are declining. So the lines firmly in favor of the green one versus the red one. The India VIX lower as well. So a lot of these, worries are quelled. As we move towards the end of this year, obviously, the only big trigger now would be the India-US trade talks and perhaps some sort of Santa rally towards the end. Ritu is with us as well. Ritu.
Well, yes, Mangalam, the big trigger, of course, is that US-India trade deal. Because of the delay in that deal, again, you saw rupee hitting a record low in trade. About 90.56 is where it went. We know the continued reasons why the rupee remains under pressure, but again, hitting a fresh low today. That said, yeah, it's been a yo-yo of a week. Down in the first half of this week, again up, but we'll have to see if the markets are able to hold on to these kind of gains as we end the week. All of the major, sectoral indices almost in the green, barring, a few like Pharma, PSU Bank, FMCG, and Nifty IT. But for more on the stocks that are buzzing in trade, Hormaz is on the wall to tell us more. Hormaz?
Well, the markets continue to keep yo-yoing between the 20 and the 50 DMA, but the broader markets have seen a fairly decent recovery in the last couple of trading sessions. Now, I start off with GMDC. It's done well, it's gained in 3 out of the 5 days this week. Today's volumes are already 3x of their 20-day average. We had close to 75 lakh shares that have been traded on GMDC. The 20-day average is around 24 lakh shares. The stock is now at its 100-day moving average of 517. The next important level on the upside is going to be the 50 DMA, which is at 562. And it's had a fairly decent year. Despite correcting for 3 months in a row now, GMDC is still up 62% on a year-to-date basis. Hindustan Copper, of course, copper prices at record highs, silver at record highs as well. The stock has snapped a 4-day losing streak today, 6% higher on the stock. The volumes, though, not very convincing. They've been continuing to decline every session this week. It will be interesting to see how today's volumes turn out. We have had 1 crore shares being traded, the 20-day average of around 40 lakh shares. The stock, though, is up around 50% so far this year and is also now exactly at its 52-week high levels of 378. And lastly, Dynacon Systems, it's a news flow based reaction. It's an order win that the company has received, 13% higher on the stock, the biggest single day gain since August of last year. Today's volumes are the highest in the last 3 months. The stock has seen around 10 lakh shares that have traded compared to a 20-day average of just around 8,500 shares. And the stock has moved above its 50 and its 100-day moving average. The next level on the upside is the 200-day moving average, which is around 1,013. But after having 5 consecutive years of positive returns, the stock is down around 30%, may just turn out to be the first negative year after 2019, Mangalam.
Thanks a lot for that, Hormaz. Those are a bunch of stocks which are buzzing, but GAIL is in focus as the regulator PNGRB has announced zonal apportionments of tariffs for the pipelines. What exactly does this mean and what does this do to GAIL's prospects? Sonal joins in for more. Sonal.
Thank you so much for that. Well, remember on 27th of November, we got the tariff order coming in from PNGRB. It was for the integrated pipeline for GAIL, which is, of course, the bigger volume generator for the company as well. That's when they saw 12% increase. And that is when PNGRB's member told us that they will be looking at zonal tariffs as well, which is divided by zones for GAIL sometime in December. And that order has finally come by. And in this, it is expected that the increase will be 14 to 15%. That is the final number number that PNGRB has announced, and this is higher than what analysts were estimating as well. They were expecting an increase anywhere between 10 to 12%, but this is slightly higher than that, and that is a positive for GAIL, according to your Citi note. Citi also says that this is ahead of their 10% expectations that they had. The other positive that is working for GAIL currently is that Henry Hub prices are lower, and that means their sourcing costs will be lower, and this is something which will be positive for their margins as well. They have a buy rating with a target price of 205 rupees a share, and generally analysts are suggesting this could add around 1.5 to 2% to their earnings as well going forward. So this has come in as a positive update for GAIL here.
All right, Sonal, we'll keep a tab on that stock. Thanks very much for joining in, but we'll shift focus to the primary market action now, and it has been an action-packed month or so. Now, ICICI Pru AMC's IPO subscription opens today. It aims to raise more than 10,000 crore rupees with the issue. Remember, this is the second largest AMC by size and the largest by actively managed assets under management with a market share of 13.3%. Its higher equity skew also makes it more profitable than some of its peers. But a key risk, of course, as we've been speaking to the management as well, is the SEBI consultation paper on caps on the total expense ratio. We did speak to the management on this and more. Let's listen in to what they had to say.
I think this industry has been regulated brilliantly by SEBI all these years. And the best thing part of this is that our expenses have always been controlled, right? So if my BIPs are going down, over the years, my BIPs have gone down. If what I charge to the fund, but what is going down, what I am charging to the fund goes down. As I charge lesser and lesser, as my AUM grows, I charge lesser. That is anyway there. And as I charge lesser, my product becomes better and better for the final investor. Because SEBI has said it's a consultation, come and talk to us. As MFI, we are talking to SEBI. The idea is to rationalize some of the charges, right? I don't think, even if there is an impact, I don't think it is that major in my mind. Unless we generate alpha, unless we generate more than the benchmark, we can't sell. Right? It won't sell because then people should buy passive. No? If I am being paid fees to beat the benchmark. So unless I beat the benchmark, I cannot get money. Then otherwise ETFs will grow. 90% of our AUM over a 3-year basis has beaten the index right now. So one is, and second is, if you invest in ETFs, there is a taxation advantage versus mutual funds. That is not there in India. So these are the two reasons. If I don't beat benchmark, why should I get money in active funds?
IPO of the country in 2025, of course, currently open for subscription, ICICI Prudential AMC. Take a short break, get you a special discussion on the other side with Manisha Gupta, and she had that conversation with NSE's Ashish Kumar Chauhan on the other side. Stay tuned, we'll be right back.
You want to talk business? Meet me in the Onboard Lounge.
26 years of CNBC TV18.
CNBC TV18 and India Bonds presents Bond Street.
Welcome to Bond Street, and in the series we have a very special guest joining in today. It's Mr. Ashish Chauhan, MD and CEO at NSE. Mr. Chauhan, hi, thank you so much for joining in. And when we talk about the bond markets, we do realize that the last 10 years perhaps did not yield much in sense of volumes or participation therein. But 2025 has been a great year. And is that a building block for the next few years now, would you say?
I broadly agree with your observation. Why? Because when Mr. Modi took over in 2014, India's equity market capitalized was 67 lakh crore. Today it has gone to 475 lakh crore, right? And so it has gone up 7 times.
Right.
The bond market has remained where it was, which is probably 15-16% of the total GDP, whereas the equities market has gone to 140% of the GDP. And that's where basically we have seen that sort of divergence between equities and bonds emerging. But there have been also underlying reasons why the bonds market or the debt market in India has not developed. And for me, that includes the overall debt to GDP ratio. I mean, if you take a look at the debt to GDP ratio of US, it is more than 4.5, 5:1. China is also 4:1, 5:1. India is running with all the bonds and all the loans put together on the total economy at some 0.6, 0.7:1. So we are like literally 5-6 times lower than what we should have given the size of economy.
Right.
And so if you want to grow fast, you will have to use debt very well. You don't have to sort of balloon it up in an unproductive way, which was the concern during 2012-13. But today we have actually sort of shrunk the bond market, which itself is unhealthy in my opinion.
Right. So when we have this vision of Viksit Bharat, and almost all segments and sectors seem to be working towards that, and when you have a developing nation, you need long-term capital stability therein. Would you say that the bonds will play a very important role therein?
Each economy, I mean, if you look at the last 1,000 years, the city-states, the cities, the development of every economy, including the last 40 years of China's growth, has been on the back of debt. And that is what we need to understand, that the long-term debt is absolutely essential for any economy's growth. And no economy can build infrastructure basis equities. Equities are inherently risky, and they are what we call quarter se quarter tak. And that's where you don't sort of invest for 30 years, 40 years. Whereas the pension funds, which have long-term liabilities, the insurance companies, and many other similar entities, trusts, they require continual income flow, and that's where private equity guys, and that's where we need to promote such institutions to invest and make life easier for them, because we have now a plethora of regulators. Each of them have their own very tight regulations, and they inherently ensure that the bond market, which is actually where they are supposed to get their returns from, ends up not developing that well. And that's where I think a lot of coordination amongst the regulators is required. Otherwise, ball is like falling between all these regulators.
Right. The last 2 or 3 years, as you've been telling us as well, that NSE volumes in bonds has increased, especially in 2025. What is it that NSE plans to do from here on, and what policy support are you then looking for that?
In a way, of course, the tax policies, if they become favorable to bonds, then that becomes easy. Last 10, 11 years, we have seen much more tightening on the bond side, on the taxation side. But effectively, what we have seen is that the OBBB platform, which SEBI mandated recently in 22, we started working on it. And then in 22, we had per bond around 100 transactions a year. Today, we have reached 1,066 transactions a year in 25, still a few days to go.
Right.
And so, in a way, we have gone up like 11 times more transactions in 3 years. But if you look at the aggregate number or absolute number, in this year, we have done around 10 lakh transactions, which is like a minuscule compared to what we do in equities, right? I mean, it's not even a...
Baby steps, but you're getting there, would you say?
Even a fraction of a fraction. For me, things happen slowly and then suddenly. This is the slow part. Suddenly, somewhere things will happen. For me, OBB platforms have been great boon for investors to come into the markets and taste the bond markets directly. And then of course, we have also applied. We are currently around 29 OBP platforms. Probably more will come.
Okay.
They will go out. We need to do market making through OBP platforms or otherwise for investors to get that small little lot liquidity when they want to come out, because liquidity is an absolutely essential function of a well-functioning market, and that's where we have not yet been able to provide that low amount of or small amount of market making, which has been a boon in SME market. If you look at SME equities, have come up very well due to the market making being made compulsory by SEBI. But in the bonds, we have not yet seen that. Hopefully, SEBI will do it in 26. And then, of course, more and more companies are raising money abroad, but for their infrastructure stuff. But when India has to do much more infrastructure, if we are able to rationalize policies on bonds across all the regulators, like PFRDA, NPS, and of course insurance, RBI, SEBI, then probably we'll have a very well-functioning, less risky, because bonds are inherently less risky assets compared to equities, and they will give consistent returns to the investors, which is absolutely an essential part, especially for the graying economy. We have a silver economy. We are a young economy today, but we have an equally large or even more interesting number of people who are becoming old. They will require consistent income going forward, and that's where we need to build that. Lastly, we have also applied for corporate bond index futures and government bond index futures and options to SEBI, so that if those sort of approvals come, then you can create a tertiary liquidity basis which the secondary liquidity come in. The primary market on bonds, we have done very well. We are raising CPs and bonds and InvITs and REITs to the extent of almost $220 to $250 billion a year on NSE alone. And so that's a very large number, but then there is no trading, right? So that's where people hold to maturity, and we need some trading happening.
Mr. Chauhan, as always, thank you so much for joining in. Really appreciate your time here with us at CNBC TV18. And with that, that's all the time that we have on Bond Street. Thank you for watching.
CNBC TV18 and India Bonds presents Bond Street.
"26 years of CNBC TV18.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
26 years of CNBC TV18.
Welcome back. You're watching Trading Hour. Markets holding on to their gains. In fact, the Nifty is now back up above the 26,000 mark, up about 118 points as we speak, 0.4%, and Sensex up about 380 odd points. But the rupee has been very much in focus. It touched a new all-time low of 90.56 in early trade on reports of some big defense and interest payments happening yesterday. It recovered most of the losses, mostly on dollar selling by traders, not just RBI. Lata Venkatesh is joining us with more on, what caused this pressure today. Of course, the broader pain continues, Lata.
There's a whole lot of chatter surrounding the rupee, but no taking away from the constant, persistent decline. Now, what we saw the early morning decline to 90.56, a bit of a shock because the market was expecting Reserve Bank to hold 90.50. What were the reasons? The reasons apparently are a spillover from yesterday and today. The fall we saw yesterday to 90.30 to even 90.40 was because of a large defense and interest rate payment going out. Today, that demand is apparently being replaced by oil companies' demand for dollars, making payments. Now, actually, in New York trading yesterday, that is after our markets closed in the offshore market, the rupee actually strengthened after this phone call between President Trump and Prime Minister Modi. The expectation was that there will be some strong announcements on the trade deal. But in early morning trades today, the same phone call became a reason to actually sell off the rupee or rather buy dollars, square off positions, because the phone call did not refer to the deal at all. It referred to several other things. So there was actually a bit of disappointment on that matter. Now, that said, there are two things that dealers are pointing to. The last 48 hours hectic move of the rupee or decline of the rupee. One is it is on very thin trades. As it is, as you come to the end of the year, the volume is low. Now people are not sure which way to trade. That also is reducing the liquidity. So it could be just, a 50 million moving out and the rupee could fall seminally because there is no support on either side. The second point dealers point out is don't look at the recovery from the 90.56, the rupee recovering to 90, 30, 35 thereabouts as RBI pushing up the currency. Actually, RBI is hardly there in the market. This is exporters themselves, exporters, traders, domestic bankers themselves pushing back the rupee because there is no support on either side. Everything is happening on thin trades. We just have to be prepared for all this volatility.
And that might just end up becoming a trend as we wound down on the year, right? The volumes coming down, participation coming down, and therefore the moves being exaggerated on either side. Lata, thank you for spelling that out for us on the currency. Get back to the markets then. Ajit Mishra is joining in from Religare Broking for a quick chart check. Ajit, good morning. Thank you for joining in. We're back above that 26,000 mark, but we are still there and thereabouts. So your call on the index and specific stock recommendations as well for the morning.
Good morning, Ormaz. So yes, it's a kind of like a roller coaster ride, which has been continuing for almost 2 weeks now. Means we are hovering around this 26,000 mark. So I believe that as long as we are maintaining above this zone, 25,900, 950, probably we can see this recovery extending towards 26,100, 200 mark. But I doubt that we can see a meaningful trend until we see a decisive participation from the sectors like banking, IT, though they are doing comparatively better, but one should be selective in current market scenario. Basis that, the first recommendation that we have for the day is Titan, wherein we are seeing decisive trend unfolding, means it's a multi-year high, marginal pullback followed by a strong recovery. So we expect this recovery to further strengthen, and 39.80 is what we are eyeing in the near future. So with stop at 38.30, one can accumulate Titan at current levels. Then we have metal counters which are buzzing in the trade. NMDC has been almost 1.5 years of consolidation, a cup and handle formation which is about to get over. So here also one can look for long positions with 74 as a stop loss and 80 as a positional targets.
All right, take that point. NMDC and Titan Metals doing well, Titan doing even better. We spoke with the management earlier in the week and they did indicate that growth will be the target of the new MD, Ajay Chawla, who takes over from the start of 2026. Also saying that the third quarter hasn't particularly been bad. In fact, he is confident of the first 9 months of this year doing a lot better on the whole than the first half of this year on the revenue front. Take a short break, come back. In fact, we focus on the consumer space itself. Manoj Menon of ICICI Securities joins in on a check on the consumption space. A lot to speak with him.
"26 years of CNBC TV18.
Fly Emirates, fly better.
"26 years of CNBC TV18.
Welcome back. The market's doing fairly well. The sector that's not doing well today is the FMCG space, and that's led lower by, Hindustan Unilever. You pull up the intraday chart of something like a Dabur as well. Asian Paints. Across the board, there has been a decline. FMCG actually, from a sector standpoint, is the only sector which is in the red right now in an otherwise fairly green-looking screen. The only stock in the consumption space which is doing well is the one that we spoke about just before going into break. That was Titan. Stock moved to the high point of trade. So how is this consumption space likely to pan out? What are the initial findings from the ground when it comes to demand, etc., post GST, and what the outlook is for your FMCG portfolio? We do have Manoj Menon, who's the head of research, consumer analyst, expert at ICICI Securities, joining in. Manoj, before we speak about numbers and all of that and stuff, we'd like to wish you a happy birthday. I won't tell you, tell the viewers your age, but you're 25 with a few years of experience. Let's pull it that way.
Thank you, team, for that. I think there are better things to discuss, right? So we can move on to the stocks.
Let's talk about that. GST, post GST, you've been doing a lot of ground checks, etc. What have your findings been, and is it actually growing as per what the management had been telling us at the end of the second quarter?
So 2-3 things actually. Before I jump into that, I want to tell you the sources, right? So my source of information is the listed companies, as well as a wide spectrum of unlisted FMCG companies who I speak with, right? The only context to note is many of these folks, happen to be over-indexed in urban, the unlisted FMCG, right? So that's my, source area. Now, broadly, we have found 3 things, right? Point number 1, particularly in the discretionary part of consumer staples or FMCG, the demand uptick is visible, right? Point number 1. Point number 2, it seems that consumers are very happy, right, with the absolute rupees being lower for large packs. Just give you an example. Let's say a 500 rupee shampoo bottle, which was the price earlier, the current price is 440, right, adjusting for discounts, etc. Now, the volume uptick seems to be fairly material there, right, because it suddenly, and also, by the way, the third point, what seems to be happening, particularly in a category like soaps, is that there seems to be premiumization happening to a Dove or a Fiamma, Devils, etc., from, let's say, the other brands. Because suddenly, certain price points has become, from a consumer perception point of view, has become very attractive. So there is genuine uptick in demand, the way we see, driving some premiumization as well.
So things are basically looking a lot better than what they were in the first half of this year. So have you made any tweaks to your estimates for the third quarter, fourth quarter, and as a result of which, any investable ideas that you have?
We've not really made any changes. Whenever we make we'll actually publish it first before we're talking. But having said that, if you actually look at the overall estimates for FY26, right, it was already baking in a certain recovery, right? And we had made some changes anyway at the time of the GST changes as well, right? If you ask me further, then answer is no, right? The bigger point actually, which we are very bullish, right, is that when I talk to people who has been in the industry for like 20, 30, 40 years, right, there are certain CEOs who actually just completed 40 years as well, right? I think one of the big insights what I'm getting is that the sort of bullishness what they have, because many of them has actually seen the 90s era, etc., when significant tax reductions was implemented and how actually it boosted demand. Or let's say when GST actually got implemented, which is not too far in the history, right, just 10 years back, right? How actually, or 8 years back, right? How demand got boosted. So there is a fair amount of optimism going into FY27 for price elasticity gains in certain parts of FMCG, not all of it.
Manoj, you were one of the first ones to have downgraded the paint space. You're the first ones to upgrade it as well at the time when there was extreme pessimism on the street with regards to the entire sector.
Yeah.
But now, as things stand, has the competitive intensity started to wane out? We spoke to Asian Paints. They also mentioned that now that the honeymoon period is over, the competition will start to feel the heat and so on.
Yeah.
Is that actually happening on the ground? Is the competitive intensity really waning? And that comes as a benefit for a large player like Asian Paints.
Point taken. Thanks for asking that actually, and thanks for highlighting the facts, here. Look, the 3 aspects here, right? So the point number 1, is that the competitive intensity still remains very high. I really don't think it has waned actually, right? And it is expected that it will get better, right? That's point number 1. Point number 2, I think what has also happened is that, Birla Opus has already done the, let's say, the initial groundwork of primary sales, right? So to that extent, that if you can call it disruption, that phase is behind us.
Yeah.
Point number 3, if you look at in paint industry over the last 20 years, we find an interesting pattern. 2005 to 15, right? Industry grew consistently every year double digits in value terms. Okay. Post 15, right? There is a pattern, right? We'll get into causality and correlation later. The pattern is that 2 bad years follows by 2 good years.
Okay.
Okay, and bad year defined as less than 5% industry growth, good year defined as more than 10% industry growth, right? For whatever it is worth it, FY25 and FY24 were poor years.
Poor years.
Right? So to that extent, there is a fair amount of optimism in the industry that things will get better. And if it does get better, which is a big if, right? The ability to absorb one more player's aspiration is easier. Right. So to that extent, competitive intensity can actually get better incrementally.
Got it.
Lastly speaking, in the last 6 months, particularly compared to the last 5 years, I think the number of paintable days was also lesser given the number of higher rainy days, etc. A lot of one-off sitting there, right? I mean, so we continue to be very bullish on paints. Asian Paints has run up, in the short term, but I think it needs to consolidate. But optimistic view doesn't really change. The second paint company which we like, apart from Asian, is Indigo Paints. The reason I'm highlighting, because as a stock idea, which we have been recommending investors as well, is that Indigo Paints actually outperforms, whenever there is an enabling environment of industry growth.
Okay.
Right, because being a fifth large player, it's relatively easier for them to get a counter share higher than normal during times of industry growth. Right, so I think it's an outperformer, in the business, and hence the stock, cheaper valuations, etc.
Right, we'll talk about that in just a bit, but I think we'll go back to Ritu. Ritu has a question.
Well, Manoj, I quickly wanted to ask, I mean, a lot of, tailwinds that you're highlighting from the GST price cuts, etc. But in terms of the headwinds, I think in your note, you talk about how there's been a lot of pantry loading on the back of this expected higher demand. How could that play out as, a risk because of what's happened already? And also, how are you pricing in the currency fluctuations, especially for some of these players that may be importing some of the raw materials?
Ritu, actually, I didn't think I couldn't hear the first part, but the second part on the currency fluctuations was audible to me. Look, I think the currency has kind of gone down, let's say high single digits, as we speak, right? I mean, I don't think it's material enough for any company to relook at pricing at this point in time, because the commodity basket has not really behaved, in a way which would warrant a price increase at this point. Second most important point also to highlight is that, qualitatively speaking, I'll be surprised if any of the companies will implement a price increase for the next 3 to 6 months, given the fact that you have actually done a price cut, even though it is GST linked, etc., in the last 3 months. So I think in that sense, if there is let's say, put it this way, if there is a pressure on gross margins versus prioritizing volume, I would reckon the leaders would actually go for volumes, even at the cost of short-term profits.
All right, makes sense. Just a quick individual stock sort of question before we wrap up, because 3 leaders that we spoke with in the consumption space lately, you did speak about Asian Paints and the management commentary that we had from them as well. Spoke with Nestle recently, and we spoke with Titan. So on both Nestle as well as Titan, what are your thoughts?
We continue to like both of them. So they are, look, I think these are stocks or rather businesses. What do you make of the
management commentary?
Look, I think it's consistent. I would rather say consistent. Ajay has been consistently saying, that we are going to prioritize growth. And that's been my, let's say, learning from him, listening to him for the last 5 years now, right? Absolutely consistent. And I completely agree with that, right? And that too in an operating leverage business like retail, if you drive growth, everything falls into place, right? I think there's no debate whatsoever. And some of the good work, which actually Titan has done in the jewelry business the last couple of years, particularly under Ajay, is that they've actually reduced the gold price premium, relative to the relevant competitors, right? I mean, so I think that's another leg which is behind them. To that extent, faster growth expected, into the medium term, for Titan.
100 basis points margin given away for
reducing.
Is
Absolutely.
That's good. And
absolutely.
Nestle?
Nestle, we are very bullish actually for a couple of reasons. One, there is a macro element also there, right? The last couple of years was fairly difficult, I would say, for urban consumption, right? Rural has started outperforming. And if you extrapolate the current situation of good GDP growth and cooling inflation, I don't want to use the word Goldilocks, but it's somewhere there, right? Closer there, right? I think urban consumption making a comeback is a matter of time. It's not about why, it's about when, right? And Nestle is, absolutely square, in terms of getting that benefit, right? Point number 2, very, very important to appreciate, right? Nestle actually has got certain categories like chocolates, which is truly discretionary and impulse within FMCG.
Yes.
Right? And it has actually seen an 18% to 5% reduction. Or in a category like Maggi, at a 5% taxation today, let's say biscuits will benefit, a Maggi will benefit, because there is no incentive for an informal player to not be formal at a 5% taxation, right? So Nestle is a benefit of tailwinds. Apart from the management change, we expect to bring in its own sets of new energy and new direction, etc.
And just before we let you go, we do have time for about 30 seconds. Honasa, the acquisition that they've made, of Reginald Men.
Yeah.
And the overall consumption environment in that, the stock is about 30-40 rupees away from its
IPO price.
IPO price itself.
Yeah. Look, I think let me address the M&A part first and come to our fundamental view immediately after that. I think it's a good acquisition, right? If you actually look at the brand, 70% is actually D2C.
Yes.
So many of the so-called D2C brands are not necessarily D2C, right? It goes through the platforms. Second point is most of the revenues actually come from South in vernacular language communication. Right? I think this brand, it appears upfront that I think has built up something which is scalable. And second point is that, Honasa, which is obviously, quote unquote, if I can use the word, to be the L'Oreal of India into the future, right? I think they're clearly building a bouquet of brands, and this kind of fits well with it. Point number 3, our bullishness on Honasa essentially stems from just 2 aspects, right? One, in our opinion, Mamaearth is back to growth. And if I crystal ball gaze into FY27, Mamaearth actually getting back to double-digit growth is, let's say, a high probability in our opinion. Point number 2, a couple of other brands, which is Dermaco and Aqualogica, also seems to be, pushing the barrier of going beyond 600 crore ARR.
Pleasure having you today, Manoj. Thank you so much for sparing time and joining us for this very insightful conversation. Manoj Menon there on the entire consumption space. Take a short break. More on the markets on the other side. Stay tuned.
26 years of CNBC TV18.
You want to talk business? Meet me in the Onboard Lounge.
26 years of CNBC TV18.
Welcome back. You're watching Trading Hour, and we'll shift focus to the banking space because the Reserve Bank of India has removed all restrictions on banks opening and maintaining cash credit accounts under the updated transaction account rules. Now, banks can now offer these facilities based purely on consumer needs without any regulatory caps whatsoever. Now, cash credit essentially is a short-term flexible business loan for working capital that is usually taken. RBI, in fact, has also withdrawn an earlier proposal which had said that only 2 banks can open current accounts for a corporate borrower, with each lender holding at least 10% of the total loans given by the entire banking sector to the company. Now, these, of course, remember, were released earlier as draft rules on the 1st of October, but we saw quite a bit of pushback from the industry, and so now RBI has accepted some of those demands and eased the norms, especially when it comes to opening and maintaining current and overdraft accounts. Now, according to these amended rules, banks can now maintain these current accounts without any restriction for customers that have banking exposures of more than 10 crore rupees to the entire system. Effectively, this will give banks much more operational flexibility. It will also simplify corporate banking. But that said, some rules remain firm. For instance, the requirement that funds be transferred to a designated transaction account within 2 working days, that has been retained despite the request from banks for an extension. Proposal to accept or exempt accounts that are linked to law enforcement instructions, that was turned down, and calls for a special exemption for certain borrower categories was also rejected by RBI. But overall, more operational flexibility to banks, simpler rules, positive for large banks especially that have bigger exposures, because now they get the opportunity to offer current and overdraft accounts without any restriction or cap on the number of lenders. And that also means more fee income for them and, of course, better visibility on the borrower transactions, so improved risk assessment as well. Overall, continuing with that theme of RBI, giving some sort of relaxations for the banking sector. On that note, we're going to slip into a break, but don't go anywhere. More on the markets when we return.
"26 years of CNBC TV18.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
Welcome back. You're watching Trading Hour, and we'll shift focus to the banking space because the Reserve Bank of India has removed all restrictions on banks opening and maintaining cash credit accounts under the updated transaction account rules. Now, banks can now offer these facilities based purely on consumer needs without any regulatory caps whatsoever. Now, cash credit essentially is a short-term flexible business loan for working capital that is usually taken. RBI, in fact, has also withdrawn an earlier proposal which had said that only 2 banks can open current accounts for a corporate borrower, with each lender holding at least 10% of the total loans given by the entire banking sector to the company. Now, these, of course, remember, were released earlier as draft rules on the 1st of October, but we saw quite a bit of pushback from the industry, and so now RBI has accepted some of those demands and eased the norms, especially when it comes to opening and maintaining current and overdraft accounts. But that said, some rules remain firm. For instance, the requirement that funds be transferred to a designated transaction account within 2 working days, that has been retained despite the request from banks for an extension. Proposal to accept or exempt accounts that are linked to law enforcement instructions, that was turned down, and calls for a special exemption for certain borrower categories was also rejected by RBI. But overall, more operational flexibility to banks, simpler rules, positive for large banks especially that have bigger expos
26 years of CNBC TV18.
Nearing the highest point of the day again is the Nifty, 125 points higher as we speak. The broader markets also doing fairly well for themselves. The Nifty Bank still continuing to move closer towards that 59,500 mark. So good going for the markets as we go into the second half of the final trading day of the week. Take your leave on this edition of Trading Hour. From Mangalam, Ritu and me, thank you for watching. Halftime report on the other side.
26 years of CNBC TV18. Twenty-six years of CNBC TV18.
Stocks see some follow-through buying from Thursday with a healthy advance-decline ratio after India's PM Modi calls Donald Trump and metals and industrials are the big gainers, while FMCG and IT drag.
India's second largest asset management company and the most profitable at an operating level floats its 10,600 crore rupee IPO that will see co-promoter Prudential pay part of its stake after 20 years. The fund house's CEO tells CNBC TV18 he sees a big opportunity in mobilizing bank savings and expects alternate investment funds to yield higher profits.
Silver hits a record high and gold climbs as the US Treasury yield and dollar softens. Copper too scales to a record high as several mines battle issues crimping supply.
Rupee hits a fresh low of 90.56 to the dollar and then recovers all the losses. Dealers say oil companies bought dollars, but rupee recovery was due to exporters selling, not RBI support. Phone call between PM Modi and President Trump also not seen helping rupee since it didn't mention about the trade deal.
Prime Minister Modi called up US President Donald Trump on Thursday to review the strategic partnership between the nations. The two leaders agreed to work closely to address shared challenges and common interests. The call lifts hopes on the tariff front.
Hello and welcome to Halftime Report live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always Ekta Batra and Vinny Motiwala. Hey girls, good afternoon. Happy Friday to both of you. Markets also are in the Friday mode today after some selling pressure and some volatility that we saw through the week, right? Today the markets at the day's high. We are above the 26,000 mark as we speak. The mid-caps too are contributing a fair bit. 1.7% higher on the mid-caps. That index is up 1,000 points right now. Metal index, it has seen a stellar rally. That continues to be the case, up 2%. Tata Steel is one of the top gainers on the Nifty as well. We do have some contribution coming in from oil and gas and the energy space as well. So watch out for some moves on that one. But other than that, if we look at the losers, far and few, we have the FMCG index, which is down 0.4%. PSU banking index absolutely flat with some negative bias. A lot of movers in the broader markets. Even the small cap index is doing really well today.
Absolutely, you know, the broader end of the market doing well is supporting the overall advance decline ratio clearly. But apart from that, you know, some of these capital good names today are doing well. Whether you look at a Thermax, L&T obviously had brokerage reports there. Transformers and rectifiers, that's another one that's buzzing away in trade. And obviously the stock has seen a very significant and sharp decline in the last 6 months, but now some recovery at least seems like is coming back. And if those issues on the governance side start easing off, maybe that is something that we'll watch out for. But a lot of individual movers in today's trade as well.
Hi girls, yes, absolutely. You know, the markets are gaining on that trade talk optimism at this point in time. So the Nifty is just about trading at around 26,000. But remember that the rupee continues to weaken. So it has hit a fresh record low on an intraday basis in today's trading session, but has recovered from those levels as well. So just watch out for the rupee in context of the gains that we're seeing in the equity market. So let's see which one manages to dominate in terms of sentiment. But nonetheless, let's talk about one important topic, which is basically the weight loss drug market in India. Novo Nordisk is set to launch Ozempic, which is basically the weight loss and diabetes drug in India today. This is after launching Wegovy, which is specifically for weight loss earlier this year. The company, in fact, is looking to launch this semaglutide molecule for diabetes in 3 strengths and at similar price points to Wegovy. In fact, I did catch up with the managing director of Novo Nordisk, Vikrant Shrotriya, to discuss the company's India opportunity. We also quizzed him on the legal issues with Dr. Reddy's and Sun Pharma right now. So listen in to that conversation.
The higher strength of semaglutide, which actually we have launched till 2.4 milligram, is for obesity. And we are launching this brand for the benefit of type 2 diabetes. And that itself is a big and a huge burden in India, given that we have got more than 100 million population which is getting affected by diabetes, and almost 77 out of 100, they do not have a control. So we are launching this semaglutide in 3 strength, 0.25, 0.5 and 1 milligram for the benefit of type 2 diabetes patient. So it is very clear that the 3 strength which we are launching is for diabetes, and till 2.4 milligram which we have launched is for obesity.
Okay, All right. I wanted to understand that you already have Rybelsus in the market, but the latest data showed that maybe there is a little bit of slowing of sales of Rybelsus. Is that one of the reasons why you're also launching Ozempic, that maybe the oral weight loss drug or oral diabetes drug, semaglutide, is not showing as much traction as anticipated?
I would say that's not exactly the reason. It's a flexible portfolio approach. You know, some of the people would like to write with a ball pen, and still people would like to use the ink pen, and somebody would like to write with a pencil. So semaglutide, which is available now in oral formulation, we have seen the increased appetite of people to accept injectable, which we never saw earlier with insulin. So that is the reason we are actually launching this injectable semaglutide. But on the other side, the oral semaglutide is still on the growth trajectory. But we have to remember that it is now 4th year of the launch, and in the 4th year of the launch, the distribution channel, the pickup of the brand, it changes over a period of time. But we are still very bullish on the oral formulation, because normally if you see diabetes patient in India, 75% of them still prefer oral treatment over injectable. So I think so there is a play both for oral semaglutide and also for injectable semaglutide.
Okay. All right. Well, Vikrant, you know, Wegovy, you launched it a couple of months ago in the month of June. It's taken a significant price cut recently by around 30 to 35% to drive up demand. Are you looking to do the same for Ozempic, come in at possibly lower price points, or maybe look at lower price points in the future? What exactly is the pricing for Ozempic in the market currently?
See, the first thing I and my team we look forward to is to get the innovation in India. And then after the innovation, we look for the accessibility of the molecule in India. Now, we got the response, we got the feedback that the right price should be what we have taken actually now for the injectable semaglutide for obesity. This was a bold step in terms of 37% price reduction. Was a huge step. But we have seen the kind of acceptability of the molecule which is actually there. Now for Ozempic, we would like to be in the same range bound, because we know that more and more patients can actually now afford this kind of a price point when it comes to injectable semaglutide. So we will be range bound with this price point.
All right, Vikrant, you know, I just wanted to touch upon Novo Nordisk having moved the Delhi High Court in order to restrain Sun Pharma from launching the generic form of semaglutide. What is the crux of the legal matter, and where do things stand?
I mean, I would say the legal course of action is under the, you can say, review, and our lawyers are actually fighting, reviewing, and seeing that we deserve the patent right till the time it has to be there in the country. So I think so. It is under sub-justice, and I think so. Let it be there. I'm actually not. I'm not able to comment on that.
Okay, all right. But for Dr. Reddy's, you all have been allowed, or they have been allowed to export semaglutide to non-patent countries. What is the key contention point that Novo Nordisk has in that case? And is Novo Nordisk going to appeal?
Our lawyers are reviewing it, and we are waiting for their, you can say, what they would like to take an action, and I think so we wait for that.
Okay, fair enough. Vikrant, you know, you all have also partnered with Emcure for a second brand name of Wegovy, which is Poviztra. And when exactly is that launching in the Indian market? Is that something that you all are looking to probably do with Ozempic as well?
I would say that for any of the medication, any of the molecules, our try is as fast as possible, because the earlier the launch is, the better the access would be. And it is our try that we launch along with Emcure much more faster. And of course, the goods have to come, the production has to happen. So we have just signed the deal, but soon you will see that we will have the products in India.
All right. Just give us a sense, because Vikrant, you know, the big event which is going to take place is that semaglutide is going to go off patent in the month of March in India. When that happens, what is your sense in terms of what the competition will be like? And it is expected to be a competitive market. And how exactly is Novo Nordisk then going to compete in that?
I would say that competition is one part of it, but we are driven by commitment, because when more number of players come, there is going to be a little more awareness about the medication, about the disease. And I think so that is a very good positive aspect. Similarly, in this market also, post the LOE period, when more number of players come, I think so we welcome them. But we would like to welcome them with a very long commitment, very long purpose.
"26 years of CNBC TV18.
Fly Emirates, fly better.
26 years of CNBC TV18.
Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, for the markets, it's holding up quite well. So let's talk about a couple of topics which have been making news since yesterday. The US House has passed the National Defense Authorization Act, which is basically moving the Biosecure Act, which somewhat restricts biotech contracts to countries like China from the US. And that is moved closer to becoming a law in the US. Now, these local contract drug makers see it as a positive step that can drive a shift to India, which would basically be a China plus one opportunity for a lot of these CDMO manufacturers such as Piramal Pharma. To discuss more on this, we in fact do have Nandini Piramal, who is the chairperson of Piramal Pharma, joining in. Nandini, hi, welcome to the show. Thank you very much for taking the time out. Well, first, just wanted to understand what is the opportunity that you see if in case the US Biosecure Act does become law. What is the opportunity a company such as Piramal Pharma sees from that?
Hi, Ekta. It's a pleasure to be here. I do want to emphasize that this is only one step in a pretty long process of, the US Biosecure Act actually becoming law, because it has to be passed in the Senate. It has to be signed by the president. And, the Defense Department has to actually create a list of companies. And there's also a multi-year kind of grandfathering clause. So it's going to take some time, but I do think that there will be reshoring happening to the US. And I think that's one of the things that we are seeing is that, along with the kind of pressure on pharmaceuticals overall to reshore, I think this will be another contributor to it. And that's why that's something that gives us opportunities, because we have 5 sites in North America, which are both API sites as well as formulation and injectable sites. And I think we have the capacity and the capabilities needed, if people do want to reshore.
Okay. I just had one follow-up. This grandfathering clause, Nandini, is for around 5 years. So that means that companies can continue working with the current contracts that they have, and then they can contemplate moving after 5 years. That's how we should read it.
I think at the end of 5 years, then they'll have to move. So people will have to make the steps to move before 5 years. Because it does take time to move products and drug substance. So it will take time.
Okay.
You can't move pharmaceutical products in 1 day or 2 months. It takes a few years.
That's right. Even the conversion would take some time, right? For the Indian contract manufacturers to take these contracts on board and actually start execution. Nandini, you did indicate that you do have the capacity, you do have facilities in North America and other places. Have you already started seeing requests for proposals coming in from some of these US companies?
I will say that, there has been an uptick in RFPs. However, it's obviously too soon for decisions.
Okay, so too soon for decisions. There is an increase in terms of RFPs that you're seeing. From here on, if this act actually goes through, that approval comes in, then do we expect the conversion to be at a faster pace and acceleration in terms of growth there? Also, China plus one, right? The CDMO side, when you look at Chinese companies which have CDMO players, they have very large capacities. Will this help us in any way maybe to be competitive in terms of cost as well versus China?
I think overall, I'd say the China industry is very large. So even if some percentage moves to either the US or India, I think it will benefit us and will benefit the Indian CDMO industry.
Okay.
Because we are much, much smaller than all of the Chinese.
Exactly.
But as of right now, I will say that we're not as, the Chinese are cheaper.
Okay. So is it fair to assume that, Nandini, we'll probably see the opportunity probably come through in terms of the P&L of CDMO manufacturers in India maybe 3 to 5 years from now?
I think that's ideal. It'll take time. In the P&L, I imagine 3 to 5 years.
Okay. For you in particular, you've come out of a tough quarter. Your CDMO business has declined. You have indicated that the US biotech funding is seeing some amount of improvement, but there is possible. What is the CDMO business looking like for the second half?
I think we've seen, again, some funding uptick over the last 3 months, probably since August, September, and October. And so right now, I would still say it's muted optimism because 3 months does not a trend make. So I'd like to see where we are at the end of the year. So I think overall, I'd say yes, there has been an uptick. Yes, there are decisions being made, but I think it's too soon to commit to definitively.
Okay. Nandini, is there any clarity on whether US agencies will evaluate supply chain security? Is the industry prepared for that? Because there's been so much conversation around this act already. Is the industry making preparations already around some of these issues?
I'd say everyone, at least the Indian industry, is aware, but I don't think I have a position on how the US agencies will act.
Okay. Well, Nandini, just reverting back to, your performance, you did scale down your guidance last quarter. You've made it, a flat revenue growth as well as maybe margins to be in moderate to low teens for the year. Based on what you're seeing, are you able to stick to this guidance?
I think right now we can stick to the guidance. As I would say is some of these decisions will take time to show up in the P&L. And I mean, as I said, frankly, it's too early for a decision, right? You'll have seen an uptick in RFPs, but, the RFPs do take time to decide.
Okay. All right, Nandini, we're going to leave it on that note. Thanks very much for joining in and taking the time out and speaking with CNBC TV18. So yes, while the US Biosecure Act has seen some amount of progress, there are going to be steps for it to finally convert into law in the US. And the RFPs, or requests for proposals for Indian CDMO companies, is still going to take some time to convert finally into business. That's the word coming in from Piramal Pharma. We'll take a short break, but up next, we'll get talking on the technicals. Mehul Kothari of Anand Rathi will join us. Stay tuned.
"26 years of CNBC TV18.
You want to talk business? Meet me in the On-Board Lounge.
26 years of CNBC TV18.
Welcome back to Halftime Report on CNBC TV18. As of now, the Nifty is about the 26,000 mark, 26,022, holding on to gains of 124 points in the trading session, almost in the day's highest point. 0.5% uptick for the Nifty 50, even the Nifty Bank managing to hold on to gains of 0.3%. On that note, let's bring on board Mehul Kothari, Deputy Vice President, Technical Research, Anand Rathi Shares and Stockbrokers, to talk to us about the technicals on the market. Mehul, good afternoon. Thank you so much for joining in. We are above the 26,000 mark as of now, but we do not sustain it always. So what are we keeping an eye out on in terms of levels now from here on for the Nifty as well as the Nifty Bank?
Good afternoon, guys. Thanks for having me on the show. After a sharp pullback of more than 300 points from the lows of 25,700, I feel Nifty is now struggling near the 26,050 zone. We believe 26,050 to 26,100 will be the real test for the bulls, and some consolidation cannot be ruled out at that level. However, as highlighted earlier, 15 days back, broader markets are beginning to participate, which is clearly visible in recent price action. We feel that mid-cap and small caps are likely to outperform from here on, and on the downside, support is seen at 25,900 followed by 25,800 for Nifty, and the approach should remain buy on dips with a stronger focus on individual stock setups. Now, coming to Bank Nifty, it has an upside potential left till 60,000 and more, so it's a buy from here on for the timing. But for medium term, if you ask me, 60,000 to 61,000 can be a strong profit booking zone for Bank Nifty because there is a placement of long-term rising trend line over there. So it would be difficult to take that out in first attempt. So support now is at 59,000 followed by 58,700. So on and all, a little bit of more upside left in both the indices, but we feel that stock-specific action is likely to stay.
So what would that stock-specific action look like, Mehul, your individual picks?
A couple of picks are there. We like Fortis Healthcare for a pullback. The stock is currently trading near 870 zone and has taken support at its 200 DEMA. It can be bought at current levels with a stop loss of 845 and for an upside target of 920. Another stock which we are liking is Eternal, that is Zomato, also looks strong for a bounce. The stock has reversed from its 200 DEMA and now it's quoting somewhere near to 295. Even this can be bought with a stop loss of 280 for a potential upside towards 320.
Okay. All right, Mehul, we're going to leave it on that note. Thanks very much for joining in and taking us through the technical calls. We need to take a short break, but up on the other side, Manisha Gupta will join in to take us through what she's tracking in the commodity space. Stay tuned.
"26 years of CNBC TV18.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
26 years of CNBC TV18.
Welcome back. Peter McGuire, CEO Trading.com, now joins us on the show to talk about all-time highs that we're looking at in many of those metals. Peter, hi, thank you for joining in. Silver first, and we're done $64 an ounce now. I remember you telling me that 60 to 65 is where we'll end this year. We're on the higher side of your range. How are you looking at the next couple of weeks for December?
Well, good afternoon, Manisha. I think it's really surprised everyone, and it's been bid up and bid up strongly. And some of those moves you're seeing are 2 and 3% intraday moves. I've got to go out there on a limb. I think it's going to be a 68 to 69.50 sort of handle by end of year, where the 12th of December, we've got 19 days to run. The markets never sleep. And I think it's got the capacity to edge up higher. So that's what I'm thinking. It's risk on. Fed decision, and US dollar is going to come under pressure. So that's what I'm tipping.
And Peter, where do you see this buying coming in? Who are buying at these very, very high levels? Is it short covering? Is it short silver squeeze that everybody seems to be talking about? What really is fueling this rally?
I think it's a number of things, Manisha. It's short squeeze. There's also a lot of investment across retail sector. You can't walk away from that. I mean, you know, the appetite, regardless of, I talk to people pretty much across the world, and they tell me, you know, they're buying, you're going to retail silver dealers, buying silver. You've got big paper market as well, and the overall appetite is just very, very strong. So I think it's a number of key components. We can't get away from the idea either that it was underinvestment from many decades, and that's really coming home to roost. So yeah, I just think it's just a combination of multiple factors, and also US dollar coming under pressure with rate cuts.
It is. The other thing that has also made all-time highs overnight market has been copper prices, $11,800 a ton now. We've spoken on this earlier as well, Peter, and you've told me 12,000, 13,000 is a possibility as well. With the way the sudden surge that we're looking at, all happening in the month of December, would you say that there could be some money coming back in case of copper as well, taking it higher from here?
I think so, Manisha. I think that Santa Claus rally is really starting to, you know, wind up. A copper probably be maybe a 12.2, 12.3 by end of year. And I think over that first quarter, you'll probably take 12.5 out. Let's just see where we are by Easter, but it's certainly on a tear. You can't not consider either aluminium sitting at 2,900, you know, an all-time high is 3,800. I think it's got the capacity to take a 3,100 out. Zinc strong as well, and tin. So those industrial metals are bid up, and it's a very exciting time for that whole complex.
From here on, as you mentioned about the dollar index as well, and we're trading at an 88 weeks lows on that. It's down by 8.5% for this current year. How are you looking at the dollar index from here on? Is it done most of its bearishness, or the way we've seen statements coming from the US Fed and the whole QE conversation coming back? Do you see dollar getting impacted further?
I think it's got a potential to be a 97.20, 97.40 sort of number. It's running at the moment about 98.35 for that US dollar index. So I think there's more softness there, Manisha, but again by Christmas. And let's just see, you know, there is I understand from a QE perspective, and I also understand, you know, Fed chair, we've got a change of guard. How's it all going to look? I mean, this is incredibly exciting. This is the way that this unpacks, Manisha, over the next 5 and 6 months is going to be electric, because you've got Fed Chair Powell, his tenure finishes in May or earlier. You've got Kevin Hassett. He wants to drive rates lower. We all understand what the president wants, and I think it's going to be a very dynamic, you know, first 2 quarters. It's going to be incredible.
My final question to you, Peter, is on gold prices. And after a 2-month consolidation, we've seen this one break out of that band as well. So not too far away from its all-time highs. We're almost nudging $4,300 an ounce as we speak. What is your sense on this?
I think it'll take an all-time high out by Christmas, Manisha. So by end of year, you know, New Year's Eve, I think we'll be at all-time highs for gold. And the overall momentum, again, is very, very strong. So it's, yeah, bid up, and I think 26 is going to be an incredible year for precious metals.
Okay, all right. Manisha, thank you so much for taking us through that conversation. Peter, thank you so much for joining in. Loving that Christmas tree behind you. So giving us the holiday feels already. Yes, that looks pretty good and making us look forward to the vacation and the holidays as well. Wishing you a Merry Christmas in advance. Thank you so much for tuning in. And with that, we'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side.
"26 years of CNBC TV18.
Fly Emirates, fly better.
26 years of CNBC TV18.
Welcome back. We're looking good for the markets, but there's a lot of action in the primary market as well. ICICI Pru AMC IPO opens today. The company aims to raise over 10,000 crore rupees with its issue, and it is the second largest AMC by size and largest by actively managed AUM with a market share of 13.3%. Its high equity skew makes it more profitable than peers, but a key risk is the SEBI consultation paper on cap and expense ratios. We spoke to the management on the key risks and a lot more. Let's listen into what they had to say.
I think this industry has been regulated brilliantly by SEBI all these years. And the best thing part of this is that our expenses have always been controlled, right? So if my BIPs are going down, over the years, my BIPs have gone down. If what I charge to the fund, but what is going down, what I am charging to the fund goes down. As I charge lesser and lesser, as my AUM grows, I charge lesser. That is anyway there. And as I charge lesser, my product becomes better and better for the final investor. Because SEBI has said it's a consultation, come and talk to us. As MFI, we are talking to SEBI. The idea is to rationalize some of the charges, right? I don't think, even if there is an impact, I don't think it is that major in my mind. Unless we generate alpha, unless we generate more than the benchmark, we can't sell, right? It won't sell because then people should buy passive, no? If I am being paid fees to beat the benchmark. So unless I beat the benchmark, I cannot get money. Then otherwise ETFs will grow. 90% of our AUM over a 3-year basis has beaten the index right now. So one is, and second is, if you invest in ETFs, there is a taxation advantage versus mutual funds. That is not there in India. So these are the two reasons. If I don't beat benchmark, why should I get money in active funds?
Okay, on that note, we're going to sip into a short break. As of now, Nifty still managing to hold on to the 26,000 levels, but we'll come back after the break and take you all through more stock-specific action. Stay tuned in.
26 years of CNBC TV18.
You want to talk business? Meet me in the On-Board Lounge.
26 years of CNBC TV18.
Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, it's turning out to be a session where we are quite steady from the get-go, and we've maintained that. So we have the Nifty, which is up around 0.5% at this point in time. The advanced decline ratio is holding on the positive side. And we have the Midcap index, which is marginally outperforming at this time. But the superstar for today's trading session has to be the metals index, which is up around 2.5% or thereabout at this point. It's up around 1.6% this week. And if you look at it, it's rallied a good 20% this year as well. In terms of key stocks, Hindustan Zinc obviously is up around 4 to 5% because mirroring silver prices, which are at record highs. But besides that, we have stocks such as Tata Steel, Hindalco, JSW Steel, all of these stocks which are gaining anywhere between 1 to 2% at this point. So that's basically what's taking place with the entire metals picture. But besides metals and moving away from that, just watch out for a couple of the stocks on the downside. So Bajaj Auto is down around 0.8%. We have a couple of the consumption names actually which are taking a hit today. So HUL is down around 1.8% along with ITC and Asian Paints as well. But on that note, we need to wrap up on the show with the news that the Nifty is holding at 26,000. This is Lunch. We'll take all the action forward. Stay tuned.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Stocks see some follow-through buying from Thursday with a healthy advance decline ratio after India's Prime Minister Modi calls Donald Trump. Metals and industrials are the big gainers while FMCG and IT drag.
India's second largest asset management company and the most profitable at an operating level floats its 10,600 crore rupee IPO. That will see co-promoter Prudential pare part of its stake after 20 years. The fund house's CEO tells CNBC TV18 he sees a big opportunity in mobilizing bank savings and expects alternate investment funds to yield higher profits.
Silver prices hit a record high and gold climbs as US Treasury yields and the dollar soften. The copper also is at a new record high as several mines battle issues crimping supply.
Rupee hits a fresh low of 90.56 to the dollar and then recovers all losses. Dealers say oil companies bought dollars, but rupee recovery was due to exporters selling, not RBI support. Phone call between PM Modi and President Trump also not seen helping rupee since it didn't mention about the trade deal.
And Prime Minister Narendra Modi calls US President Donald Trump on Thursday to review the strategic partnership between the two nations. The two leaders agreed to work closely to address shared challenges and common interests. The call lifts the hopes on the tariff front. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I am Hormuz Fatakia. With me as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormaz. What a week it's been, right? We started in the red. We managed to then start gaining yesterday, snap that 3-day losing streak. And now Nifty firmly in the green.
Some follow-up buying coming in from yesterday. And the good part is that we're still managing to hold on to gains. It may not be a pure breakout as such because you're still oscillating in that range between that 50 DMA at around 25,700 to the 20 DMA, which we are at currently right now. So the higher end of the trading range is where we are at. 26,023 is the 20 DMA, is where the Nifty is. The intraday high somewhere close to 26,040. So we are nearing the highest point of the day, but sustaining above that 20-day moving average is going to be the key for the index. We have had 2 good days of follow-up buying now. We had a good recovery after the lows that we made yesterday, and we are continuing with that. So it's almost a 300-point recovery from the lows. L&T, the top contributor to the upside today after that upgrade that came in from Goldman Sachs. Reliance Industries has been the one that has ensured that the Nifty did not fall further or kept the losses in check and is now putting its hand up for the gains as well. ICICI Bank, Axis Bank, so the private banks, they led the recovery yesterday. They're doing so today as well. The only disappointing part, though, Arundhati, is the FMCG index.
Absolutely. And, I'm going to talk about that. But the Midcap index also doing better than the blue chips today. But let's take a look at some of those indices that are doing well. The metal pack is leading from the front. Zinc, Hindalco and Nifty all in the green. All of them between 4 and 7% higher and all of them at 52-week highs. But as Hormaz pointed out, most of the sectors are in the green except that FMCG pack, right? It's the top losing index. HUL, ITC, Varun Beverages, all of them in the red. The PSU banks also in the red today. But let's take a look at the rupee. The rupee touched a new all-time low of 90.56 in early trade on reports of some big defense and interest payment yesterday. The rupee, however, recovered most of its losses mostly on dollar selling by traders and not just by the RBI. Lata Venkatesh is here with more on that. Lata?
Now, what we saw the early morning decline to 90.56, a bit of a shock because the market was expecting Reserve Bank to hold 90.50. What were the reasons? The reasons apparently are a spillover from yesterday and today. The fall we saw yesterday to 90.30 to even 90.40 was because of a large defense and interest rate payment going out. Today, that demand is apparently being replaced by oil companies' demand for dollars, making payments. Now, actually, in New York trading yesterday, that is after our markets closed in the offshore market, the rupee actually strengthened after this phone call between President Trump and Prime Minister Modi. The expectation was that there will be some strong announcements on the trade deal. But in early morning trades today, the same phone call became a reason to actually sell off the rupee or rather buy dollars, square off positions, because the phone call did not refer to the deal at all. It referred to several other things. So there was actually a bit of disappointment on that matter. Now, that said, there are two things that dealers are pointing to. The last 48 hours hectic move of the rupee or decline of the rupee. One is it is on very thin trades. As it is, as you come to the end of the year, the volume is low. Now people are not sure which way to trade. That also is reducing the liquidity. So it could be just, a 50 million moving out and the rupee could fall seminally because there is no support on either side. The second point dealers point out is don't look at the recovery from the 90.56, the rupee recovering to 90, 30, 35 thereabouts, as RBI pushing up the currency. Actually, RBI is hardly there in the market. This is exporters themselves, exporters, traders, domestic bankers themselves pushing back the rupee because there is no support on either side. Everything is happening on thin trades. We just have to be prepared for all this volatility.
Lata, thank you for that update. The currency depreciation continuing to remain that big talking point, but so far has not had a bearing on our equity markets, at least. Shifting focus to the primary market action now, ICICI Prudential AMC's IPO has opened for subscription today. The company has a 10,600 crore rupee offer for sale. It is the second largest AMC by size and the largest by actively managed AUMs with a market size of close to 13.5%. Its higher equity skew makes it more profitable compared to peers, and that becomes the key risk which the SEBI consultation paper has capped on the expense ratio. We spoke to the management on the key risks and a lot more. Listen to what they had to say.
I think this industry has been regulated brilliantly by SEBI all these years, and the best thing part of this is that our expenses have always been controlled, right? So if my BIPs are going down, over the years my BIPs have gone down. If what I charge to the fund, but what is going down, what I am charging to the fund goes down. As I charge lesser and lesser, as my AUM grows, I charge lesser. That is anyway there. And as I charge lesser, my product becomes better and better for the final investor. Because SEBI has said it's a consultation, come and talk to us. As MFI, we are talking to SEBI. The idea is to rationalize some of the charges, right? I don't think, even if there is an impact, I don't think it is that major in my mind.
Time for a CNBC TV18 exclusive. Sources are telling CNBC TV18 that the life insurance industry is working on a way to cut distribution and commission costs. Yash Jain is here with all of those details. Yash, what are you picking up?
Well, the life insurance as well as the general insurance industry have moved in a big way when it comes to cutting down the distribution as well as the commission cost incurred on the sale of insurance policies. Very recently, the Insurance Regulatory Board, that is IRDAI chairman, had met the CEOs of the life insurance company. He had expressed concerns on higher distribution cost, higher commission cost, and asked for suggestions when it comes to ways in which the commission cost or the distribution cost can be lowered from the current point. What we've been given to understand from our sources is that life insurance industry coming together has formed a 9-member committee. The purpose of this committee or the responsibility of this committee is to bring down distribution or commission cost. The committee, as far as which is tasked with the responsibility of bringing down commission cost, had its first meeting just yesterday, and there were many suggestions, as we understand from our sources, which were discussed. But there is one very important suggestion where there is a unanimous agreement in terms of the way which the life insurance industry wants to take moving forward towards cutting down commissions or cutting down distribution costs. Now, that way essentially taken by the life insurance industry is to ask for the regulator's permission to adapt a deferred commission model and not the upfront front loading of commission model. What is a deferred commission model? I'll just explain that with one example. If it's a term life insurance policy, the period of the policy is 20 years. The first year commission right now is approximately 40%, and then every year there is a renewal commission of 5%. What a deferred commission model would be is that this 40% which is paid in the first year itself could be deferred across the first 5 years, and that too only if the policy comes up for renewal, which means the 40% which is paid in the first year itself could reduce to as low as 8%, and the next 8% for the next 5 years would only be paid if the policy comes up for renewal. This is a unanimous suggestion which the committee plans to put before the regulatory body on December 18th. The committee is scheduled to meet next week again, where they would be discussing the finer details and the framework as far as deferred commission model itself is concerned.
Very interesting. Yash, stay on because you're also picking up something on a possible reduction in the expense of management for general insurers. Tell us more on that.
Well, I started by talking about how the life as well as general insurance industry have moved in a big way, towards taking that direction from IRDAI towards reducing distribution cost and commission cost. And just here, very recently, about 10 days ago, is when the IRDAI chairman met the CEOs of general insurance companies. What I've been given to understand from my sources is that the IRDAI chairman himself made a presentation talking about how the commission cost and the distribution cost, despite the GST cuts and their adjustments, still remains very high and needs to be brought down. In fact, what we've been given to understand from our sources is that IRDAI has asked for data for the last 5 years from every general and health insurance company when it comes to their cost of distribution as well as expenses of management for the previous 5 years. And in the same discussion, there were certain CEOs that we understand were of the view, and they suggested to IRDAI that the first step which the regulator should take is to penalize general and health insurance companies which are beyond the expenses of management limit, which currently stands at 30% for general insurance companies and 35% for health insurance companies. And the second suggestion, which also came from the CEOs to IRDAI chairman, was that the expenses of management limit itself should be reduced for vintage or old general insurance companies. The definition of vintage here, according to our sources, would be the companies which have been in operation for about 5 years. The expenses of management limit for these companies should be reduced from the current 30 and 35% by about 500 to 1,000 basis points, and should be brought down to about 20 and 25% for general and health insurance companies.
Yash, thank you for bringing us both of those exclusives. We'll get them up and running on our website very shortly as well, so you can read them in a lot of detail as Yash just explained. Take a short break. More news and updates follow on the other side. Stay tuned.
"26 years of CNBC TV18.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
26 years of CNBC TV18.
Welcome back. You're still with us on Business Lunch. Let's also get you some updates on the trade negotiations between India and the United States. Parikshit Luthra is here with all of those details. Parikshit, a call between Modi and Trump.
US Ambassador to India, Sergio Gore, has somehow put the context for the Modi-Trump phone call that happened last evening. He said it was a great call between two friends, and Prime Minister Modi reiterated India's support for Donald Trump's efforts to ensure peace between Russia and Ukraine. So clearly, there was a lot of discussion on the Russia-Ukraine war. When Prime Minister Modi and President Trump spoke yesterday, there was also reference to President Putin's visit to India for the 23rd annual India-Russia summit and what really was achieved there as well. Both leaders had a substantive and positive conversation. This is what our sources tell us. They discussed the entire comprehensive bilateral and strategic partnership. There was a discussion on trade, defense, security, critical minerals and energy ties as well. Both sides discussed ways to sustain the momentum on efforts to enhance bilateral trade between the two countries and take it to $500 billion as well. As far as the trade deal goes, we have seen how India has offered the best ever deal to Washington. This is something that Jamieson Greer has also said. In fact, according to certain media reports, the USTR has privately told certain senators that the 25% additional penalty on India for buying Russian oil could be dropped soon because India has stopped purchasing oil from Russian entities. And also, as we have seen, the imports from Russia of crude have also come down very significantly. We have been emphasizing to the US in every meeting that our energy imports from the United States have gone up almost 60 to 70% year on year. And going forward, US will be a major supplier of energy to India. So in this context, the talks have been progressing very well. We saw Rick Schweitzer, the Deputy USTR, also coming to India, meeting the Commerce Minister, meeting the Commerce Secretary. They held discussions on the legal contours of the bilateral agreement. But somewhere we are still waiting for Donald Trump to sign on the dotted line. Whether that can happen this month remains to be seen, but for the moment, there is no clarity on the timeline for the deal. According to industry bodies, the hope is that the average tariff rate would be 15%. This is something that Donald Trump and Prime Minister Modi have to agree on. And we will also have to see whether the recent measures and items raised by Donald Trump and the USTR regarding agriculture, whether those are included in the trade deal or not.
Parikshit, thank you for those updates. Just before we move on, you pull up Siemens. You can see the flashes on your screen. The company in its earnings call has mentioned that the digital industries business, the DI segment's margins will be sharply lower compared to what they had projected earlier. Now projecting 6 to 8% compared to 12 to 14% that they had earlier projected. They've also highlighted that the private capex that was seen during the months of November and December, it is difficult to say whether that will sustain going forward or not. And the concerns on the motion segment as the company is reevaluating its rail and motor capex as well. A sharp cut to the digital industry segment margins that now contributes to around 20 to 25% of Siemens' overall revenue. So the stock taking a bit of a knock now at the lowest point of the day, 3% lower, and get you more details on this as the day goes by. But for now, a sharp cut seen on Siemens. But speaking to CNBC TV18, Shireen Bhan on the 28th of November, Commerce Secretary and India's Chief Trade Negotiator Rajesh Agrawal had highlighted that two parallel negotiations were underway with the United States. Listen into what he had to say.
The assumption is that a trade deal will be beneficial for Indian exports only when there will be addressal of both 25% tariffs, not only the one which is a trade tariff which has been imposed on trade in lieu of the lack of trade deal, but also the other 25% tariff which have been imposed for some other geopolitical reasons. Until unless both are addressed together, it will not mean a meaningful deal for India. The stocks are still on, and it is because these are two negotiations also. There's a larger one also which is going on. So talks are on. Our teams are engaging virtually on a regular basis. There are virtual sessions every week on some issue or other. Just wait for some time. You may see the visits can happen either way, whether we visit them or they visit us. They were in pretty lockdown for some time, 45 days or so. Now they are out of lockdown.
On that note, it is time for us to head into a short break, but more news and updates coming up on the other side. Stay tuned.
"26 years of CNBC TV18.
Fly Emirates, fly better.
26 years of CNBC TV18.
Welcome back. Still at the 20 DMA is the Nifty. The Sensex also managing to hold on to gains, but the broader markets is where the action lies. A lot of stock-specific action taking place. But Arundhati and I take your leave on this edition of Business Lunch for the final time this week. That's the bigger takeaway. Midcap Radar takes the action forward on the other side. Stay tuned.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Good afternoon. Welcome to Midcap Radar live from the CNBC TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. High for the markets. We are actually at the day's high. 260 points higher on the Nifty. Mid-caps are outperforming. So are the small caps. The advance decline ratio absolutely in favor of the advances. Remains to be seen whether we continue at these levels or not, because last couple of trading sessions have been quite volatile.
Good afternoon, Sonal. Absolutely right. And also the end of the week. And that's something that we are looking forward to as well. Like you mentioned, green on the screen, but it's been a very volatile trading session, especially some of the stocks that we will be discussing going forward as well. But right now, the breadth is quite positive in favor of the advances. A lot lined up on the show, so let's start off with the top headlines. Stocks see some follow-through buying from Thursday with a healthy advance decline ratio after India's PM Modi calls Donald Trump. Metals and consumer durables are the big gainers, while FMCG stocks track. Broader markets upbeat.
Dixon Tech trades with gains as CLSA reiterates its outperformed rating on the stock. The brokerage maintains a target of 18,800 rupees a share, implying a 45% upside from current levels.
PI Industries trades under pressure after major client Kumai Chemicals forecasts a 5% fall in revenue and 32% operating margin decline.
And shares of Honasa Consumer trade higher as the company enters men's personal care segment by buying a 95% stake in Regional Men at an enterprise value of 195 crore rupees. Okay, those are the top headlines. The outperformance in mid-caps is something that we are tracking very closely. In terms of sectoral movers, of course, it's the metal index that continues to see an up move. That is the top gainer with gains of 2.5%. Some gains coming in from oil and gas and the PSU basket as well. There are few sectors, far and few, which are in the red. FMCG, for instance, is the top loser, down 0.5%. And PSU banking index is also giving it some company. However, there's not further losses from those levels that we are seeing currently, but a lot of movers in the broader markets that we'll be tracking and individual names that are seeing big reaction to news updates.
That's right. So, we just had a story, done by a colleague, Yash, talking about commissions as far as insurance companies are concerned, the entire insurance pack, as well as commission agent, which is PB Fintech, and so in focus on the back of that. But a very sharp downtick is what Siemens is seeing. Remember, Siemens today held its analyst meet that just concluded. The company has uploaded a presentation to the exchanges. Winnie joins in with key takeaways from this particular analyst meet. Winnie, take it away.
Hi, so absolutely key takeaways that have come in from this analyst day meet, not too positive. One, in terms of private capex, they said yes, it's still been muted. It's not a very sharp recovery that one has seen in the private sector capex. They're saying November, December, some recovery seen, but sustainability of this is going to be key to watch out for. The company will be keeping an eye out on that for the next 5 to 6 months. Other than that, they've highlighted that the electronics, battery manufacturing, solar cell, pharma side of the sectors, that has been doing well, and that continues to do well in terms of demand. Concern comes in why the digital industrial segment, or the DI segment as we know it as, those margins, they are expecting that to be in the range of 6 to 8%. Now, do not forget, last year it was in the range of 12 to 14%. So this is a concern that's highlighted by the analysts themselves as well, and this is going to be lower mainly due to some transfer pricing framework. So because of that, there is actually a lower operating margin, and DI segment accounts to 20 to 25% of their revenue mix. Even the motion segment, they said that, yeah, they're expecting margins in that 9.5 to 10% range versus 7.5%. But the concern here is that the company has said that there is some concern, and they're really evaluating their railway as well as the metro capex that are there. So analysts believe that they will not be able to sustain the double-digit margin that they are talking about. The sustainability over here becomes a concern as well. So key concerns coming in for the DI segment, motion segment, and no guidance that was given during this whole analyst day meet is a big concern for analysts, and that is why we're seeing that the stock has seen a fall as well.
A big fall at the day's low, 6% lower on Siemens as we speak. Thank you so much, Winnie, for bringing us all those details. That definitely is a stock to track very closely, post commentary coming in from the management. With that, we'll slip into a break. When we come back, we'll get to the management of Oswal Pumps on the other side of this break. Stay tuned.
26 years of CNBC TV18.
You want to talk business? Meet me in the Onboard Lounge.
Twenty-six years of CNBC TV18.
Welcome back to Midcap Radar. Well, let's now go to the management joining us on the show. Remember, Oswald Pumps yesterday informed the exchanges that they had won a 380 crore order from the Maharashtra State Electricity Distribution Company. We are now joined by Vivek Gupta, the chairman and MD at Oswald Pumps, to break down the details of this particular order. Thank you so much for joining us, Mr. Gupta. First up, give us more details about this particular.
Good afternoon.
Good afternoon, sir. First up, give us details as to the quantum of pumps you will be supplying, the timeline over which this particular pump supply has to be done, and what will be the revenue breakup for you from this particular order.
जैसे आपने देखा कि अभी कंपनी को करीब 380 करोड़ का ऑर्डर महाराष्ट्र स्टेट से मिला है और ये टाइमलाइन हमारे पास है विद इन 3 months वी हैव टू कंप्लीट दिस ऑर्डर. So, and continuously we are expecting more orders in coming months as well. and in this fiscal year. So ये जितने भी orders हम लोग लेते हैं normally 90 days से 120 days के अंदर हमें complete करना होता है, but this order was expected as early, so we have all the preparation already. So we are expecting supply within 2 months. We will complete this order within 2 months.
Okay, so you'll be completing the order of 13,738 off-grid DC solar photovoltaic water pumping systems in next 2 months itself. So all the revenues, what are the payment terms here? Usually when you do these businesses for governments, what is the receivable period? Do you have a fixed timeline, or is it phase-wise? If you can give us a sense of whether all that revenue will accrue in the next quarter itself.
Yeah, actually what happened, receivable cycle ये सब डिपेंड करता है कि हम लोग इंस्टॉलेशन करने के बाद हमारे जो पंप्स हैं उनका डाटा, जो भी लाइव डाटा है वो गवर्नमेंट के पोर्टल्स पे जाता है. सो गवर्नमेंट उस पोर्टल को वेरीफाई करने के बाद तकरीबन 90 डेज का डाटा गवर्नमेंट वेरीफाई करती है. सो आफ्टर दैट ऑल द पेमेंट्स रिसीव्ड. सो मोर और लेस ये जो पेमेंट साइकिल रहता है अराउंड 100 to 120 डेज का साइकिल रहता है नॉर्मली ऑफ द टोटल पेमेंट ऑफ 90%. सो ये साइकिल रहता है. इसमें बीच में कभी जैसे गवर्नमेंट ऑफ महाराष्ट्र भी रिसेंटली कुछ अपने इंटरनल गिनीज बुक ऑफ वर्ल्ड रिकॉर्ड्स में कुछ ज्यादा बिजी थी और कुछ रेनी सीजन की वजह से पीछे कुछ थी. अदरवाइज महाराष्ट्र गवर्नमेंट इज क्वाइट वेरी एफिशिएंट और बहुत प्रॉम्प्टली पेमेंट्स, उनका हिस्टोरिकली रिकॉर्ड इज वेरी गुड. और फ्यूचर में भी हम लोग बहुत अच्छा एक्सपेक्ट कर रहे हैं.
So so now that you're saying कि पहले नहीं हुआ क्योंकि गिनीज वर्ल्ड रिकॉर्ड में बिजी थी, then there were rains as well. So does it mean आपका अभी रिसीवेबल साइकिल थोड़ा स्ट्रेच्ड है? आपको 90 डेज से ज्यादा या 90 to 100 डेज से ज्यादा टाइम लगा पेमेंट मिलने में? How much higher was it? How much higher was it? And do you think it will continue now also for this particular order?
We are expecting receivable cycle will be very good in Q4. चूंकि Q2 और Q3 में कुछ रेनी सीजन भी था, कुछ ये गिनीज बुक ऑफ वर्ल्ड रिकॉर्ड भी था. सो ये सब फैक्टर्स कंसीडर की वजह से थोड़ा सा रिसीवेबल साइकिल हमारा स्ट्रेच हुआ है. अदरवाइज वी आर एक्सपेक्टिंग वेरी गुड साइकिल इन Q4 एंड सो ऑन.
So that will be 90 days is what you're saying.
It will be more than 90 days. It will be more than around 120 days at present. But slowly, gradually in Q4 and so on, we are expecting less than this.
Okay, got that, sir. Sir, currently, give us what is the total order book in terms of financials, in terms of actual rupees crore. By the end of FY26, where do you expect the order book to be at, and how is the current ordering pipeline?
Okay. अभी रिसेंटली जैसे आपने देखा कि 380 करोड़ का हमने ये ऑर्डर रिसीव किया है. एंड मोर और लेस डिफरेंट स्टेट्स लाइक कर्नाटका वी हैव गुड ऑर्डर. रिसेंटली वी गॉट स्मॉल ऑर्डर ऑफ MP and so on. Different states from Rajasthan, from UP, and we are even immediate expecting we are from Haryana. So order normally company एक लेवल तक भी रिसीव करती है ताकि वो 90 to 100 डेज में गवर्नमेंट के टर्म्स के हिसाब से उस ऑर्डर को एग्जीक्यूट कर पाए. अदरवाइज अगर हम ज्यादा ऑर्डर्स एकदम से रिसीव करते हैं सो हमारे लिए एग्जीक्यूशन वो टाइमलाइन से बाहर हो सकता है. सो दैट वी हैव ऑलवेज किया. सो रिसेंटली वी आर वेरी श्योर कि अभी हम अगर बात करते हैं कि इस फिस्कल ईयर के लिए हमारे पास ऑर्डर बुक एनफ है और जो हमारे कंपनी के टारगेट्स हैं इस फिस्कल ईयर में उसको लेके कंपनी को कोई कंसर्न नहीं है. दैट वी आर वेरी श्योर.
सर, और ये टारगेट्स क्या है सर?
टारगेट्स जैसे हम लोगों ने इंटरनल टारगेट दिया है कि लास्ट ईयर से हम लोग करीब 50% के करीब हम लोग पंप की इंस्टॉलेशन ज्यादा करेंगे और ग्रोथ लेंगे. सो उसी टैग रिकॉर्ड में उसी सिस्टम में कंपनी ग्रो कर रही है. अगर हम अपने 2 क्वार्टर्स के रिजल्ट भी देखेंगे तो अकॉर्डिंगली कंपनी ने वैसे ही रेवेन्यू में परफॉर्म किया है.
So, Mr. Gupta, coming back on the collections, because you said it was stretched right now, what is the net working capital days that you have? क्योंकि अगर पैसा टाइम पे नहीं आ रहा, is it impacting execution? आपके पास orders भी bunched up है. Do you think the delay in collections will impact your possibility or execution capabilities and the funding capabilities as well?
Not yet, लेकिन definitely देखिए अभी तक जो कंपनी के पास कैश फ्लो है और कंपनी जिस डायरेक्शन में काम कर रही है और कंपनी को बहुत इमीडिएट एक्सपेक्टेशन है कि गवर्नमेंट से बहुत जल्दी फंड गवर्नमेंट रिलीज करने वाली है, और कुछ फंड्स महाराष्ट्र गवर्नमेंट ने इमीडिएट रिलीज भी किए हैं. इनफैक्ट 2-3 दिन पहले कुछ फंड्स रिलीज भी किए हैं, और रिसेंटली वी आर एक्सपेक्टिंग मोर रिलीज इन कमिंग.
Can you give us an amount, Mr. Gupta? How much is pending?
मतलब वैसे तो करीब गवर्नमेंट ने 600 करोड़ रुपए करीब टोटल रिलीज किया है अमंग ऑल द वेंडर्स.
Out of which आपको कितना आया है?
हमें एग्जैक्ट फिगर आई डोंट हैव राइट नाउ, बट आई थिंक इट इज मोर देन 50 करोड़.
And how much is pending? 50 करोड़ आया है, ये 380 करोड़ का ऑर्डर है, कितना बाकी है और मिलना गवर्नमेंट से?
गवर्नमेंट से, महाराष्ट्र गवर्नमेंट से टोटल आउटस्टैंडिंग आई थिंक मे बी 500-600 के आसपास की टोटल आउटस्टैंडिंग है जिसमें. सो बट उसका बहुत पंप्स ऐसे हैं जिनका अभी टाइमलाइन पूरा नहीं हुआ है, जो साइकिल टाइम है, जो डाटा का कलेक्शन है. सो आई थिंक विद इन ए मंथ टाइम वो डाटा होगा तो ग्रेजुअली गवर्नमेंट पेमेंट रिलीज करनी शुरू कर देगी.
Okay, Mr. Gupta, one more question. Typically, in these cases, ऑपरेटिंग लेवरेज के कारण हम लोग जनरली देखते हैं हायर पंप इंस्टॉलेशंस के साथ EBITDA margins also go higher. However, in your case, H1 on a year-on-year basis, EBITDA margins have dipped. तो FY26 एंड क्या margins रहेंगे and why have margins fallen?
देखिए, मार्जिन्स फॉल होने का एक रीजन ये रहा है कि टेंडर्स में कुछ कंपटीशन आया है पिछले टेंडर्स में, और ये एक्सपेक्टेड कंपटीशन था. प्राइस कुछ स्लैश डाउन हुए और इट वाज एक्सपेक्टेड बाय ओसवाल पंप्स. तो ओसवाल पंप्स ने बहुत कोशिश की है, उस पूरे इफेक्ट को न्यूट्रलाइज भी काफी हद तक किया है, और कुछ इफेक्ट हमारा Q2 में वन टाइम था जो हम Q3 में रिकवर कर लेंगे. बहुत बड़ा इफेक्ट हम लोगों पे नहीं आया. अगर आप ब्रॉडली देखते हैं तो 1-1.5% का इफेक्ट हमारे पास आया. तो आने वाले फ्यूचर में ओसवाल वैल्यू इंजीनियरिंग पे बहुत काम कर रही है, और ओसवाल को ये बहुत अच्छी एक्सपेक्टेशन है कि अपने जो प्रॉफिटेबिलिटी है इसको सस्टेन कर पाएगी.
Okay. All right, Mr. Gupta, thank you so much for joining and explaining this order win for us, for our viewers, and the outlook going forward as well. That's the word coming in from Oswal Pumps. They have won this order, but important to note, the receivable cycle is quite stretched, and they did indicate that 500 crore rupees of receivables are pending from the Maharashtra government from previous orders. So the collection efficiency is something that we'll be tracking very closely, because that ultimately is the other important metric to track for any business. We'll slip into a short break now. When we come back, we'll get you more on the markets and stock specific action. Stay tuned for that.
"26 years of CNBC TV18.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
26 years of CNBC TV18.
Welcome back. You're still tuned into Midcap Radar. In an otherwise strong market, one stock which is lower in trade is PI Industries. Our colleague Ria is joining us to tell us what really happened here. Ria.
Well, yes, PI Industries is down roughly 2.5% in trade today after a major client of the company called Kume Chemicals has revised its FY26 guidance. They have lowered their guidance for the year. The revenue is forecasted to drop by around 5% and the operating profit is going to fall roughly 32% as per the company. Now, let's understand why this matters for PI Industries. So, Kume Chemicals is the biggest customer of PI Industries and the company supplies a molecule called pyroxasulfin to Kume Chemicals, which they then brand and sell as Axiv, as a herbicide called Axiv. Now, pyroxasulfin is estimated to contribute roughly 40% to PI Industries' total sales, which is why this can have a big impact on the company's sales going ahead. Now, on the back of this, 361 Capital has come out with a note on the company. They have a buy rating on PI Industries with a target price of roughly 4,217, and they have highlighted the outlook that has been given by Kume Chemicals. In the overseas market, the group is expected to continuously expand and maintain their sales of Axiv, but in order to enhance their price competitiveness, they are also going to be reducing production costs. So as per 361 Capital, they believe that Kume's lowered guidance shall have a negative bearing for PI for their FY27 estimated sales for pyroxasulfin, and additionally Kume's renegotiation of ingredients and raw material pricing with suppliers may also impact pricing for pyroxasulfin going ahead. So in the short to medium term, this remains negative for PI Industries until new products in the CSM category scale up materially. So overall, this is negative for PI Industries, which is why the stock is taking a hit in today's trading session.
Well, thank you so much, Ria, for joining us and explaining to us what's caused the downtick as far as PI Industries today is concerned. Well, with the news that the Midcap Index up almost 1% and the market is in the green, we take your leave on this edition of Midcap Radar. Your stocks when we return.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Now, this is a show where we solve all your stock-related queries. Before we jump to the queries, let me just take a quick look at what the market is doing. 26,030, around that level is what the Nifty is trading at, like you can see over there at the screen for you all as well. Now, almost near the day's highest point, 130-point uptick is what we're seeing for the Nifty 50. Broader end of the market, let's pull that up. The Nifty mid-cap, small-cap managing to hold on to good gains in today's trading session, somewhat outperforming the benchmark indices as well. Nifty mid-cap is trading at the day's highest point, so that is interesting to watch out for. Small-cap also 0.8% of gain coming in there. Nifty banks managing to hold on to some bit of a gain, and Nifty IT that was trading in the red for a bit has also come back to the green side. So keep an eye out on the Nifty IT as well. Like you can see, it's up 0.2%. We have PNB housing. We have some flashes coming in at the bottom of your screens for you all. The board has approved appointment of Ajay Kumar Shukla as the MD and CEO. This is going to be with effect from 18th of December for a period of 5 years. And post that, we've seen that the stock has seen a very sharp spike up in the trading session. This is coming in after the board has approved the appointment of Ajay Kumar Shukla as the MD and CEO for PNB Housing Finance. So important update there. Keep an eye out on that one as well. A lot of individual movers surely are there, whether you look at it coming in from the cap goods space. Transformer rectifiers is buzzing in trade. Thermax is holding on to gain. Siemens Energy on the flip side, Siemens, I beg your pardon, on the flip side is actually trading with cuts today because of the analyst day takeaways that have come in as well. We'll keep an eye on all the stocks, but let's get started with the stock-related queries for today. And we have our experts joining us. First up, we have Shaina Mukadam, who's an independent market expert, as well as Ashish Kyal, chartered market technician, as well as author at Wave Strategy Advisors, to answer all those queries. Let's get started with the first query for today. We have Korean who's writing to us from Kochi. He's holding 1,730 shares of Embassy Office Park REIT at a price of 284 rupees per share, making a profit on this one. He's saying that can he hold the shares for a 3-year time period from now as well? And he's also looking to ask whether he should add more or just book his profits now. Shaina, good afternoon, and what's your view on this one?
Good afternoon, Vinny, and everyone else also, to your viewers also. See, I would suggest that he can continue to hold and he can also add, because recently, as you know, there are some changes in terms of SEBI now allowing REITs to be added to mutual fund portfolios. And I think that would increase the liquidity and the demand for REITs. And Embassy being the largest, I think it would benefit. Also, if you see, their guidance is pretty strong. They have got about 7.2 million development pipeline, and which should actually enable them to show a good growth in the second half. They are doing pretty well. Even in the first half, they've done pretty well. So I would say it is a hold, continue to hold.
Okay, continue to hold for Embassy REITs. Ashish, what's your view for Embassy REIT?
See, the overall chart looks to be decent. It has been moving on the upside. The only concern remains is the volume, because the volumes have been very timid. So just from the liquidity perspective, if he holds a lot of it, exiting can be a little challenging. So just keep that in mind. But the overall stock pattern the overall REITs pattern looks to be bullish. And I think 429 is an important support. We can expect it to move towards the level of 470 or maybe higher levels.
Okay, we'll keep an eye out on those levels over there for Embassy REITs. Let's move on to the next query for today. We have Mukunda, who's writing to us from Chennai. He's holding 4,215 shares of Kalyan Jewellers. Price is 497 rupees per share. So the buy price is slightly above the current trading price for Kalyan Jewellers. Now, in terms of the other stock they have a query on is JSW Infrastructure. They have 2,154 shares, and they bought this at 287 rupees per share, so they're making a loss on this one as well. Both on the fundamentals and technicals, he wants to know what is the investment journey from here on. Should he continue to hold this? Shaina, both the stocks, what's your view?
See, he can hold both the stocks if he's holding it for the long term. Basically, I think for the short or medium term, valuations are looking slightly on the higher side for both of them. If you look at EV by, let us say EV by EBITDA, if you're looking at it for a FY27, both are around 20 times. So it doesn't make it cheap and it limits the upside in the shorter to medium term. Having said that, after this huge decline that Kalyan Jewellers saw, in the last couple of quarters, as of now, the fundamental performance is improving substantially also. And so it is supporting a bit of consolidation, I would believe, and it will stem the downside from here. If you saw the last quarter numbers, they were very strong. In fact, first half, they have done a growth of in turnover. They are showing a growth of 30% plus and a 70% plus in profits. So I would believe from here on, given that they are adding stores in a very big way, it should, consolidate. Maybe you could see some time-wise correction in price, but I think it will bottom out at around current levels. To add, I would say add at lower levels, not currently. Similar story. In fact, I believe JSW Infra may give you a much longer period of consolidation than Kalyan Jewellers in terms of price, because there I think the performance has been a bit subdued. While they are consolidating the overall business, the port business, recently they have actually, they are going to invest or consolidate their subsidiaries in railway lines. They're going to spend, I think, around 1,200 crore plus. That is a recent announcement. So it is going to take time. I would say give it another 1 year to see any major upside in the stock. But if you're a long-term holder, it's a very good group and it is going to grow in terms of their port business. So you could hold if you're a long-term investor. If you want to add, I would wait for a couple of quarters.
Okay, long-term investor, then you can hold JSW, and if you want to add, then wait for a few quarters. On the technical front, Ashish, for Kalyan Jewellers as well as JSW Infra, what should they be doing with both of them? Continue to hold, average, or just book out the losses? What's your view?
The overall Kalyan Jewellers has not done much since almost a year now. And the stock is still trading at around 478 levels. The lower end of the range has been 444 and the upper end of the range had been around 540, 560 levels. So I think it's moving in a range. It's right now bouncing back from the lower end of the range. So my suggestion would be hold on. We can expect it to move towards the level of 540 or 560, where he can look forward for exiting the position. As far as JSW Infra is concerned, we have seen some sharp correction from 350 levels. The stock made a low of around 260, but now showing some signs of recovery, managing to now break above that 20 days moving average after a long time. So hold on over here, maintain a stop loss on the downside for JSW at around 255, and then expect it to move or retrace towards the target of around 300 levels.
Surely we'll keep an eye out on those levels over there. Let's move on and talk about the next stock query for today. We have Siva Raman, who's writing to us from New Delhi. He's holding 1,475 shares of NLC India. Price is 280 rupees per share. Wants to know whether to hold or sell, or what should he be doing with this now? Your view on this one, Shaina?
Vinny, the stock has been consolidating for quite a few, months. I would say somewhere about 1.5 years. It's a PSU mining company, and the government holds about 72% equity in the company. Now, having consolidated for so long, as well as seeing the performance, if you see the last quarter, they did very well. Both in terms of top line growth, in terms of profit growth. So I would believe that given the fact that they have got a good they have got coal mines, and especially they're getting more. They're going forward in further tenders. They're getting more coal mines. They are also going into renewable energy. They have got good joint ventures, good tie-ups with other PSUs. So I would say at current levels, continue to hold valuations. If you see, it's not too expensive. They've corrected now. After this correction, it's just about 7 times if you look at it in terms of EV by EBITDA, FY27. So I would say hold, and then you can review what you want to do about it in a couple of months.
Absolutely. And just note for our viewers as well. We did have NLC India speak to us today as well on CNBC TV18 about that Gathampur plant, Unit 2, which was a long-awaited one. And, quite positive commentary coming in on that front as well. They said that this unit will be operational very soon as well. Unit 3 will be operational very soon as well. And they expect FY26 overall Gathampur contribution to be somewhere around that 4,000 to 4,500 crores. So will be interesting to watch out for, where this is headed as well. But yes, keep an eye on this one. NLC India on the technicals, what's your view there, Ashish?
The stock has corrected again from around 290 odd levels, made a low at 230. But 230 is a very important price action area, because this is where the stock has formed a very strong base earlier in the month of June, July, August. And there is a possibility we might start seeing a reversal upside from here on. So hold on is the suggestion. Maintain a stop loss of 229 here, and we can expect it to move towards the level of around 265 on the upside.
Okay, we'll keep an eye out on those levels over there for NLC India. But on that note, we're actually going to slip into a very short break, viewers. Don't go anywhere, because we're going to be continuing with all those stock-related queries on the other side as well. Stay tuned in.
"26 years of CNBC TV18. "26 years of CNBC TV18.
Welcome back to your stocks on CNBC TV18. Nifty has moved up a bit further. 26,040 is what the Nifty is currently trading at. Day's highest point for the Nifty 50. But let's keep it going then with your stock-related queries. And the next query for today is coming from Santosh, who's writing to us from Kochi. He's holding 20 shares of Supreme Industries. Price is 1,950 rupees. So he's made a good profit on this one. He's a long-term investor. Wants to know if he can add more shares at the current levels. Shaina, your view, he's looking to add more. He's making good profits on this one. Should he add more for Supreme Industries?
No, I would not advise adding at current levels. In fact, I would say he can book some bit of profit, half profit, wait for the stock to, the financial performance to settle, and then he could look to add, not at current levels. Basically, if you saw the performance, they have made, they have made a loss. The numbers their profits have come down substantially, and turnover has been like mildly positive. Basically, the competition is intense. They have higher expenses, which is impacting their EBITDA margins. And I would say while second half could be better because they have made an acquisition of Wavin. So they are actually, it's a company called Wavin, and they are looking to, add on their pipe business through this acquisition. So second half volumes also could be better. That is what the management is guiding. But I would say wait for the numbers and then you can add. Do not add as of now.
Okay, do not add as of now. Let the numbers start showing again and then you can look to add. You know, if you look at the stock also, that's been down in the last 1 year as well. It's down almost 35%. Ashish, your view, if the investor is looking to add more, what is the level that maybe they can look to start adding?
See, the stock has been in a downtrend and it's not stopping anywhere. There is no loss of momentum also on the downside. There is a support, prior price action support at 3,100, but my suggestion would be to avoid adding because when we can see that Nifty is nearing the lifetime high level, this stock is nearing towards its 52-week low. That's not a very, very positive sign from a relative strength perspective. So avoid adding anything here. Rather maintain a stop loss or book out of existing position is what my suggestion would be.
Okay, that's a view there coming in on the fundamentals and the technical front. Let's move on to the next one. We have Kiran Sridhar, who's writing to us from Chennai. He's holding 500 shares of Interglobe Aviation, bought it at 5,711. And obviously, you know, the recent news flow that has come in, so he's a bit concerned about it. Now, he's asking whether he should continue to hold the stock for the long term or should he just get out and book his losses. Shaina, your view?
You see, in my view, airline stocks are always best. You have to follow technicals. In terms of fundamentals, if you sort of invest and then forget about it for the long term, you could be caught at the wrong end. Now, for Indigo, I would say it's better to actually at least book half the loss. He's making loss because we do not know what is the impact of the current crisis on the profits. It is going to be negative. But what is the impact? Finally, we will know only after 1 or 2 quarters the exact impact. There are a lot of issues that are surrounding it in terms of negativity. So I would say book half loss.
Okay, book half the loss. That's the word there. And on the technicals, Interglobe Aviation, what should they be doing now with this one?
We can see a very sharp correction over the past few days given the event that has been ongoing. And the low which was formed was around 4,640, post which it showed some kind of recovery since yesterday. So maintain a very strict stop loss of 4,640 because usually when there is an event and there is a low formed and a bounce back, that low becomes very, very crucial. So maintain stop loss of 4,640. There is possibility we might see some kind of a recovery, but if that level is broken on the downside, then exit from the stock.
Okay, keep an eye out on those levels over there for Interglobe Aviation. Let's move on to the next query then for today. We have Sankara Narayan, who's writing to us from Telangana. He's holding 75 shares of CAMS. This is at a price of 794 rupees. He's a long-term investor. Wants to know whether he should continue to hold the stock or even look to add some more. CAMS, what's your view on this one, Shaina? The stock is trading around their buy price, slight bit of a decline from there. What should they be doing?
Yeah, I wouldn't suggest to add at current levels, maybe lower levels. He can look to add. Of course, it's got 68% of the overall MF AUM business. So it is a good long-term hold. Majority of the holdings is with FIs. So they, they could always look to add, book some profits. So you have to be careful for your buying price if you want to make good money in the short or medium term. Longer term, I think it is definitely a decent stock to hold. Even if you saw the last quarter numbers were very healthy. So I would say hold at current levels, but add only at lower levels.
Okay, add at lower levels. That's the word coming in there on CAMS. Continue to hold otherwise. Ashish, your view for CAMS as well. Would you suggest they add right now? And if at a lower level, which is that lower level that they should be watching out for the long term?
See, the low level on the stock is at around 725 levels because that's where it has bounced back nearly 3 times now. And if it comes back there, then possibly use that as an opportunity to add. I think the overall the stock should start performing, should reach towards the level of 850 on the upside, and it is just in a range. So give some time to it. 850 can be the near-term target, and 725 is the level to add on more.
Okay, 725 is the level to add on to more if you're looking at that level over there. So that's the levels for CAMS. But, that was the last query for today. Ashish as well as Shaina, thank you so much for joining us as always. Hope you all have a great weekend. And viewers, thank you so much for tuning in as always. Before we actually wind down, I just want to take a check in terms of the market because 26,040, 50 around that is what the Nifty is trading at. Now up almost 140, 150 points in the trading session. Good recovery that's seen for the Nifty IT as well. Nifty Bank managing to hold on to good gains as well as the broader end of the market, which is doing well. Midcap holding on to gains of almost 1% around that mark for the Nifty midcap as well as a small cap also around that 1% mark. Transformers and rectifiers, there's no stopping that one. Now it's up 13%. So let's watch out for that stock as well in the trading session. Obviously, no specific news flow there, but today that's a stock that's buzzing away in trade. But with that, we'll wind down this edition of Your Stocks. Thank you so much for tuning in. Last hour of trade is still left, so do stay tuned in for Closing Bell, which is up next.
"26 years of CNBC TV18. to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC TV18 Motilal Oswal studio. "26 years of CNBC TV18.
The benchmark indices of South Korea and Japan respectively trading with gains of over 1% each.
Could make a landmark and historic trade deal that would be to the benefit of both peoples.
The 20-day for the Nifty is at 26,021, and we are, of course, under it as of yesterday. Nifty Bank is starting with about 1/3% gain. That's about 190 points.
Broadly, on industrials, I mean, we like the space because the government's focus on creation of infrastructure, we think, is likely to continue.
Right, we are only 1/3 of the banking industry today, and our products are reasonably good for the final investor.
It has been a 4% of a gain overnight, and this is trading at an all-time highs of $64.32.
The shift is happening gradually from backhoe loader to the mini excavator because of the advantages which the product category enjoys.
Sergio Gore, the incoming US ambassador to India, has given more flavor to the negotiation.
We have 1,800 stocks which are advancing as against 900 stocks which are declining.
The reasons apparently are a spillover from yesterday and today.
The outperformance in mid-caps is something that we are tracking very closely.
Good looking 135 points higher. That is the latest rate on the Nifty. 26,030 is where we are at. This is Closing Bell. We're coming to you from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Rima and Surbhi. Good afternoon.
Hi. It is turning out to be a Friday, right? That's what Rima said in the morning. And in the morning, we were complaining that this phone call is not causing any excitement. But I think now it's been slow and steady. So touch wood. So far, so good.
And market breadth is good. I mean, 2:1. Actually, for the second day running, the market breadth is better. And even the composition of what is moving up. Yesterday, actually, the problem was market breadth was better, but they were kind of random, stocks. You don't really show up. They don't show up on the screen, not well owned. But today, it's a much better, healthier, deeper kind of, broader market strength. So that is good news as well. I mean, just the kind of stocks which are moving up is good to see. So, of course, we'll talk about individual names. So let me just quickly actually tease out what's coming up here over the next 60 minutes or so. So you've got markets which are very much, of course, in focus. We'll have 26,000, which is back on the Nifty. Metals are leading the rally. Real estate counters are, of course, also following closely behind. Mild pressure seen in FMCG, PSU, bank counters. Siemens is a stock we want to focus on in a bit. So they are now pegging Digital Industries margin between 6 to 8% as opposed to 12 to 14% earlier. Stock's down 4%. And management is highlighting a largely muted trend in private sector capex, making it tough to peg sustained momentum following that pickup in the months of November and December. There's a brokerage upgrade on Goldman on L&T, and the stock is up about 2%. As we are coming in, I think there's also CLSA, which is talking about Dixon. Dixon is the other one, which is also up about 2.5% the last I checked. So that's the lineup. There is, of course, the CNBC TV18 exclusive, which we will get with Yash as well, which is a big one, actually, for insurance companies, and especially on the distribution and commission side. Names like PB, etc. should be in focus. So that's the lineup here over the next 60 minutes or so. How should you position yourself is the question. Mitesh is with us with that insight. Mitesh, good afternoon. Good to have you here. Comfortable going with long positions into this Friday?
Yes, very much, Prashant. The idea is that one, we are above that exponential 20-day averages, etc., which are at about 25,950, 940 levels, and sustaining about that. We've held the day well. So I think, we might actually be heading towards 26,200 in a good case scenario, the recent all-time highs of 26,325. So these are the two targets on the upside. Though I don't have a clear sign of a breakout as yet, I think, a retest looks very much on the cards. On the stock side, buy on Dalmia Bharat. I think, cement stocks are doing well, and that's where, some kind of reversals are happening from support levels. So Dalmia Bharat is a buy with a stop at about 2030 and a target of around 2150. And the other stock which I have on the buying list, just a minute, I think, is Aurobindo Pharma. Aurobindo Pharma also, after a pullback appears to have reversed. So buy here with the stop at about 1180, which is below it, and target of 1240 can be looked at.
Mitesh, just one more name. Hindustan Zinc is the #1 volume-led gainer on the NSE. It's taken out its June high, a June 25 high, which was about, I think, 540, 545 or so. Stock's at about 562. It's a breakout you can trust. Is there a trade here?
Hindustan Zinc, has been a recommendation of mine. In fact, the breakout is very much on. Yesterday, we kind of booked profits, and that's on the sister channel of yours, which is Money Control, at a target of around 530 to begin with. I think that's been met, and the stock continues to rally. I think, very good chance that this rally could see possibly stock head towards levels of around 610, 615, which is where, we had an intra-week pivot at in the month of August of 24, and then even 660. So I think very positive still. And now I think, the way to buy is to wait for some kind of pullbacks to happen and then buy into this one.
Yeah.
Okay, by the way, some more counters doing well. So with Hindustan Zinc, even Hindalco and Nalco have hit fresh all-time highs. In fact, the entire metal complex, the metal index is up 2% so far this week, outperforming the benchmark indices by nearly 2.5%. So that's a pocket doing well. And EMS companies like Akanes, that's up 5%. PG Electroplast also seeing short covering for the second consecutive day. And capital market plays. The capital market index was up 1% yesterday, and it's followed it up with more buying today. And the Nifty capital market index has gained another 1%.
Yeah, absolutely. And some of these names on the metal side, even something like a Hindustan Copper, because the conversation in markets now has come around to how copper and aluminum are likely to sustain their positive trends, just in terms of pure industry dynamics, demand-supply dynamics. And that seems to be having a big rub-off effect. And then, of course, there is the silver rally that's helping something like a Hindustan Zinc. Anyway, some more names. Keep BHEL on your radar as well, with a couple of these brokerage upgrades that came in. Some of the industrials, BHEL, Thermax, L&T, a lot of these stocks are having a good session as well. And we'll talk more about it as we go along. But now, as promised, let's get you that exclusive story. Sources are telling CNBC TV18 that the life insurance industry is working on a way to cut distribution and commission costs. Let's go to Yash. Yash, what exactly are you picking up? Because we know that commissions, in the insurance industry are very high compared to, say, the mutual fund industry. So what exactly is being considered now?
Well, that's correct. The difference is quite huge when it comes to the commissions in the mutual fund industry versus the insurance industry. And what we've been given to understand is that the chairman of the insurance regulatory body, that is IRDAI, had separate meetings with insurance companies, life insurance CEOs as well as general insurance CEOs. And at both forums, one thing which was made very clear to the CEOs is that the insurance commissions or the distribution costs continue to remain very high in both life as well as general insurance industry. In fact, he had asked for both sides of the business, that is general as well as life insurance industry, to give views in ways in which distribution costs and commissions could be brought down. Both sides of the industry have moved towards doing that exact same thing in terms of suggesting ways in which insurance distribution costs can come down. Speaking about the life insurance industry first, what we've been given to understand is that the industry has formed a 9-member committee on ways to bring down commissions as well as distribution costs. This particular committee of 9 life insurance CEOs met and in fact had the first meeting just yesterday, where a series of measures were discussed in terms of how these commission costs can come down. But there was one measure which was which found the vote of confidence coming in from all CEOs unanimously, and that was to take the IRDAI's approval towards moving on a deferred commission model. Now, currently, it is all about front-loading commissions. I'll give you an example. If it's a term life insurance policy spanning across 20 years, the first year of the policy, the commission will be about 40%, and then second year, about 5%, third year, 5%, depending on the renewal. What the insurance industry seems to be suggesting and wanting IRDAI's approval is to split that 40% itself across 5 years, which means just 8% in the first year, and then only if the policy gets renewed in the second year, then another 8% and so on. Otherwise, stop at that 8% itself. The insurance industry is likely to give this suggestion to IRDAI on December 18. The next next meeting is supposed to happen next week, where the industry would discuss details and final regulations of this deferred commission policy.
Got that. Yash, thank you very much for that. So that is live, right, Yash, in terms of the deferred commission, which is being proposed. So life insurance, this committee is proposing it. They'll have to take it up to IRDA, and it's up to the IRDA to approve it or not.
Correct.
But as you said, there is consensus. It was a unanimous suggestion in that sense. For general insurance, which includes, of course, health insurance as well, I mean, there is also the sort of same kind of pressure from IRDA to lower commission. So what's the plan here?
Well, Prashant, as I said, both sides of the business, the life and the general insurance industry, have moved in their own ways to look at reducing commission. As far as general insurance industry is concerned, the regulator had a meeting with the CEOs there as well. In fact, I've been told by my sources that the IRDI chairman himself made a presentation to the CEOs presenting how the distribution cost or the commission cost is very, very high despite the GST changes, and them being adjusted in the commission. It still remains to be high according to him. And there were various suggestions which were given to the IRDI chairman. One of them was listing companies and asking them to list, but according to the chairman, that wasn't a viable suggestion. But one suggestion which came from a few CEOs in the same meeting was that first thing, penalize the companies which are currently, doing above the expenses of management limit, which is 30% for general insurance companies and 35% for health insurance companies. And second thing, for vintage companies or old companies, essentially companies which have spent more than 5 years in business, the EOM limit should be brought down by about 500 to 1000 basis points, taking it from 30% to 25% or 20% for general insurance companies, and 35% to 25 to 30 or 25% for health insurance companies. Bringing down the cap on EOM limits would itself, according to the industry, bring down the underlying distribution of the commission costs.
Okay, Yash, thank you very much for that. So, message is clear from the regulator. I mean, they want this done. Lower distribution, lower commission costs, and better pricing for buyers of insurance products. Dharmesh Kant is with us, Head of Research, Voda Securities. Dharmesh, it's good for, of course, insurance companies if this gets done. Of course, it's bad for distributors. Any stock implications as you see it?
Yeah, good afternoon, Prashant. I mean, PV FinTech will react negatively to this kind of a news flow. And already there are too many push and pulls happening around the insurance segment. So eventually it's good for, insurance companies, definitely, yes. And even good for consumers of insurance products. So as a basket, we have always been recommending insurance company, and there our topic remains LIC Life Insurance Corporation of India, followed by SBI, HDFC, and ICICI Pro Life. So this basket, I mean, you have to play out with for a long-term perspective. Insurance, only the caveat is it's not a trading play. It's not 1-2 quarter kind of a play. If you are getting into here, then please stay invested for 3 to 5 years to have a meaningful returns.
Okay, all right, got that. Dharmesh, stay on. More questions coming your way. Like I said, today there's plenty of news on industrial stocks. There are brokerage upgrades, and then there is Siemens, which is in focus. They held an analyst day. Let's find out what the takeaways are. Vinny, run us through.
Hi, good afternoon. So Siemens, first in terms of the key takeaways, overall, they're seeing private sector capex. That has not seen as much of a uptick as one was expecting. Still muted. November, December, though, there are some green shoots that have come in, but it will be key to watch out for in the next 5-6 months whether this continues. And it becomes an important part for them because the digital infra side and industrial side of their business, which accounts for 20-25%, it's largely dependent on this private sector capex as well. So that is key to watch out for there. Apart from that, they've said electronics, battery manufacturing, solar cell, pharma, all of them are doing well in terms of an uptick or demand there. Digital infra DI segment, like I said, that is something where they said the margins are expected now to be in the range of 6 to 8%. Do not forget, in the September quarter number, which they reported as well, the margins were almost in that 7-8% range itself. But versus last year, that's come down, right? It was 12-14%, and now they're expecting the 6 to 8% range. So it seems like analysts were not too happy with that situation. Other than that, what analysts are highlighting that the motion segment, they believe margin expansion will be seen there, 9.5 to 10% range over there from currently 7.5% going forward. But the concern over there, or the challenge that comes in that segment, is one in terms of high inventory build-up that is there. They are expecting some delays that could come in from the Indian Railway side. and the company is reviewing and re-evaluating their capex plans on that front. So that is something that is a bit of a concern that analysts are highlighting going forward for the company. So that is the second challenge over there. And the third one is that the company has not given any guidance this time in this analyst day. So the street is not too happy with that situation, and that is why the stock has seen a fall. Overall, the smart infra side of their business, which accounts for 53% of their revenue in FY25, there the analysts have highlighted that they're expecting high teens to 20% growth. So not a concern on that front, but the DI segment and motion segment, a bit of a concern that comes in there.
So DI is 20-25% of the overall revenue. And what about the motion?
Same, 20-25 in that range approximately. So motion and DI account to 50% of their business, while smart infra side is the 53% of their range.
And smart infra is okay?
For smart infra, there is nothing in terms of a cut there. But the DI segment, and the concern comes in that the motion segment, you may not see that much of railway orders or re-evaluating the capex plan is that worry that has come in there.
Okay, thank you very much for that. Dharmesh, did anyone in your team attend the Siemens Investor Day, and what were your key takeaways?
Yeah, Riva, one of the analysts did attend the call, and there are too many analyst calls happening these days. And the problem with most of the analyst call is, and none of them are giving the guidance or the future outlook. They are just talking about the general business as on ground, and that is not very, encouraging. That's the takeaway which is coming. Siemens quarter results were bad. Even ABB was not that great kind of a result in the Q2. And the railway infra has been a concern. Last 2 years, even the railway budget allocation has not been there. Execution has been a problem. And we have seen that kind of a result trickling into, say, Incor Infra, Incor International, for example. If you see the results, they were not that great. Execution has been a problem. Private capex on the power renewable and thermal, both has been seen a problem. Government has, 43 gigawatt of renewable power capacities put under scanner. So that again clouds the future growth trajectory. At the same time, thermal, the expansion, the pace of expansion has not happened the way it was likely to be there. So basically, in Siemens, largely cater to these kind of sectors. And 50% of your business, if it's not doing well, it's always a concern. So, I mean, the better part is to stay away till, this there is a pickup in the general economy. And this, if you corroborate with, nominal GDP growth of 8.7%, GST collection of 0.7%, and IP growth of 0.4%, followed by factory output 3.7%, all falls into one line that the infra economy, the infrastructure side, is not doing that well. Maybe a part of consumption has picked up, but it's not a 360-degree kind of a view on the economy which has been doing well.
Which other company held their investor day? So Coforge comes to my mind, but it's not that this is a company which gives annual guidance. It's just that last time they gave a forward-looking, big picture, the opportunity kind of a guidance. This time they did. So Siemens is one. Coforge, you could add that. Which other company hasn't given a guidance, and that's disappointed the street? And what does it tell you? That these companies do not have the revenue visibility, or the environment is volatile, uncertain, which is why they're hesitating from quantifying the performance. Is that a bit of a worry, and is that across sectors?
Yeah, I mean, couple of sectors like Welspun Corp, we had a management interaction. We have a Power Mac Projects Limited, we had a management interaction out there, and they all are, looking for new opportunities of the business line rather than the business line which is already there. And they are saying that they would be able to do, early 20s kind of a growth trajectory, but that confidence and putting a number to it was not there. Translate Lighting is another company which we have interacted recently. Again, the same, case study was there. And one of the IT companies, Orient Pro, had a product launch a couple of days back. There also, the gung-ho nature of 30% kind of a CAGR was missing in the interaction. So generally, what we are seeing is more of a rounded kind of answer rather than a very aggressive and a bold answer, which is expected in line of the tailwinds which have been there in the economy, the macro tailwinds, the so-called like interest rate cut and GST cut, direct tax rate cut, good monsoons, everything playing out, per capita income rising. And that is not very palpable when we are interacting with particularly the industrial side of the economy.
Orient Pro was one of your picks. Have you changed your view after that call? No.
No, Prashant, we have not changed the view out there. The only, as far as putting the number part is there, it was direction. But there, verticals are stacking well. The entire banking suite is doing pretty well, and followed by, that data center infra play. So couple of orders are expected. So, I mean, let the announcements come, then we can talk more on that.
There was just news, by the way, at the bottom of the screen. The cabinet, and this was expected, the insurance amendment bill has received cabinet approval, which means that now it will go to the parliament for the parliament to clear it. We've, of course, reported extensively on what is part of the insurance amendment bill, and maybe we can sort of, revise some of the stuff with Yash. There's, of course, the FDI bit, but there is, open architecture for agents. The
composite license, was it a part of this? Composite license was a part of this.
Yeah, basically everybody can do everything.
Everyone can do everything, yeah.
It's open. So actually those are the three big ones.
So FDI is one, composite license is two, and the third one is?
Agents can sell anyone's policies, no longer tied up to only one insurer, which is very huge. It's landmark for the
especially for LIC, because LIC is dependent on individual agents. But they could only sell LIC policies. Now they're free to sell. So it's not great news for LIC actually. I mean, if there's one company which maybe I guess stands out in a slightly negative way is this one, because of course what's being done. Now, more on this with maybe we can, insurance we discussed with Dharmesh, but maybe we can get Yash back on. But JSW Energy is raising money. Vivek is here with some perspective on this. Vivek, take it away.
Well, JSW Energy has been in the news. Last week, you saw a significant block deal take place where GQG Partners exited a pretty significant chunk of their holding, via a block deal. Also, the company had given a notice to the exchanges saying that they were evaluating a fundraise. So today, a whole raft of decisions has also been approved by the board. Number one, important KMP, Chandrasekharan Prabhakaran, who was earlier deputy CFO of JSW Steel, will now take over as the CFO of JSW Energy from Jan 2026. This was due to the fact that Pritesh Vinay's resignation actually created this particular vacancy. Now, along with that, there are three important fundraisers that the company is talking about. First one, they have approved a fundraise up to 10,000 crore rupees. This is likely via the QIP or a private placement route. It's pretty significant. However, JSW Energy has been pretty ambitious in terms of going ahead and raising capex, especially in the RE capacity side. Also needs to be seen whether any inorganic acquisitions are at this point of time being considered. So that is the first part as far as the fundraising is concerned. Now coming to the second part, they are doing a preferential issue. This is via equity shares up to 500 crore rupees to a promoter entity, and the price for this particular equity issuance will be at 525 rupees a share. Along with that, they are also doing a preferential issue via warrants. These are convertible warrants. This particular amount could be up to 2,500 crore. And again, the convertible price for the warrants will be at 525 rupees a share. Whole draft of decision, significant fundraise activity is being planned by JSW Energy.
Thank you very much for that, Dharmesh. JSW Energy fundraise of 10,000 crore. There is a new CFO, a preferential issue warrant. I guess the bigger news is the fundraise.
Yeah, I mean, see, if you look at the price of the JSW Energy, I mean, we had an IC a couple of years back, and based on that, we had a price target of 520 rupees on that. So it has, breached that. It went far higher to that, and then it has corrected. So these estimates, I mean, based on FY28 earnings estimate, the best price of the JSW Energy, which we have been accounting for, was around 520, 530. So not much of an upside left here from the current price levels. But yeah, if somebody is looking for a trading opportunity, they can go ahead. The good part about JSW Energy has been the execution has been quite ahead of the times. So whatever capacities they have been, saying about, that has been, commissioned much ahead of the time, and that is adding to the value. So largely, I mean, it's a good theme into the power sector play. But power as a space, I mean, entire power sector space, because the stock price movements have been so sharp that the valuations are far ahead of the, earnings growth trajectory. So that's the caveat which one has to keep in mind.
Okay, thank you very much for that, Dharmesh. Happy Friday to you, and I hope you enjoy your weekend and look forward to chatting with you next week. By the way, Hindustan Zinc, the rally continues there. It's 8.5% higher, and that flash about silver. Silver has now crossed 2 lakh for 1 kg. In dollar terms, I think it's $64 plus for an ounce. I think a couple of days back, Manisha was telling us that it's more than doubled, and silver, on account of its investment value plus industrial use, has found a lot of favor with investors. And just recently, I was reading an article that silver-backed exchange-traded funds have seen the biggest inflow since 2020, and that pretty much ties in with the kind of price rally that we've seen. That's the level on there you have it, 2 lakh. For 1 kg of silver, and Hindustan Zinc is the clear play, and Hindustan Zinc week-to-date rally I think would have crossed 15-16%, maybe even more now, but 8% has come in just today.
Absolutely. I mean, it was gold first in the first half of the year, and then silver caught up, and there's no looking back. And it's astounding what these commodities have done. Both on the precious
to the
metal
rest
side.
of the base metals also.
It's going into copper, it's going to aluminum.
Yeah,
a lot of chatter about how capacity is going to be limited. China is no longer dumping, aluminum in global markets. So the expectation is they will not do much of that in 2026, and it's really been driving the entire metals complex. We will discuss this with our next set of guests, but right now it's time for a quick break. Prashant caught up with Ramesh Damani, and we will get you his views on the multi-bagger journey in the market on the other side. Stay tuned for that.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Welcome back. Let's put the spotlight now on the top movers in the market. Hormus is now joining in. Hormus.
Well, there are certain mid-cap and small-cap names that are actually having some Friday fever today, and actually Friday fervor, if you would like to call it that. Metal names have been the headline of the week, actually. And look at these names. The silver prices at record highs, copper prices at record highs. Hindustan Zinc is at a 52-week high. Hindustan Copper is at a 52-week high, as is Nalco. You look at the gains, anywhere between 6% to 8% in today's session. The volumes in all of these names are no different. 3 crore shares traded on Hindustan Zinc, 4 crore shares on Hindustan Copper, 2 crore on Nalco, and unsurprisingly, all of them are significantly above their 20-day average. So gains coming on very strong volumes as well. Camlin Fine Sciences is the other stock on the list today. It's the biggest single-day gain that the stock has seen since May, this 15% up move. The best week that the stock is supposed to have in nearly 3 months. The 20 lakh shares have been traded on the stock today. The 20-day average of just around 2.5 lakh shares, around about 8 times the 20-day average. It's trading, despite this move today, the stock remains below all key moving averages, with the next level on the upside being the 50 DMA, which is at 177. And the stock has run up around 28% so far in 2025. And this 30% up move is turning out to be the best year the stock has had since 2020. Anant Raj is the other one. It snapped an 8-day losing streak earlier this week and is continuing to build on to those gains. 9.5% higher now on the stock, and the biggest single day gain and volumes that the stock has seen in the last 3 months. It had more than 1.5 crore shares that have been traded, the 20-day average of around 21 lakh shares on Anant Raj, and it's back at its 200-day moving average of 553. And despite this move, the stock is set for its first year of negative returns after 2019, with this 36% fall that the stock has had so far on a year-to-date basis. And lastly, transformers and rectifiers, the biggest single-day gain since January of last year, this 14.5% up move. It snapped an 8-day losing streak this week as well, the highest volume since its listing day, and the listing day goes all the way back to 2007. We had 4.5 crore shares that have been traded on the stock today, the 20-day average of just around 35 lakh shares, but remains below moving averages and is down 53% so far this year, and similar to the previous name that we highlighted, the first negative year for the stock after 2019.
Oh, what a buzzer. 15% up today. As usual, Hormuz picking out some of the most interesting movers and shakers in the market. Thanks for that, Hormuz. Well, let's get to that promised conversation at the launch of the 30th edition of the Motilal Oswal Wealth Creation Study. Prashant caught up with veteran investor Ramesh Damani and spoke on a whole range of issues, including Mr. Damani's investing hits and misses. Listen in.
When we introduced to Buffett, I always find that very fascinating because you all are Buffett fans. Ramdev said 95. In 1977, I went as an MBA student to America to study from MBA. I'm actually old guy, so I went in 1977. And most people going to Los Angeles in those years would tell the local hosts, take me to Disneyland, take me to Hollywood Walk of Fame, take me to, the tech industry, whatever. I remember telling my sister to drive me to the See's Candy store. There was one See's Candy store in that area, and there was one Walmart in that area at that time in 77. So obviously I'd heard about Buffett. I don't know how, but even when I was 20 years old, I'd heard about Buffett. But it took me until maybe 85, 87 to kind of understand that this guy was actually something extraordinary that he was doing.
This is 77 when you kind of...
1977,
wow.
Yes.
And he kind of migrated away from what he used to call cigar butt approach to kind of buying high quality stuff.
Yeah,
that had already happened. I mean,
no, it happened much later. He bought Cap Cities in 1985.
Right.
And I know some uncles that bought Berkshire Hathaway stock, and they told me they bought Berkshire Hathaway. But in the 87 crash, they had sold it.
Right.
And then they were very happy because it had gone down from $3,000 to $2,500. And today, of course, it's some other number. So let's not discuss that pain.
Which, I mean, it's a much abused word, but multi-bagger, best, great compounder in your career, best captures the power of it staying invested through cycles.
I mean, there are a lot of stocks. India has given us such a great opportunity. Sometimes I feel like hitting fish in a barrel because there's so many multi-baggers and compounders. Actually, It's actually unbelievable how many multi-baggers you got. But the one that I think that people don't know and I think they should study, in fact, I would urge Ramdev to do a special study on that because it's created that kind of wealth, is a company we bought in 96, 97 called Bharat Electronics. I bought it after it IPO'd at 40 bucks. It went to 20 bucks. At 40 bucks, it had a 5% yield. At 40 bucks, it had a 5% yield out there. I think, if I'm not mistaken, if you bought 100 shares, I think there were 25,000 shares today by splits, bonuses, whatever. And at for 400 rupee price, that's about 1 crore worth of investment. It's about 28-30% compounded over long periods of time. And to address a more fundamental question, Prashant, people often say, oh, gold has been in the Sensex and all this kind of nonsense I keep hearing from people. Now, here's the fact of the matter, that when you buy a securitized asset, as Ramdev has pointed on the study, not only do you get the splits and bonuses, but you also get dividends. So if you had bought an ounce of gold in 1980 at $1,000, today it's $4,000. All you got is the price appreciation in the gold. If you bought Bharat Electronics or HDFC Bank or Reddy's or Apollo Tyres or whichever stock there, the splits bonuses would have increased your value dramatically. The P ratio would have inflated your wealth. And the dividends would have added extra 2-3 percentage points of return. So I think people conveniently tend to forget that. I think over 150 years, I think gold's given 3%, equity is given 11-12% without dividends. So you know where you should put your money.
Something that you wished that you had bought or you owned it at one point, you sold out early, and then you look back in hindsight, you say, well, that was the wrong thing to do.
Yeah, Prashant, I have enough thumb-sucking experiences to describe. And I think the one that Ramdev got and I missed, which is no excuse because it's in my circle of competence, it was in my backyard, it was with people who ran the company who I greatly admired, and yet for some reason I was sucking my thumb when Bajaj Finance got listed. I mean, it's just something that I really tell. There's an error of omission, what do you call it? You know, nobody questions me because I'm a prop investor, but I know the hurt of missing a stock like Bajaj Finance. I don't mind missing a Reddy or missing Apollo because those are not my circle of competence. But to miss a Bajaj Finance was extraordinarily stupid of me. In my backyard in Pune, I go there like 3 times a month. You know, I could go and visit any time. I made a mistake there. I rectified the mistake during the COVID. I bought some there. But it was a different feel. I should have been at the get-go of that.
But why didn't you? I mean,
I just missed it for whatever reason. Complacency, didn't do my homework. The fault all is with me, nobody else. I mean, I just didn't do my work. I should have done the work out there. You know, for whatever reason, I was, busy trying to make 10% gain, 20% opportunity of a lifetime. Till today, it still rankles me.
Thanks for sharing, Mr. Damani. Anything you bought and you sold out, which you wish you did not? I mean, I'm sure there are many, but any one kind of...
I mean, I tell you one thing. During COVID lows, I'll give you a good interesting example of how this thing works. I had bought a stock at 20 rupees a share in 93. The right issue had come at 20, I had applied for the right, I bought it at 20 rupees a share. And I held it unchanged until 2020. So whatever period, I think 25 years, I had it unchanged. Didn't buy anymore or sell anymore. By that time, the stock had become 1,000x, no, 100x. From 20, it had gone to 2,000 bucks. 2,000 bucks, right? In COVID, I was a bit nervous. I wanted to sell something, and the year was something I was making 100 times my money. So I sold those shares. I said, "ठीक है, कोई बेच दो." I think in the next 6 months, it doubled, then doubled again. So if I waited another year, I would have sold it at maybe 700x instead of selling 100x. The stock, for the record, is Apollo Hospital. I made 100 times the money and I sold it. Why did I say? Just because I made too much money and no other reason to sell it. I was nervous. I wanted to create some cash, so I sold it. But I missed out on one of the great compounding stories in this market.
Which stock was
Apollo Hospital.
Apollo Hospital, wow.
But, the second example, one is you didn't buy. The second you bought, but you maybe sold out early and you should not have.
Because I made 100x my money. I mean,
absolutely.
That's no reason to sell.
Absolutely. Mr. Damani, how much weight do you put, sir, on sectoral tailwinds, high ROEs, some of the things that Ramdev said, when you are looking at opportunities?
Yeah, Prashant, Ramdev had this formula, QGLP. The one I focus on quite extensively first is P. I'm very concerned. The price discounts everything. So more than leadership, more than ROE, more than P. I'm looking at the price I'm paying for it. Sometimes even if I make a mistake, the price is the cigar butt example. You can still make money out of it out there. And generally I find that if you buy when a bull market is starting, an extremely underloved sector, which means the price is very, very cheap. You'll end up making a lot of money at the end of the bull market out there. So almost obsessed. If you ask me about a company or pitch a company to me, almost my first few questions will be what is the market cap of the company, because that gives me a good starting point. Is it 500 crores, is it 5,000 crores, 50,000 crores, you know? And can I value or see the business at that market cap? So for me, it's P.
And PE and, of course, the market cap relative to the size of the opportunity. I mean, how much?
As I see it, as I see it. You know, if they're in a commodity business, I know the market cap should be this, consumer business should be this. But the market cap is an amazing filtering exercise, you know. Some business I will not look at no matter what, because the market cap is too big for me at this point, for me to understand.
What a phenomenal conversation. I'm sure you want to catch more of that, and you can do that on our social media handles on YouTube as well, on the mistakes and the learnings from those mistakes, as well as, of course, the wins with someone as deeply entrenched in the market as Mr. Damani is. Well, with that, let's get back to the here and now and see what the screen is telling us. And it's still a nice bright shade of green, 150 points up on the Nifty. Let's see what's been going on in the F&O market. Maglam, what are you picking up?
Well, it's a bright shade of green indeed in the F&O market as well. We have the Nifty, which is doing well. The Nifty Bank is leading it. At the same time, we have the Midcap index, which is doing well as well. So all three factors of the market holding fairly well. The interesting part, however, is right now the Nifty is above the 20-day moving average. Closing above that will be extremely crucial, because all through this week, we've been oscillating between this 50 to 20-day moving average sort of zone. Nifty's 50-day moving average was closer to the low that we saw on Monday. 25,717 is where it is right now, and on the way up, upwards of 26,024 is where the 20-day moving average is. So where we go from here, how does it close, will determine the course of next week. And also at the same time, we'll be keeping a quick eye on the India VIX, which over the last two trading sessions has been coming down. The advanced decline is a firm move in favor of gainers. So the green line fairly above the red line. All these factors generally will make bulls feel good as they go home for the weekend. Amidst all of this, the metal stocks, they are shining today. If there was one genre that, of music that the bulls would be playing today, would definitely be heavy metal. Tata Steel, Zinc, Hindalco, all of them doing well. And add to this, for the index, we've seen some put writing as well. For the Nifty yesterday, the up move saw some calls covering their position, the call writers covering their position, and now we have put writers back in the market. So 26,000 put writers fairly active, 25,950 put writers also active, telling you support has come higher from the lows that we saw on Monday, and 26,050 call as well. That's a little active right now in trade. Maybe the bulls want to get a sign of confidence that the market is going above, so which is why we need to cross past the 26,050 to 26,100 mark before we move further. So once that happens, maybe we can see some of the other index future shorts cover their positions as well. The Nifty put call ratio is at 1.14. That's telling you that we're slightly at the higher end of the range so far after having seen a bounce. So moderation out there would be good for the bulls as well. A lot of longs are added on GMR Airports and PNB Housing Finance. So those are a couple of stocks we're watching. Long positions unwound in Siemens after the management commentary on their DI pipes came in. And finally, a couple of these consumer names are seeing a lot of shorting activity. HUL, unusually high open interest build up on that counter. And Jubilant Foods Works as well is seeing some shorting.
Thank you very much for that. On that note, we will slip into a very short break. We'll come back with more on the market. Stay tuned.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Welcome back. What a day for metal stocks. Really, anything and everything is going up. There's also GMDC, by the way, that is now up 5%. And then the usual winners like Hindustan, Zinc, which we have been discussing. That's the Nifty Metal Index. Solid gains seen this week. We've got Mitesh Thakkar joining in with some final trades and ideas. Mitesh, before you get set for the weekend, what are the final calls?
I think, one good thing today is that the closing is pretty positive, and, we haven't seen the market kind of come off despite the fact that we are closing about 26,000. So in that sense, we'll take some positive trades. Bharat Forge is a BTST with a stop at 1419 for targets of 1450. And the other one is BHEL, which is the BTST with a stop at about 282 for targets of 290.
Thank you very much for that. Let's get back to the silver rally that continues at a sizzling pace. The metal has now hit a fresh record high above $64 an ounce. And in rupee terms, Manisha, it's crossed 2 lakh for 1 kg. Tell us more.
Oh, well, yes, it's been one unstoppable rally is what we have seen. Most people believe that once we hit December, perhaps the volumes will go down. You'll see those book closures happening and people might want to go out and take profit. But there's nothing like that until now. So 4% of gains in overnight market is what we saw in case of silver. It is up 22% in last 1 month and 122% up in dollar terms. And it's 128% higher in the Indian markets right now. So, well, yes, with the kind of gains that we have seen at 2 lakh rupees a kg in case of silver, we clearly are looking for the best annual gain since 1979 for silver prices there. Well, it's trading at record highs, not just in US or India, but in various other countries like China, Germany, Australia, and I could go on with that list. So silver has been hitting record highs in various other currencies as well. Well, the precious metals also are advancing because of treasury yields declining. You have the dollar index, which is trading at an 8-week lows. We've seen 8.5% of a decline come in for dollar index. That has been supportive. But the latest cues clearly came in from the US Fed meeting, where they're talking about expanding their balance sheet also by buying nearly $500 billion of US dollar. And that really seems to have hit that QE mindset into the markets, leading to buy in case of silver and gold there. Then you have seen strong industrial demand coming in. The investment demand in the Asian markets, especially India, has been very, very strong. Physical buying, ETF buying is in thousands of tons, and that has been supportive. US also has added silver to critical mineral list. You have China statement suggesting that they will restrict exports from 1st Jan 2026. So various countries also now talking about silver, putting in fresher reforms there and monitoring prices and movement of silver in the global markets. All of that clearly supporting silver, with markets anticipating you could be looking at 65, even 68 for that matter before this year ends.
Thank you very much for that. Gurmeet Chadha, Managing Partner, CIO, Complete Circle, joins in for the last leg of Friday's trading session. And markets gain still going strong, up 0.5%, and the Nifty is now closer to 26,050. Gurmeet, Hindustan Zinc, that's clearly the stock of the week.
Yeah, a clear rub-off happening on what's happening in commodities, especially silver. Unfortunately, we don't own it. We tactically are positioned in Hindalco, a little bit of Tata Steel, and there's a special situation play called Mukund Limited, which is more stainless steel. So playing it tactically. But yeah, great move. But we've been doing a lot of gold, silver ETFs for some of our clients. So small participation that is.
Do you think the gold and silver rally continues, or do you think it's sort of toppish now after this kind of an up move?
I don't think so. The risk reward at this point of time is very favorable in terms of incremental allocation. But the fact that, the PFRDA has been allowed to add gold and silver, a lot of central banks have expanded their investment framework in terms of adding precious metals. So this is basically a huge demand letter. And there was globally JP Morgan, which was initially short and then added silver contracts. So a lot of, but metals, mind you, can correct very sharply. And silver also has history of doing that. So just be a little careful. Don't, we tend to get carried away seeing last 6 months, 12-month returns, which have been very, very good. So use it as hedging to any global uncertainty and not right now in terms of incremental portfolio allocation as far as, my thought process is concerned. But, I can be wrong on this.
So that's gold and silver, Gurmeet. But overall metals, the rally is going through the roof, literally. And the commentary is also turning positive, even on a lot of base metals, right? Copper prices anyway have been rising, we know that. There's some chatter that maybe aluminum will keep seeing better demand and less capacity. I mean, would you read in too much, or is this just a sentiment rally?
Yeah, it's as you said, it's a bit of a rub-off post-Fed commentary, and people were thinking it is a hawkish cut. It wasn't really a hawkish cut, although there are different views on it. And the fact that the QE has started, they're buying billions of dollars of treasuries, and in this kind of environment, commodities, especially precious metals, tend to do well. So, as I said, play tactically. Get into the names, but do not make it a core part of the portfolio. These things can reverse, and let's say if there is and I hope there is a Russia-Ukraine peace deal, any risk off which happens, then you might see very sharp correction as well. So just be mindful of that. So if you want to do incrementally, I think just wait for any good risk off events so that you can get better entry points.
Gurmeet, stay on. We'll come back to you. For now, we need to slip into a very short break. 9 minutes to go before we wrap up the day and the week.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Welcome back. 150 up on the screen, and it's a green looking screen. Look at that. That's a good feeling to go home to over the weekend, given the market action today. We still have Gurmeet. So, Gurmeet, I mean, what's your sense? It's, the bulls are not giving up. That's the good part, right? They're fighting back. So, any new ideas? And I know we've discussed these EMS stocks, and you've been maintaining anyway that they got very expensive. You've owned them in the past. But what did you think of this whole Kane situation and the way it hurt PG and, Dixon and the others? And what would your advice be to people now?
So, Surbi, I think there's a lot of pain in the broader market, and the portfolios are more like 2,500 on the Nifty, and the index keeps scaling back. So I think some of the EMS names, they were priced to perfection. And when you're growing at 30-40% quarter on quarter, the market then gives you price to governance. And any lapse in that, whether it is disclosure, whether it is any related party transactions, the market is not kind because, you're valued at 100, 150 times or 6-7 times sales. So I think that's what exactly happened. And there was a rub-off which happened. But I think this is a structural story. If Keynes can demonstrate 1 or 2 quarters more in terms of, continued good performance, especially on the more progress on the OSAT plant, which they have on semiconductors, and improved disclosure, they've already changed the auditor. I think these things take time but can come back. So overall, we were buyers. We actually bought a little bit of Dixon and Keynes because I missed out on Keynes earlier, as I said earlier. So we slightly added it, but I would wait for 1 or 2 quarters for things to go up. So I'm very constructive on this space as well as the semiconductor space.
No, absolutely. Gurmeet, hi, afternoon. ICICI Pru, any thoughts? The IPO?
Oh, all AMCs, Prashant, I keep saying this is an infinite ROE business. Look at, for example, HDFC AMC, 50 crore, 100 crore authorized capital, you make 3,000 crore PAT. So the cost doesn't go up once you cross a critical level. So I think we'll do well. So, like SDFC, like Nippon, will do well. I think some of the other AMC's names, the valuations are literally half of what SDFC, and eventually I think ICICI will also list well trade at. So let's say, for example, Birla, post Harish joining in, the equity funds have seen quite a bit of a turnaround. And some of the debt issues they had on credit sides are behind. So that looks very reasonable. So some of the AMCs like Birla, for example, the valuation comfort is there. But this space will do very well. And this is a high beta space. Once market recovers, so not only it recovers with the market, it then tends to better because of the fee they make on an MTM basis.
Okay, all right. Gurmeet, thank you for all the perspective and the advice. With that, we'll let you go and start your weekend. Have a good one, and we'll catch up again soon. Almost time for the bell. So let's recap what's been a solid day and a good comeback by the bulls today. 150 on the Nifty, and it's a very well-rounded screen, like I've been saying. Lot of participation from metal stocks. So the winners are Tata Steel and Hindalco, even JSW Steel. These stocks have gained between 1.5% to 3.5% in some cases. There are some consumer names on the upside. There is Eternal, for instance, there's Nestle. That has had a pretty good day. Maruti is also an extended format of consumption, is about 2 to 2.5%. L&T got a good boost from that Goldman Sachs report. Goldman Sachs thinks that 5,000 is a possible target on Larsen & Toubro. Bharti Airtel, Grasim, Apollo Hospitals. These are the winners of the day. Some of the financials, Bajaj Finserv, Axis Bank, so some of the financials managed some green. By the way, Interglobe Aviation today is up 1%. For the week, it's 10% lower with that whole fiasco playing out. Question is whether the worst of it is over or not. But that's what it is. Today, it's up 1%. On the downside, HUL, Sun Pharma, Max Healthcare, and Asian Paints are some of the weak names. But I guess, Prashant, the sector of the day definitely was metals. Whether precious or otherwise, metals all the way.
Metals all the way. I mean, and I think the stock of the week was, in a not positive sense, but negative sense was Indigo, right? 10% down this week. And just want to take a quick look at what it did today.
Today was up 1%. Finally managed 1%.
So as we ended the week, it started to, actually yesterday was up quite a bit of recovery from the day's low. And today also trying to make a bit of a comeback here. Markets basically trying to sense whether there is more in terms of some penalties, etc., coming Indigo's way, or what we've seen is it. That's all. Asian Paints was the other one, which was down 7% for the week. And actually, on the upside, of course, Hindustan Zinc, 14% by the way, for the week. The ADAG group companies had a bad week. The top losers from a basket of NSE 500 is Reliance Infra and R Power, 12 and 9% down respectively for the week. So, just a overall sense in terms of what we saw. So, about 0.6% lower on the Nifty, about 0.75% lower on the Nifty Bank. Mid and small cap indices down 0.75%. That is the tally Friday to Friday. It's a wrap on this edition of Closing Bell. From all of us here, goodbye. Thanks for staying with us. Editors Roundtable up next.
"26 years of CNBC TV18. 26 years of CNBC TV18.
The Wall Street ends the week lower despite a Friday's surge. Except for metals, all sectoral indices end in the red. Defense, PSU banks are the top laggards. Over the next 30 minutes, we'll decode the week on the Wall Street. We'll put the spotlight on the 10,000 crore rupee ICICI Pru IPO, which is opened on Friday and closes next week. And we'll tell you why brokerages are betting big on India's CDMO space. Hello and welcome to Editors Roundtable. I am Reema. With me are Prashant and Ekta. And joining us is Pankaj Tibriwal of Ikigai. Guys, all's well that ends well. I mean, the start of the week was tough, challenging. And I remember the words we were using, right? Mid-caps, people are throwing in the towel, capitulation. But Thursday and Friday, the price action, mid-cap performance was far more encouraging.
Stopped falling, basically, right? I guess. And let's hope that that is more, we see more of that. By the way, it's a bit of a triangle, right? Not a round table.
I think it's going to happen on a Friday.
Pankaj is in BKC. Pankaj, you could have hopped across the ceiling and been here.
Sorry, Prashant, I missed you. There was some disturbance. Can you?
I'm saying you could have hopped across the ceiling and been here. You're in BKC, right?
Yeah, there was back-to-back meetings, so I couldn't be there at this studio. My apologies.
No. I'm just kidding. But I have the weekly stats. Maybe just kind of for our viewers, run through what the week kind of looked like by the end of it. This is Friday to Friday. Of course, we went all over the place, as Reema said. This beginning of one day, Tuesday was particularly bad, right? Wednesday was bad, but not so bad. Thursday was much better. And of course, Friday, we ended about 100 points higher. Nifty down 0.6% Friday to Friday. Bank Nifty down 3/4. Mid-cap index down about 0.75%. Small cap index down about 0.8%. Look at sectors. Defense as an index was down 3. The PSU bank index was down 1.8. CPSC index was down 1.5. Actually, this is only one sector which looked up for the week, which is the metals index, about 1.5% higher for the week. Now, large caps, and of course, the stock of the week in that sense is Indigo, lost 10% in value. Even for this name, I think, Thursday and Friday looked a little better with the stock ending Friday session high about 1%. Asian Paints for the week down 7. BEL was down about 4%. You look at what was up, Hindalco 3.5, Grasim 3, and there was Tata Steel, which was up about 3% as well. Now, broader markets, and that's essentially where the pain is. And I think notwithstanding the slight bit of stabilization we've seen on Thursday and Friday, I mean, the pain has been absolutely palpable. The question, though, which we'll ask Pankaj in a bit, of course, is whether, this is now enough damage has been done, and now's the time to start looking at picking stuff there, because that's his area of specialization. The winners here, Transformers and Rectify, 16%. Hindustan Zinc was a big one. It's all silver there, right? 14%. Latent View was up 10%. On the downside, the ADAG's names, so I count two of the top 5 losers from the NSE 500 basket were from this group. So Infra down 12% and Reliance Power down 9%. And there was Bharat Dynamics, which was down about 7% as well. So that's the broader kind of picture. And of course, I mean, the other big story this week has been IPOs.
Yeah.
So
IPOs and I think the rupee. We've been talking about how the equity market was stable and we saw recovery on Thursday and Friday, 2 days of gains. But we have the rupee, which is depreciated around 0.5% at current reckoning at this point, basis on Friday. So that's a whole different story which seems to be playing out in the market.
Yeah. The big IPOs, there was the listing of Misho. ICICI Pru opened.
Yeah.
And
there were 2 other listings.
There were 2 other. My God, it's so many listings that you got to. By the time you get to Friday, you forget what's happened on
we
Monday.
We had Nephro Plus also, which opened.
Corona Remedies,
closed on Monday.
Yeah, so lots. Let's get Pankaj in for a quick sort of status check of his portfolio. Pankaj, the damage has been quite palpable, isn't it, across mid and small caps, and that's where that's what you're a master of, that segment. As you've said, opportunity lies in that 7,000-8,000 crores to about 15,000 crore market cap range. So give us a sense of, where we are at after the sell-offs we've seen.
So, Prashant, if you look at the data points, there are 2 data points which are very important to note. The first one is the divergence between the market cap this year. So small cap index is down by about 7-8% calendar year to date. and Nifty is up by 8%. So there's a 15 to 16% divergence in the market cap performance. And you will be surprised to know that now on a 2-year basis, the return of Nifty and Nifty small cap is virtually the same. So 2 years of the equal performance of small caps. Mid cap is a slightly higher number, but small caps and Nifty is virtually the same. So there has been a lot of divergence this year. And within the index itself, the breadth has been extremely poor. So the BSE 500 index, which comprises large, mid, small, that index is touching distance of 52-week high. But when we look at the median constituent of the index, the returns, it's about 18% down from 52-week high. So few stocks in the index have been holding the index higher, but the breadth overall across, especially more pronounced in small and mid caps, has been very, very bad. And the third data point is that within the indices itself, there's a huge divergence. So look at Nifty Mid Small 400 Index, which is combination of 250 stocks of small cap and 150 small stocks of mid cap. The headline return is 2% from October 24 till now, but the median return of that index is negative 5.5%, which is 8% differential. After a long time, maybe 2018 and 19, we are seeing such a bad breadth and such a large divergence within the indices itself. So in the last cycle, if you remember, solvency was an issue, and that's why you saw a big crash which happened across the broader market. This time, I believe there are pockets of excesses which we have discussed in the past, and some have started to unveil itself. But overall, there is no solvency risk per se in the corporate India, and balance sheets are in much, much better shape. So I think the readjustment and dislocation which has happened in the market is taking place right now. If third quarter and fourth quarter, the way we saw in second quarter, the earnings being much better, I think if that happens in the third and fourth quarter, market will find itself in a much better position. But Prashant, let me tell you one thing, that the honeymoon period which we saw for the 3-4 years post-COVID is behind us. Not everything will move up. Companies which have quality, balance sheets, cash flows, I think people have given too much of precedence to P&L over the last year and a half, 2 years. I think that will take a backseat. And in our view, finally, cash flow and balance sheets should find its way into the investing arena. So I think that phase is starting to come back. Not everything will move up. Companies with quality which can deliver earnings growth will be the favorites of the market.
Just Pankaj, just one thing. Is there capitulation left, or people who are many people that we speak to say, well, now's the time to look and start to, maybe there is a value emerging, but also, I mean, timing wise, because you don't want to, if there is capitulation, then everything will fall. Warranted, unwarranted, everything. Is there that left or no? Not really. Flows, etc. We just got the SIP flow, 30,000 crores nearly in a month. So I mean, that you look at that number and you say, well, if there is a dip, it'll get bought. So there's not anything large downside from here. But would you concur with that?
So I think it's a slightly difficult question when I look at two data points. So for the first data point, when I look at the MTF book, which is the margin trading book, there where the capitulation starts to happen, you are seeing that the book is now about more than 110,000 crores. And many stocks, if you look at the free float as a percentage and the MTF outstanding position in that stock, that is a very, very large number. And if market continues to correct, to fund some losses, you sell something else, and that spiral effect starts to happen. And that you saw with few of the large aviation names, stocks, where stocks started correcting, you saw the pressure in some other names, right? So I think the MTF book is still a very large one, and that hasn't seen any rundown in the last few days. Yesterday's data we haven't seen, but till day before yesterday, the number's still at 110,000, 115,000 crore. The second thing is to note is that on the overall category on the broader market, 15 months people have not made money. The SIP returns are negative, though the Indian investor is a lot matured, but it is to be seen that can it lead to redemption starting to happen across different alternate platforms and mutual funds. I think that will lead to capitulation. Yet, right now, there is nothing to worry about it because the mutual fund flows have been strong. There is no solvency risk on the balance sheets of corporate India. I think those things have been taken care of. I think market dislocation is a temporary phenomenon. I think finally good quality companies will have buyers at the right price. And if you ask me, one thing which I'm very positive heading into 26 is the FI flows. I think rupee at 90 and with growth coming back, I think AI concerns emerging across the globe. I think I am pretty optimistic that FI flows will resume in a very strong way heading into calendar year 26. And that if that happens, suddenly the mood changes very much. Today, if you speak to anybody on the market space, mood is very, very somber. Mood is very pessimist right now. The sentiment is not great. So that's a contrarian indicator. And one more contrarian indicator, Prashant, is that recently there was a FI conference in Singapore. It's one of the largest conferences. When I speak to a lot of people who attended from the corporate side, they say that the interest in India was at the lowest point they have ever seen in the last many, many years. Right. That's a contrarian signal. So, so I think that 26 can surprise all of us on the side, on the FI side.
Can't get any worse. You know, he said honeymoon period is long over. I think honeymoon period is gone. After honeymoon comes what? Ghar grahasti and, you know, slightly steadier period. And then you start to argue and then you eventually
get divorced.
I mean, I think let's hope that stage does not come and lawyers are not involved.
You said your mid-caps.
No, I think it's a tough phase, as Pankaj said. I mean, sentiment is that. But that's also, as he said, a contrarian indicator, because when nobody wants to look at it, that's when typically things start to turn. But, I mean, let's talk about IPOs, right? ICICI Pru opened up. We had the management with us. Rima, tell us a little bit about this one.
Well, you know, for just starters, to look at HDFC AMC and how the other AMCs have performed since their listing. So HDFC AMC IPO'd in July of 2018, and at that time, the market capitalization was about 23,000. Now it's at a market capitalization of 1.14 lakh, which means a return of 4.9 times, and in CAGR terms, it's in excess of about 25% over the last 7 years. That's very, very impressive. The other one, for instance, is Nippon AMC. IPO'd in October 2017, and the market capitalization increased from 15,000 to about 54,000 with a return of 3.5 times. So this is just basically giving you an indication of the kind of wealth AMCs have created in the market recently. Now coming to ICICI Pru, it's coming at a slight discount to HDFC AMC. So the market capitalization is 1.07 lakh crore versus HDFC AMC, which is at 1.14 lakh crore. How does it compare? In terms of the overall AUM, ICICI Pru is larger than HDFC AMC, and we know ICICI Pru is the largest in terms of actively managed funds. Also, the operating profit before tax of ICICI Pru is about 20% higher than that of HDFC AMC, and at the net bottom line, it's about 14% higher. Also, how fast these AMCs are compounding in terms of the funds managed. So the AUM of ICICI Pru was about 5 lakh crore in FY23, and as we speak, September ending, it's about in excess of 10 lakh crore. The only risk is regulatory issues. There's a consultation paper on capping the total expense ratio, cyclicality of the business, and competition rising from other discount brokers, Jio, BlackRock, and the likes. But, all in all, I think the investor opinion towards ICICI Pru seems to be fairly favorable, competitively priced. It's a good franchise. It's been growing very well. Profitability metrics are higher than peers. So I think generally there is a positive sentiment towards this one.
The CEO was in the studio, and I think before we hit air, he was saying that you typically to market an IPO, you had to go all over the world, to foreigners and this and that. He said, now it gets done in BKC. So I think that also tells you about how deep markets have become, how large some of the funds, etc., have become. Pankaj, very quickly, I mean, just a quick comment on this business. But again, I mean, you got to look at this in terms of what market cap they want and what it can do from here. Any thoughts?
So my sense is this business is a great business to be in. I think from an overall TAM perspective, growth perspective, runway of growth perspective, when you look at the financial metrics, and many of these companies are at infinite ROE. If you look at from an overall perspective, the capital they invested, they have been returned back long time, and all what is getting the sponsors is the dividend. So I think it's a great business. And I think from a runway of growth perspective, we like this business, which is the AMC business at loss. And that's why we are in that business myself. So I think from a longer term perspective, we have a great scope from a growth perspective. The other point which, Prashant, you all were discussing is the IPO pipeline. I think that has been one of the biggest constraints on the secondary market. Every month you are seeing about $6 to $8 billion of paper supply. I think till that time the paper supply starts to reduce a bit, you will not see the broader secondary markets in action, because a large part of capital in that 10,000 to say 60, 70,000 crore market cap, which should ideally have flown into the secondary markets, are getting absorbed in the primary market. So I think, and one needs to be very careful on the quality of paper which is coming in. Many companies, we are seeing that in the presentation, they show you P&L. Some of them show you balance sheet. The moment you ask them of the cash flow, they are not part of presentation. And you know that they have not made cash flows. And when you go back to the numbers, 4 or 5 years in a row, they have not made operating cash, which is positive. So I think we need to be very, very careful. And we have seen in the past that leading to the IPO, the growth numbers looks to be very aggressive. Everything looks to be rosy. But after the listing, the next 2-3 years, you come to know what is the real sense. And even in this year, more than 200 IPOs, including SMEs, have been done. This is one of the very best years for IPO and stake sales. But about more than 100 of them are underwater right now. Yeah. And the drawdowns have been 25, 30, 35, 40% from the IPO. So one needs to be very, very careful in the paper supply and also the quality of paper you are planning to apply to.
Well, I think for the next 15 days till the end of the year, maybe IPOs, I don't think there are any opening, right? Last 15 days, usually it kind of becomes very, very thin. We'll see how it picks up next year. The Biosecure Act, Ekta, right, in the pharma space, that was a big story, and CDMO companies there in focus.
Yes, absolutely. It could possibly become a law soon enough. So that is something that we'll have to see. But, you know, interestingly, the companies have said that maybe it's a longer term opportunity. It's not something that you're going to see possibly in FY26. It's probably going to come through maybe in FY27, maybe even 5 years down the line, because there is a grandfathering option which is there in the Biosecure Act. So it is not something that is just going to convert. Also, yes, there are lots of requests for proposals now, which a lot of the CDMO companies, Indian CDMOs, are seeing, but how much of that is eventually going to turn into business? Plus, India does not have as much capacity as, say, what the Chinese companies have at this point in time. So yes, it's an opportunity, but how much of that can be absorbed? Pankaj, in fact, you know, this would be an interesting conversation to have, that how much of this CDMO opportunity is actually going to turn into numbers, and hence would you base your decision to buy many of these CDMOs based on the possibility of this China plus one actually fructifying as much as what is anticipated? Pankaj.
I think China plus one or the Biosecure Act is just an incremental catalyst. So if you speak to most of the CDMO companies in India which are catering to pharma sector, the kind of opportunity they are seeing for the next, not only 1 or 2 years, for the next 3, 5, 10 years, is, I think, amazing. And only their capacity constraint is coming as a bottleneck. And that's why most of them are going on aggressive capex and building capacities to cater to that need. So I think there's a long runway for growth. Only the valuations are prohibitive as market is pricing in a lot of growth front end only. But from an opportunity specs perspective, I think it's a great space to be in. We believe that a lot of innovative pharma companies are tying up with Indian CDMO players for their future growth. However, you have to go deeper into it because there's a huge concentration risk of few molecules and few customers. So from that perspective, there's that risk that if that customer or molecule is goes away, then what you are suddenly see a drop. And we have seen that in a few cases as well in the past. So I think from a business, we are very, very, we have few names in our portfolio from since we started the fund, and they have done exceedingly well for us. Only one needs to be careful of what price you are paying to own these businesses. Today, they are very, very prohibitive. They are pricing in the best case scenarios for the next 3 years in many of them.
Okay, Pankaj, this has been a great conversation. But next time, do come to our studio, come to our office and join us on the. Thank you. Thank you very much for joining in. Well, that brings us to an end of another edition of Editors Roundtable. We thank you for watching, but stay with CNBC TV18 for more news and updates.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Hello and welcome to Business 360. I'm Arundhati Ramnan and these are the headlines that we're tracking for you this evening. Sensex and Nifty gain for the second straight day. Nifty reclaims 26,000, but all sectoral indices end in the red for the week, barring the metal index. Rupee hits a fresh record low of 90.56 to the dollar, but sees a swift recovery. Dealers say the recovery could be attributed to dollar selling by exporters and not just RBI support. Ambassador to India says the telephonic conversation between Prime Minister Modi and President Trump was a great call between two friends. Says Modi reiterated his support for Trump's efforts to bring peace to Ukraine. The Indian government says both leaders reviewed progress in the strategic partnership and agreed to work closely to address shared challenges and advance common interests. Aviation regulator sacks 4 flight inspectors responsible for oversight of Indigo after the mass cancellation of flights. Airline CEO Peter Elbers set to be quizzed by the 4-member panel formed to identify the root causes behind the cancellations. India's most profitable and second largest asset management company is going public. The 10,600 crore rupee ICICI Prudential AMC IPO opens for subscription. The company is eyeing a valuation of $12 billion. Novo Nordisk launches Ozempic, its popular weight loss and diabetes drug in India, prices the weekly dosages at 2,200 rupees and upwards. Novo Nordisk management tells CNBC TV18 that Ozempic clinical trials have not shown a causal relationship in the product and mental health challenges. Government rejects global air quality benchmarks, tells Parliament India sets its own air quality standards. Opposition leader Rahul Gandhi calls for a debate on air pollution, and the government agrees in a rare moment of consensus in Parliament. Disney invests $1 billion into ChatGPT maker OpenAI and licenses its characters for AI-generated short videos and images for 3 years. OpenAI will compensate Disney for using its characters, but the financial terms have not been disclosed. Those were the headlines that we're tracking for you this evening. But first up on the show today, the government has released the retail inflation numbers for November. The consumer price index has come in at 0.71%, which is marginally higher than last month. Lata Venkatesh joins us now with the details. Lata?
Yes, the inflation number has come in almost as expected. Our poll said 0.79%, I mean close to 0.8, and it's come in at 0.71. Okay, 8 basis points below our average, but this is entirely in line with expectations. The food inflation has come in bang in line with our expectation. It's come in, I think, at minus 3.5%, and that is exactly what our poll also forecast, a minus 3.5%. But we have to put it in context. You have to look at the year-ago numbers. The year-ago food inflation number was a tall 9%. So it's clearly the base that is impacting the inflation number. Otherwise, if you looked at the month-on-month performance, I would have expected actually a fall in several food prices a little more severely. It's not. I mean, see, in winter, you normally have this kharif harvest coming in. The vegetable prices start falling because winter is the month for a lot of the reddest of carrots, for peas. It's usually the vegetables and fruit season. As well, the festival season is over. This time, Diwali was in October. So the bulk of demand for food, cereals, pulses, sugar, all that is actually done by October. But for that, you're not seeing a very big fall in some of the areas where you will expect to see. For instance, vegetables. Vegetable prices have come in month on month, actually about, say about 4 basis points higher, or a little more, 4 basis points higher. You would have expected it month on month to be lower. But this doesn't take away from the fact that year on year it is much lower. It is 22% lower in year on year terms, vegetable prices, simply because last year, October, November, we were still pricing onions at 100 rupees and tomatoes at 100 rupees. You know, there was a bad monsoon problem, unusually heavy in October, which led to higher prices of potatoes, tomatoes and onions last year. And that impact is making food prices look very low in the current year. I mean only with respect to vegetables. With respect to other items like cereals, pulses, I mean they are really low even by historical standards, simply because this is two good harvests coming in a row. So whether you look at cereals or whether you look at pulses, the month-on-month inflation is hardly there. It's almost the same price in November as it was in October. And the inflation levels for all those items has been like meager, 0.1 for cereals year-on-year inflation. Likewise, for pulses, it is actually down 16%, 15.86 to be precise. Spices have been falling for a goodish bit. I'm only picking up items which are very heavy in the food index, namely cereals and pulses and vegetables as well, where the fall is 22%. Among core inflation items, which is really services items, there you are seeing a bit of a rise in what you call personal care and effects. That personal care, it's a services item, but what is the element over there? Gold. Gold gets counted over there, and therefore there is a 24% rise only in that item. But otherwise, we are seeing a genuinely benign inflation number in line with expectations, and therefore, well, from the Reserve Bank, nothing much. I guess they've already factored this low inflation into their last policy.
All right, so numbers in line with expectations. Thank you so much for those details, Lata. Moving on to the day's market action. Market gained for the second straight session, with Nifty ending above that 26,200 mark. Midcap index outperformed and the market breadth favoured the advances. All sectoral indices closed higher in trade, with metal and realty stocks leading the pack. For the week, however, the Lal Street ended lower and all major indices closed in the red. Barring metal, all sectoral indices closed in the red, with defence and PSU bank stocks leading the decline. From equities to the currency market, rupee hit a fresh low of 90.56 to the dollar, but recovered all losses soon after. Dealers attributed the fall to oil companies buying dollars and the recovery to selling by exporters. The rupee is the worst performing currency in Asia so far. Sergio Gore, the US ambassador to India, has said that the telephonic conversation between Prime Minister Modi and President Trump was a great call between two friends. The diplomat also said that Modi reiterated his support for Trump's efforts to bring peace to Ukraine in a social media post. Prime Minister Modi had also posted about the conversation on social media X. The Indian government said that both leaders reviewed progress in the strategic partnership and agreed to work closely to address shared challenges and advance common interests. The phone call between Modi and Trump was their first since Diwali. Remember, a delegation from the US is in Delhi for trade talks. Speaking at an event yesterday, Commerce Minister Piyush Goyal said that US should sign on the dotted line if it is happy with India's offer. This was in response to a comment made by top US trade envoy Jameson Greer, who had called offers from India the best US has received so far. Remember, it has been more than 3 months since the Trump administration imposed 50% tariffs on India. This includes an additional penalty of 25% tariff for buying Russian oil.
US is saying that they've got the best deal yet. Have you offered them anything that they are so happy about?
Well, that only the USTR can answer. His happiness is very much welcome, and I do believe that if they are very happy, they should be signing on the dotted line. In the past, I think 5 rounds have happened. The current visit is not a negotiating round. Current visit is a new deputy USTR who has joined about 3 months ago. It's his first visit to India. We're getting to know each other. He's at the Commerce Secretary level, Vice Minister, so they're all getting to know each other well. He met me also. We had very good substantive discussions.
The assumption is that a trade deal will be beneficial for Indian exports only when there will be addressal of both 25% tariffs, not only the one which is a trade tariff which has been imposed on trade in lieu of the lack of trade deal, but also the other 25% tariff which have been imposed for some other geopolitical reasons. Until unless both are addressed together, it will not mean a meaningful deal for India.
The U.S. Senate passed a mega dollar defense policy bill approving a $901 billion annual military spend. The approved defense spending is nearly $8 billion more than President Donald Trump's earlier requested this year. The bill will now advance to the Senate for approval. The Trump administration has also approved a $686 million defense upgrade package for Pakistan. The deal involves defense equipment and upgrading the Pakistani F-16 fighter jets to extend their life till 2040. The Directorate General of Civil Aviation has sacked 4 flight operation inspectors as part of its investigation into Indigo's widespread flight cancellations. The inspectors were responsible for monitoring the airline's operational compliance. The aviation regulator has summoned Indigo CEO Peter Elbers once again. Shivani Bazaz joins us now with all of the latest updates. Shivani?
Well, yes, the Indigo crisis has now triggered its most serious regulatory fallout yet. In a late evening order, the DGCA has removed 4 of its own flight operations inspectors with immediate effect. These are the officials who directly oversee airline operations, pilot checks and cockpit level compliance, and their sudden exit signals that the regulator is now cleaning up internally even as it tightens scrutiny on Indigo. The DGCA also named these 4 inspectors, naming Rishi Raj Chatterjee, Seema Jhamnani, and also Anil Kumar Pokharial among the 4 who have been sacked. Now, all 4 have been told to leave the DGCA roles right away and return to their parent organizations. Their official access, email and e-office IDs are also being deactivated. FOIs, remember, are typically hired on contract, so relieving them is effectively the DGCA's way of terminating their engagement. But removing 4 inspectors at once, including a deputy CFOI, is extremely rare. It shows that the regulator is responding with strong corrective actions, not just externally on the airlines, but also internally. Also, remember that an important meeting today at the DGCA among the CEO of Indigo, Peter Elbers, and the 4-membered newly formed committee by the DGCA. So all eyes on that now. Back to you.
So all eyes on that. Thank you for those details, Shivani. But on that note, it is time for us to head into a short break. Coming up next, Novo Nordisk launches Ozempic, its popular weight loss and diabetes drug in India. Prices the weekly dosages at 2,200 rupees and upwards. Details when we come back. Stay tuned.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Welcome back. You're still with us on Business 360. India's most profitable and second largest asset management company is going public. The 10,600 crore rupee ICICI Prudential AMC IPO has opened for subscription. The issue was subscribed 47% as of 4 p.m., driven largely by qualified institutional buyers. The company is eyeing a valuation of $12 billion. Union Cabinet has approved the Insurance Amendment Bill, which allows 100% foreign direct investment into the insurance sector. The government is expected to introduce the Insurance Amendment Bill in Parliament soon. Finance Minister Nirmala Sitharaman also announced the proposal to raise FDI limit in insurance from 74% in her budget speech in February this year. Novo Nordisk has launched its popular weight loss and diabetes drug Ozempic in India. The pharma giant has priced the weekly dosages at 2,200 rupees and upwards. Speaking to CNBC TV18, Novo Nordisk management said that Ozempic clinical trials have not shown a causal relationship in the product and mental health challenges.
We are launching this semaglutide in 3 strength, 0.25, 0.5 and 1 milligram for the benefit of type 2 diabetes patient. So it is very clear that the 3 strength which we are launching is for diabetes, and till 2.4 milligram which we have launched is for obesity.
Australia has issued a new safety warning against weight loss drugs because there is concern about mental health challenges, such as even suicidal attempts, rising with the use of these weight loss drugs. Your comment?
We have done many of the clinical trials across, and you know, any of the medications which gets launched, whether it is in the US, Europe, Australia or India, it gets launched with a very critical review by the regulator, and same is the case in India. And in all those reviews, we have not seen any kind of a causal relationship, and also in our clinical trial and observational use, we have not seen a causal relationship between the product and these kind of a tendency, but we remain watchful.
Global tech giant Microsoft is joining hands with the Maharashtra government to fight cybercrime. All 1,100 police stations in the state will be equipped with a Microsoft AI tool to fight cybercrime. Currently, only 23 police stations in Nagpur are using it. The AI system speeds up investigations and helps organize case files and guides officers through each step.
Now, one of the chances I had, again, was to meet with the team that built this new agentic system called the Maha Crime OS. So this was sponsored by the Chief Minister of Maharashtra, who is here with us. And
the government told the parliament today that it will set its own standards to track air pollution in the country. The response comes weeks after concerns over air quality in Delhi and several other cities. In a written reply in the Rajya Sabha, the Minister of State for Environment, Kirti Vardhan Singh, said that global air quality rankings are cited by various organizations and are not conducted by any official authority. He added that the World Health Organization's air quality norms serve only as advisory values and are not binding standards. He added that countries prepare their own air quality standards based on geography, background levels, and other factors. This statement comes months after a report compiled by IQ Air suggested that India failed to meet the World Trade Organization's air quality standards. As per the report, 13 of the world's top 20 most polluted cities are in India. Meanwhile, leader of opposition and Congress leader Rahul Gandhi has called for an urgent debate on the worsening air pollution. The centre has agreed to conduct the discussion. Gandhi added that the government must present clear national plan to tackle pollution.
Millions of children are getting lung disease. Their future is being destroyed. People are getting cancer. Older people are struggling to breathe. I think a good idea would be that we frame the discussion not on us saying what you have not done and not on you saying what we have not done, but simply saying that what are we going to do for the people in India in the future.
And in international news, more than 10 have died in the Gaza Strip in the last 24 hours after houses Walls and tents collapsed as Storm Byron hit the enclave. At least 12 buildings have collapsed since the heavy rainfall and flooding began. Tents and other winter supplies remain blocked at the border as Israel continues to restrict the flow of aid into the enclave. Russia said Ukraine launched a major aerial attack with at least 287 drones downed over Moscow and many other cities. This as Russian President Putin claimed that the country's forces have taken control of a town in eastern Ukraine. However, Ukraine's military disputed the claim, saying it remained in control of the town. Moscow has also said that it has captured a village in Ukraine's eastern Kharkiv region. Fighting between Thailand and Cambodia has entered the 5th day. Thai forces have reportedly carried out fresh attacks on 3 Cambodian provinces. Cambodia has also accused Thai military of continued strikes. Thailand's Prime Minister has confirmed that he is scheduled to speak with US President Donald Trump. No new casualties were reported following the renewed fighting. The Trump administration has imposed fresh sanctions on 6 more ships after claiming that these tankers are carrying Venezuelan oil. This comes a day after seizing a tanker from Venezuela off the country's coast. Sanctions have also been placed on some of Venezuelan President Maduro's relatives and affiliated businesses. And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18.
"26 years of CNBC TV18. 26 years of CNBC TV18.
The government has released the inflation numbers for the month of November, and the CPI index, Consumer Price Index, has come in at 0.71%, almost in line with the CNBC poll of 0.79%, marginally higher than the October inflation of 0.25%. We must also remember that this is still lower than the Reserve Bank's range of 2 to 6%. So we are below the lower bound of the Reserve Bank range, but it looks like it is in line with the Reserve Bank's overall forecast for this quarter. For the quarter, October, November, December, the Reserve Bank had, just in the latest monetary policy, forecast an average of 0.6%. Now with a 0.25% in October and 0.71% in November, the inflation is running at 0.5%. 0.5 is the average. Going into December, the expectation is that inflation will remain under 1%. So the Reserve Bank's forecast of 0.6 is not disturbed. Even the food inflation coming in at -3.9 is very much in line with our poll of -3.5. Let us remember that this is also because a year ago the inflation was over 9%. So there is a strong base which is making the food inflation look bad. But there is also a bumper harvest, especially of cereals and pulses, which is keeping food inflation generally lower. Well, that's by way of the numbers that we got today. And to discuss where the inflation trajectory is headed from here on, RBI policy is headed from here on, bond markets are headed from here on, I'm joined by Sameer Narang, the head of Economics Research Group at ICICI Bank, Kanika Pasricha, Chief Economic Advisor at Union Bank, and Sakshi Gupta, Senior Economist at HDFC Bank. Also joining us is Anurag Mittal, the head of Fixed Income at UTI AMC. Ladies and gentlemen, thank you very much indeed for joining me. Maybe I should start with Sakshi. Sakshi, very much in line with expectation. Is there anything in the composition of the inflation that is surprising you?
Right, Lata. So as you rightly said, very much in line with expectation, our forecast was 0.68. I think the story broadly on the inflation front seems to be that, yes, this number is marginally higher than October because certain parts of the vegetable basket on a month-on-month basis did see an increase, for instance, tomato prices. Also, the amount of support that you were getting from a high base effect for the October figure, that has now moderated in November. Gold prices, I think that was a big pain point, I think, in the October print. But for November, gold prices are pretty much flat. I think one thing that, is getting confirmed with this print is also the fact that the GST rate cuts, continue to kind of pull down the core inflation and the miscellaneous category inflation prints, right? So if you look at YOY for certain categories like household goods and services or recreation and amusement, you have clothing and footwear. There, you are seeing that inflation actually has come down from the print that we had in the month of October. So overall, I would say a very, positive and in line expectations print.
Okay. Oh, that's important. That the GST impact is also working into especially footwear and clothing, as you point out. Sameer, there is one other new factor that may come. We'll come to Sameer in just a minute. We are still having some connection issues. Kanika, the month of November, mid-November, we started seeing the depreciation of the currency. And now if you take from mid-November to mid-December, the currency depreciation is almost 3%. Do you think that December can throw up a surprise because of this depreciation, some increase in inflation, or do you think the Reserve Bank's forecast of 0.6% remains?
So thanks, Lata. See, 3 points there. First is just on today's print, CPI ex gold is still negative. Yes. It was minus 0.55% last month. It's minus 0.1% this time. So gold is remaining a key contributor to inflation dynamics. And of course, a large part of gold is also imported. So that's another channel through which currency works. Now, going forward, as you rightly pointed out, yes, currency depreciation can have an impact. If I go by RBI sensitivity, it is 5% rupee depreciation affects inflation by 35 basis on a 12-month basis. There's only one catch there. While rupee depreciation is likely to have an impact on inflation, the quantum may not be so high because a large part of this quantum comes from energy price changes, retail petrol, diesel prices, which have been practically kept unchanged by the government for the last 3 to 4 years. That's one. Second, maybe there's actually a lot of space with OMCs facing over recoveries and also with the government to absorb some impact. So absolutely right. Rupee depreciation likely to show some impact on core CPI, currently at 4.35%, 4.34%. Core ex gold, very well contained at 2.6%. So gold contributing 85 basis points to inflation itself may see further pain on CPI, may impose further pain on CPI via rupee depreciation and other segments as well, via metals, raw materials, to some extent on core in December.
Okay. Yeah, fair point. I mean, I must take your point on gold. If you took an average price of gold in 2024, it works out to $2,300. And if you took an average price of gold from Jan 1st, 2025 to today, the average works out to some 3,500. So we are looking at an over 50% average rise in gold prices, which is making the CPI number look higher, and the core CPI in particular, higher than it needs to look. So ex-gold, we still are running a negative inflation. Do we have Samir with us now? Okay, we'll get to Samir in just a minute. But let's get an idea of what is happening in the bond markets. Anurag, bond market is oblivious. Ever since the governor announced supposedly a more than dovish expected policy, he not only gave the expected cut, he gave buckets of liquidity and promised that liquidity will remain available in the months to come as well. But y'all are sitting at 6.61. Will this number have any impact at all? Or did it have any impact at all?
Yeah, good evening, Tata. I think the bond market currently is more worried about the supply in Q4 from one SDL. Probably market is expecting around 4.5 to 5 lakh crores of SDL supply in Q4. Also, now the bond market is working on the next budgetary numbers and what was the kind of gross borrowing we can expect next year, which is also looking around 16 lakh crores, assuming a 4.2, 4.3% fiscal deficit. So there also, I think the supply concerns are right now overweighing the current liquidity support by the central bank. Also, I think with this kind of inflation behind us, while the first half inflation next year is projected at around 4% by RBI, in the second half, probably because of these base effects, inflation should be closer to around 5%. At least as per our estimate, Q3 next year should be around between 4.8 to 5. So with these kind of numbers, I think the forward-looking, any easing outlook is, I think probably we are in a lower for longer setup. So with rates being closer to 5 quarter and the upcoming supply, probably there is not too much of incremental interest from the bond market to add duration at these levels.
Oh, okay. You're expecting for Q3 of next year to be that bad in terms of inflation? I mean, the way the Reserve Bank moved to bring down its inflation forecast for Q1 and Q2, I don't think many people are penciling in a very high inflation even in Q3 and Q4. I mean, they started off Q1 at 4.9, they brought it to 4.5, now they have made it 3.9. So, I mean, I don't know if the street shares such a hawkish view of inflation. If I remember right, I'm getting an average of 4 for next year, that is FY27. But separately, you raise a very valid point that the market is now less bothered about inflation and rates. It is worried about supply. And there is a state government supplies that is usually hitting in the last quarter of the year. And what will budget 2027 tell us that is due on February 1st? Samir, that question directly to you. This inflation number largely in line for you, and therefore bond markets will only look at supply. You agree with that?
No, I agree that our number is pretty much in line. We were at 0.66, so not major difference. And the market dynamics directly move towards demand supply. And as already discussed, that budget is due, and we'll have to look at how overall, both from center and states, the overall gross borrowing and net borrowing numbers shape up. Also, I think the bigger elephant in the room would be how this demand or supply will be absorbed. RBI has been a big buyer of late in terms of the overall supply coming in. So we'll have to wait and see what the BOP position is going to be next year, and how much would the RBI absorb? How much would the other market participants absorb going forward? We had also seen a change in the LCR norms, which had led to opening up of from a supply side perspective, possibly more credit being available rather than more investment demand. So that probably is also now should ideally be behind us. So all of those factors will play a role, and also whether the Bloomberg bond index inclusion happens or not, and what kind of demand that generates. So there are a lot of factors at play going forward. Hopefully, the ball will start rolling with the Bloomberg index, announcement in January, and the budget after that.
Oh, that's interesting. At least you have one positive point to tell the bond markets. What is the Bloomberg inclusion, if it happens, likely to mean in terms of demand? I mean, how many $1 billion expected?
So 0.7% around is the weight. So that should lead to anywhere between $20 to $25 billion of fresh demand.
Oh, most welcome. That would be very welcome. I am getting an average SDL plus GSEC supply for next year at 10% higher than this year. This year, I think FY26, most of you are working with about 27.5 trillion rupees, 27.5 lakh crore rupees of supply. The average I've got so far for my FY27 poll is about 30.5 or 30.7 trillion. So that works out to 3 trillion or 3 lakh crore more. And what I was noticing is that insurance companies have all posted far lower profits in the current year. They're growing slower. So the demand from insurance, it may be incremental in the general scheme of things, but that demand also is not what was perhaps extrapolated 2 years ago in terms of demand for G6. So the Bloomberg index would be welcome. Anybody here expecting a rate cut going by these numbers? Sakshi?
Well, Lata, I still do believe there's space for the RBI, given these numbers, given what we are projecting on inflation for the next 6 months. Look, I mean, for Q3, we are expecting an average of close to 0.6. For Q4, we are looking at, sub 2.5%. And next year, Q1 and Q2 again are going to be close to 3.3, 3.4 based on the current, inflation series. So I still do believe that there is space for the RBI to further reduce the policy rate and go down to 5%, because clearly on the inflation front, you have space, while on the growth front, I think that, given the uncertainty around the trade deal, we don't know how much of the momentum in the festive season kind of continues. I mean, given all those factors, they might as well lean towards supporting growth and utilize the space that is available.
Yeah, that may well be. I'm going to ask you an unfair question, Kanika. Any guess at all whether the new CPI series will make us look better or worse? In terms of, will inflation surprise us on the downside because of the change of the series in the base year?
So, Lata, when we were making just preliminary estimates, it looks like the surprises on the downside rather than the upside. Maybe by 20-30 basis points is the initial estimate. In fact, it's floating in the market as well among economists. But let's see what are the contours. In fact, the fears on even housing inflation, not including government housing, even if that gets incorporated with a greater share of rural-related prices coming into CPI, apart from e-commerce and all, we may see a downward bias is my guess as of now. And share of food also coming down. As food CPI has bottomed out, we're in an upward phase. That may also help.
Okay.
So overall, we think downward bias of 20 to 30 basis points on new CPI inclusion starting new CPI index starting February.
Okay. Well, we have to take a quick break. Just a couple of more questions when we come back from the break in terms of what to expect in the budget and what all of you are expecting in terms of where the 10-year is headed and where the repo rate is headed. Back in a minute.
"26 years of CNBC TV18. "26 years of CNBC TV18.
Welcome back to our State of the Economy discussion. We've been discussing the November CPI numbers that have just been announced by the government, and the numbers come in almost entirely as expected. Our poll threw up 0.79% and we've got a 0.71%. So not very different. Food inflation has come in at -3.9. We had a poll of minus 3.5, give or take. This is largely in line with expectations. And services core sector inflation coming in at 4.4 would also be much lower, probably more like 2.5% or 3% if you deducted the price of gold, the weight of gold from that index. So it's basically a subdued inflation, and the October, November, December inflation, which was forecast by RBI at 0.6%, looks very much likely to be attained. I have been speaking with economists Sameer Narang of ICICI, Kanika Prashrita of Union Bank, Sakshi Gupta of HDFC Bank, and with the fixed income expert from UTI AMC, Anurag Mittal. Gentlemen and ladies, thank you very much for your patience and for staying on. Let me get your views now on the bond markets and the repo rate itself. Sameer, repo rate for FY27 and the bond range. Okay, I won't go all of next year, say for the next 3 months.
So for the repo rate, we believe, it's probably the end of the cycle because in H1, FY27, RBI's rate is around, projection of inflation is around 4%. And, given the current repo rate, the real rate of the new, it's around 1.3, 1.4, which is at the lower end of its range. And interestingly, even the US Fed, it seems like the neutral rate is a bit higher, which was earlier around 0.5%. So in this context, if the neutral rate in India remains around this, we believe, given the current inflation trajectory, this is the number, and this is pretty much in line with what we feel will happen in terms of the overall inflation next year. So on the current inflation trajectory, we don't see any more room for rate cut unless and until it,
And your bond range would be 10-year bond range would be
10-year bond rate will be around 6.4, 6.65 around that.
Okay, well, it's already at 6.6 and 6.59 to be precise. Anurag, we just have a couple of minutes more. If you can just tell us your range for the next quarter for the 10-year.
I think it will also depend a lot on RBI's OMO in next quarter as well. So provided RBI does about 1.5 lakh crores further of OMO, probably 645, 665 is our guess as well.
Okay. Very quickly, one number. What is the OMO you're expecting next year, FY27? I got a number of 6 lakh crore. That's why I'm asking you.
It will also depend on FX flows next year.
Fair enough.
So I think it's very... So if the US-India trade deal is probably materialized and...
Then maybe FX will not be the source of adding liquidity. Sakshi Gupta, what is your 10-year range for the next quarter and OMO guesses?
So, Lata, for next quarter, our 10-year range, if RBI does more OMOs in January, or February, then we would look at about 640 to 650 on the 10-year. I think that there will be some positive news that will get priced in. I'm also factoring in that there will be a trade deal announcement. There will be, capital flows that will come in. So all those things that are kind of buttressing this forecast. Okay. On the OMO for this year, given how things have been happening in the, FX market and the drag there, I do believe that there's space for them to do, I agree, 1.5 lakh crores. That number could go up if even by, December end or January, we don't see an announcement of a trade deal and the rupee is under further pressure.
Okay. Well, actually, you are completely out of time. Kanika, just one more number that the market will look at on Monday, mostly on Monday, the November trade deficit. What are you working with?
So, Lata, there we are working at $33.5 billion. Coal demand more than 100 tons last month.
Got it. I'll leave it at that because we don't have time. Just give me your November trade deficit number, all of you. Sameer?
Yeah.
Your November trade deficit?
30 billion. 30.
30. Okay. Kanika is at 33. Sakshi, you're at?
We are also at 30 billion right now.
And Anurag, you have a number or you don't care?
Similar numbers.
Okay. Well, October was 40 billion, 41 billion, and that started the decline of the rupee. If you remember, it was around November 15 that the rupee started declining when we heard the October deficit number, which is why I thought, let us be prepared for what Monday has to offer in terms of the trade deficit numbers. Well, that's it on this edition of the State of the Economy. Sakshi, Kanika, Sameer, and Anurag, thank you very much for joining us. Stay on. More news and updates are lined up for you viewers after the break.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Hello and welcome to News Center. I am Ashmit Kumar. Now, we have a packed lineup for you today. The first story on our radar, the Indian government is considering a proposal that would require artificial intelligence companies to pay royalty to creators for using their copyrighted work. Now, these companies will have to pay creators for content used to train models. Under this proposal, the central body will be set up for collecting royalty payments from these companies. The royalty will then be distributed to creators whose content has been used for training the models. The working paper is open for public comments for 30 days. Remember, no country has a statutory licensing regime for AI developers just yet. To tell us more about it, to what the challenges may be, what the concerns may be, is with us the founding partner of the Quantum Hub, Rohit Kumar. Rohit, thank you so much for joining us. The first question what I want to ask you is that the situation that we find ourselves in, where we're promoting AI as well, at a time now we're coming in with this proposed policy of introducing royalty-based payments for creators. How sustainable is this going forward, given as how we're short of a global precedent? We've not seen any country do this. India appears to be the first off the boat. How sustainable, how viable is this plan, this proposal?
So I think you're absolutely right. India seems to be one of the first ones that is attempting to do this. Globally, different kinds of models have been tried because unfortunately, nobody seems to have the right answer. And the tech has advanced really rapidly. There are a lot of positive use cases that we see for the tech, and therefore governments want to sort of make sure that that innovation happens. But at the same time, it is pitting creators against AI companies whose content is copyrighted. Now, I feel, and this is my opinion, that the committee has tried very hard to try and balance these competing interests. At one end is innovation, and at the other end is protecting creators' copyright, and also maintaining the incentive to create more in the future and to make sure that their revenue doesn't decrease. But I feel that in trying to do that balancing act, the committee has come up with something that I, number one, don't think is very feasible. It's not sustainable. And I feel that it is actually an example of a policy that is likely to fail strongly in implementation. And I'm happy to give you reasons. But globally, a lot of different models have been tried, and there is resistance to most models across the globe. Either the
So
AI
not viable.
Yeah, sorry.
Not viable, not sustainable, potential failure of this model. Strong words you're using there, Rohit. Help us understand the reasons behind that. One of the concerns that we found that was put out there on social media was by creators saying that, look, I'm losing my sense of agency. I will not be able to negotiate now with an AI company. There is no opt-out mechanism for copyrighted work. Is that also a concern?
That is also a concern. I would come to that a little later, though. I'll tell you the first important concern is that, it's been said the way the government is trying to sort of balance this act is say that I'll do a mandatory blanket license so that nobody is able to opt out. And the reason for that is that, ultimately the technology is as good as the data sets and the material that is available for it for training. And India wants to develop models that are contextually relevant, that farmers can use, that, understand the Indian cultural context to be able to produce those outputs. But if there are holdouts because, creators groups sees this as an opportunity to make revenue and the tech is not able to advance, then India will lose out in that race, right? Having said that, so what the committee said is that we'll do a blanket license, no opt-outs, but the government will set a rate which all AI companies have to pay a royalty on. That will then become the money that will flow to creators. But the way they have done it, they said that the government committee will decide a certain percentage of revenue, gross global revenue of models that have been commercialized, that will accrue to these creators, that will be collected. Now, there are multiple problems with this construct, right? Firstly, models are being developed globally, and some models may have trained only a small amount of Indian content, but we are tying their global revenue to make a payment. And then there is also, in some cases, if you see, models may not be deployed independently. Like you see, Gemini, for instance, has been integrated in search. So how do you decide how much of search revenue should be attributable to Gemini? And then on that basis, how do you decide what percentage should come to Indian creators, right? So I feel that
Yeah, so a number of operational challenges that you've pointed out on the side of the companies as well. From the side of the creators, does this loss of agency, the inability to negotiate, a creator not having agency on their own creation, not being able to negotiate, will that also come in the way of perhaps realizing what could be a good, a sustainable remuneration for the creators, for the creator economy at large?
It will, because right now, see, ultimately all content, copyrighted material cannot be placed on equal value, right? In fact, currently, if you see some of the AI companies negotiating deals with media houses or publishers, etc., globally, and they're valuing it at different levels depending on, what is the value that that content brings to their model. For instance, right now there are deals happening between TV producers, media publications, etc., and each is valued differently. So I feel that creators who are currently being able to demand more in the market may feel shortchanged, and may feel that their art is not being valued the way, or their work is not being valued the way it can be valued in a free market. Whereas the creators, there are many creators right now who are not even coming to the negotiating table because they're not aggregated, or they don't have a voice. So I think the government has tried to, find a compromise solution where one side loses to some extent, but the other gains. But I feel that the solution that they come up with is not going to either.
So the government trying to walk the middle path here, at least that is what the DPIIT officials were telling us. But going forward, of course, many questions being asked about how sustainable this approach will be going forward. Open to public comments. The government saying that if this were to go forward, they could possibly consider an amendment to the Copyright Act. But that's unfortunately all the time that we have. Rohit, thank you so much for joining us, being a part of this conversation. But moving ahead now, the second story on our radar today, the government has told the parliament that India has set its own air quality standards, and WHO guidelines are only advisories meant to help nations frame metrics. In a written reply in the Rajya Sabha, the Minister of State for Environment, Vardhan Singh, today said that global air quality rankings cited by various organizations are not conducted by any official authority. He added that the World Health Organization's air quality norms serve only as advisory values and are not binding standards. A report by Switzerland-based air quality monitoring company IQ Air earlier this year had highlighted that 13 of the world's top 20 most polluted cities are in India. Lok Sabha Leader of Opposition and Congress MP Rahul Gandhi has called for an urgent and cross-party debate on the worsening of air pollution crisis. The centre has agreed to conduct this discussion. To take this ahead, we're now joined by Amit Bhatt, the India Managing Director for International Council for Clean Transportation. Mr. Bhatt, thank you so much for joining us. Again, first question. These are some very credible indices that we're talking about here. The IQ Air World Air Quality Rankings, the WHO Global Air Quality Database, the Environmental Performance Index, Global Burden of Disease. These are very highly reputed, and they are very widely considered indices across the board when it comes to policy making. India seems to, however, not too keen on accepting the findings. And that's one consistent finding, that India is, in fact, some of the cities here are some of the most polluted. Reasons why you think the government here is not too keen on accepting the findings of some of these very credible reports that have been put out in the public domain?
Absolutely, Ashmit. I think if you look at even the global air quality standards that countries have, and these vary across geography. So, for example, if you look at so what WHO says is in terms of the guidelines on particulate matter 2.5 exposure is about 5 on an annual standard level, and about 2 on 24 hours basis it is about 15. And if you take that number and compare globally, it varies across geographies. And so the reason is that so if you have to fight air pollution, it has to be a long-term fight, a sustainable fight, and it requires a lot of action. And sometimes it will take time. Sometimes the decisions may not be very kind of forthcoming, but I think the action has to be all around the year. But again, as I said, the variations are there across the geographies. But again, if you look at closely the data, the standards are very stringent, especially in the developed countries as compared to developing countries.
Just one follow-up question to that, Mr. Bhatt, that when we look at these findings, they're not terribly inconsistent with what we experience on a daily basis. Even when we have our AQI monitors at home, some of the AQI sensors that are publicly available, it is not inconsistent with that. Is this something that the government now needs to reconcile with, that the government, that the findings of these reports may be extremely damaging for India's reputation, but it is consistent with situation that we have actually on the ground?
Absolutely. And that's what I was trying to allude to, that if you look at findings even from the low-cost sensor data that has come from maybe various cities, the findings are pretty consistent that air quality is pretty bad in Indian cities. While it is severe across the Indo-Gangetic plain, yet if you look at a national level average, I think almost cities that have air quality data, almost 70-80% cities require almost 50 to 70% reduction in their particulate matter exposure, even to meet the Government of India guidelines. And if you look at the WHO guidelines, then all the cities actually fail to meet the WHO guidelines. So I think it is very consistent, but I think we have to understand that air pollution fight is a pretty systemic fight, where you have to look at a regional approach, an airshed approach. Only then the action will happen. It is not limited to action in cities or just one or two geographies.
One common finding that comes to us through medical professionals is that the air quality levels that we currently have, say, for example, in the national capital, will have very severe, long-lasting implications for one's health. However, the rationale that seems to be coming from the government is that there is no conclusive data to establish direct correlation between death or disease and exclusively pollution. Again, is it a case where we're not using the right data points to inform policy decisions? Is there a better data management system that we need, at least when it comes to sensitive issues such as air quality management?
No, absolutely. And again, so if there is no conclusive air quality data which links public health to air quality, I think government can absolutely fund a study which can throw this data. So, and we have pretty well-established organizations, government institutes which can do this. So that's absolutely doable. But again, if you look at anecdotally, and if you look at things like asthma, pulmonary diseases, even in the kids who are, taking leaves from school, especially certain time of the year, you will find a very stark correlation between deteriorating air quality and public health. So we have very strong empirical data, even a lot of anecdotal data, but there is always a possibility to fund a scientific research and get the data on board and take some action on it.
Right, Mr. Bhatt, thank you so much for joining us. Clearly, this is an issue that doesn't need a red flag, but a number of indicators pointing in that direction that we're clearly not doing enough. There is a comprehensive solution required going forward to this air quality crisis. Mr. Bhatt, thank you once again for joining us on the show. But with that, we're slipping into a very short break. But coming up, a US ambassador to India says that the telephonic conversation between Prime Minister Modi and President Trump was a great call between two friends. A special conversation with Pramit Pal Chaudhary of Eurasia Group when we return on the other side.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Welcome back. You're watching News Center with me, Ashmit Kumar. Now, trade negotiations between India and United States continue to gather steam. Sergio Gore, the U.S. ambassador to India, has said that the telephonic conversation between Prime Minister Modi and President Trump was a great call between two friends. The Indian government said that both leaders reviewed progress in the strategic partnership and agreed to work closely to address shared challenges and advance common interests. The phone call between Modi and Trump was their first since Diwali. Remember, both countries want to seal a framework agreement by the end of this year. And to help us understand what this road ahead now looks like, how far away this trade deal is, I'm now joined by Pramit Pal Chaudhary, Practice Head of the South Asia Division at Eurasia Group. Mr. Chaudhary, thank you so much for joining us. We'd just like to quickly draw your attention to a couple of triggers here. Number one, the US negotiators are here. Number two, there are reports of India committing to some form of defense purchases from American suppliers. Number three, we now have this latest call take place between the leaders of the two countries. And the ambassador here telling us that things are as the best they've ever been between the two countries. The question I want to ask you is that, is this the closest that India-US have been to a trade deal in the last 12 months?
No, not really. I mean, let's put it this way. It's hard to tell because we don't have the actual negotiation details. But we know that roughly in a period running between June and September, India and the US negotiators actually came to at least a first tranche trade agreement. But in each case, President Trump rejected it on the grounds that he felt India had not made sufficient concessions, largely in the realm of agriculture and in some cases goods. This is now the fifth such occasion where the negotiators have more or less concluded an agreement and they're now waiting for President Trump to give the political green signal. So the question really is the signaling from Trump positive? Because he alone really holds the key to this. Prime Minister Modi, Indian system, has been more than happy to agree to the previous agreements. There, I think, yes, the signposts are positive. One is that, of course, that they're actually talking, and this conversation, it seems, didn't really have any purpose. In other words, the previous calls have been over Modi's birthday or congratulating Trump on his diplomatic efforts. This seems to be being quite impromptu, which is a good sign. Trump runs a very personalized foreign policy, and the fact that there was a gap between June and all the way till September was in fact a very bad sign in the relationship. And we have reports that Modi refused to talk to Trump at least 3 times during that period, which is somewhat unprecedented in diplomacy. Now that they are talking, and they are talking, it seems, on a reasonably random basis. Second, as you mentioned, the USTR team is here, and though they are not here for any genuine line-by-line conversations, what we do know is that they are very, very close to a first tranche agreement. I don't think we will have time to complete it this year, but I think you saw Anant Nageshwar, the chief economic advisor of the Indian government, say by the end of this fiscal year, he would expect to do.
Right. Let me follow that up with the Indian perspective. Is there now a sense of urgency creeping in? A lot of exporters are shipping goods despite the tariff losses in the hope that there will be a trade agreement. Does this put India in a back foot that we're now eager to close a deal as soon as possible, that the clock is ticking for India to wrap this up to ensure that there is no severe hit coming in for Indian exporters, the textile industries, the industries that are impacted?
I actually think to some degree what's happened now is that both the Indians and the Indians, I think the American view was that they had leverage on India, both in terms of the 25% punitive tariff on Russian oil, as well as the original 25% tariff. But what's actually happened is the Indian economy has thrived despite the tariffs. So, of course, would do better if the tariffs weren't there. But, you know, when you're recording 8% plus growth in a quarter, very clearly the tariffs are not having the kind of impact that Trump has. Trump is very transactional. He's also a very aggressive negotiator. As you can see, he's done with almost every other country in the world. It's not specific to us. And I think we're starting to see the American side conclude that actually these pressure points are not working with India. So therefore, you're moving to a negotiating process, which is much more one of trying to get a deal rather than trying to, should we say, force the other into a sort of coercive status. So I think, therefore, we're actually in a better shape than we were before.
We're running out of time. I'll just come to you for one final question that for long, India has maintained that there are red lines that it has as far as agri products are concerned. To get that final nod of approval from Donald Trump, will it require India to perhaps make certain compromises when it comes to those red lines on agri products?
Yes, I think that for Trump, that's really the only thing that really matters to him. It's his MAGA farmers in Iowa, Kansas, Nebraska, who are the core of his political constituency. If he does not give them anything, for him, this trade deal is useless. So I think what the compromise area is that since India does not allow genetically modified food crops, at least at present, the actual grain we will not necessarily buy, but products produced by those grains we have allowed into this country before. We are one of the largest importers of soybean oil in the world. We import livestock feed. We import ethanol, certainly made from corn. We don't necessarily need all of it right now, but that gives you that space to make a concession on agriculture that would fit in with our requirements.
Right, Mr. Chaudhary, an interesting perspective that despite the red lines, there is wiggle room available to India that it can exploit going forward as a part of this trade negotiations. But I'd like to thank you, Mr. Chaudhary, for joining us, being a part of this conversation. Mr. Chaudhary, they're saying that it's unlikely that we do it by the end of this year, but optimistic that perhaps by the end of this fiscal FY26, that's March 2026, there could be light at the end of the tunnel. But with that, it's a wrap on this edition of News Center. More news and updates will continue right here on CNBC TV18.
"26 years of CNBC TV18.
reshaping early-stage innovations to reimagining entire industries, few investors have attempted to rewrite the playbook for venture capital the way General Catalyst is attempting to do. In the last year, GC has raised $8 billion to fuel a new wave of AI-led innovation, rebuild healthcare systems, strengthen defense capabilities, and back companies that can define the next century. Its footprint is expanding across the world, and India is right at the center of that strategy. $100 million investments into defense tech innovator, Rafe, a major bet on integrated healthcare with PB Healthcare, and a defining role in India's quick commerce segment with Zepto. These are just some of GC's India bets. Leading this new era of purpose-driven capitalism is its CEO, Hemant Taneja, an investor, author, and one of the most influential thinkers in technology today. He joins us now on Young Turks Reloaded. Hemant, great to have you back on the show. Thanks very much for your time. Let me start by talking to you about how you reflect back on 2025. It's been quite the year. AI surging. We've, of course, had a fair degree of volatility and uncertainty as far as geopolitics is concerned. I remember you called it the year of peak ambiguity. Is that how you would sum it up?
Yeah. First of all, thanks for having me. Look, it has been peak ambiguity because you saw from a geopolitics perspective how relationships between countries, look at US, India, for example, how that was pretty volatile. And then there continues to be a lot of volatility in the capabilities of the technologies. So we started the year with a really clear view that we have to navigate a lot of ambiguity as we think about building the next set of businesses. Now, what I think about at the end of this year is I actually think we're going to look back and say 2025 is a year that diffusion of AI started. So if you go back to November 2022, when ChatGPT was launched and everybody all over the world, every CEO, every industry, every country was thinking about what to do with AI.
Yeah.
So all these companies got started in different industries, vertical language models started getting built, AI roll-ups, a lot of activity. Now what's happening is you're starting to see evidence of what AI can do in how it melts labor into productivity. And this is the year we're going to look back and say it's starting to show real capabilities in production.
I'll get to AI in just a second, but let's address the issue of geopolitics. And you come in here from the Valley. What is the mood at this point in time in the diaspora, especially as far as how this relationship has turned out under the Trump administration? We don't have a deal yet. There's a question mark on when that deal will happen. Is there a growing despondency or frustration on where things currently stand between the two sides?
Look, I think there's definitely disappointment because one of our core beliefs was, given how strong the Indian diaspora is in the technology sector in the US, that there was naturally going to be a deep collaboration between US and India, especially on technology matters. And so there's disappointment that hasn't yet happened. And in fact, even when the tariff discussions started, the thought was India was actually going to be on the front of the line at sort of resolving what those relationships are going to be like. Having said that, I do believe in the long term, it just makes too much sense for these two countries to be working closely together in the context of geopolitics, in the context of innovation. And I remain optimistic that we're going to get there.
Geopolitics aside, it doesn't seem to have put the brakes on investors looking at India, US investors looking at India. We've just had this week, Amazon announced $35 billion of fresh commitment to India, $17.5 billion from Microsoft. And of course, the VC money continues to come in. Do you see any indication or evidence that this could potentially impact investor sentiment?
Not really. We are very optimistic about the opportunity in India. I did a review with our team in Bangalore yesterday, and just looking at the kinds of companies that are getting built, the traction they're having, it just speaks to the growth opportunity in India. Now, as we were mentioning earlier, we are actually trying to build resiliency in all the key sectors: healthcare, defense, financial services, and innovation is going to only flourish there. And given the fact that it's such a growth market, and the entrepreneurial DNA is so strong, and you've got all these IPOs happening, which is just motivating for the founders. I just think it's only going to accelerate.
Let's talk about those IPOs, because Venture Highway was the investor in Meesho. Meesho is one of the listings that we've seen happen. There's been a flurry of them, from Lenskart to Urban Company to, of course, the most recent one being Meesho. What do you make of this move to the Lal Street, of the listings that have taken place? Most of them have done well. Some of them have, in fact, come up very sharply, like Ola, from their listing highs. But on balance, what do you make about the Indian IPO story specifically from a new age startup point of view?
Look, first of all, it's just great to see that there is an IPO market. I think the other thing is what I see, which is it just encourages more capital into the sector. But what I see that's really interesting is think about the kinds of business models that are getting built. It reminds me of what happened in China 20 years ago. So you got these unique companies that got created that were especially for the growth opportunity in the country itself. And that's what's happening. And that's really exciting to see. You know, the first set of IPOs that we talked a lot about were companies like Crutchworks, which were really global software companies taking advantage of the fact that you can build them here cost effectively. But now it's about India's growth, India's quality of life, and the innovations that can make a difference for people. I think those are going to be some of the biggest outcomes. So we're very excited about what these companies are doing.
You know, and just on that point, I remember you said that it's not fair to look at these companies from a Western lens. Explain to me what you mean by that, especially in the context of how people judge this addressable market debate and what that eventually means as far as opportunity as well as valuation is concerned. How do you look at what we've seen happen both in terms of market opportunity, valuations, as well as the path to profitability?
So look, there's a lot of conventional ways you look at the Indian market. The affluent spend demographic isn't that strong and whatnot. You have to think forward. If you're growing at these kinds of rates for the next 10 years, what is that opportunity going to be? So what you're starting to see is these business models that are very robust. And if you look at them, maybe in the context of today's TAM, perhaps they will seem small to you. But as the market is growing, it's such an expanding market that these are going to be really interesting companies. I mean, the idea that you'll have 30, 50, $100 billion companies, serving the consumer demographic. And over time, I think in the other industries, healthcare, defense, and so on, that would have been very difficult to imagine. And I can totally see that happening in the next 10 years in India.
In the next 10 years?
Yeah, absolutely.
Yeah. How do you respond then to the fear that India has not really been able to establish itself as far as the AI map is concerned, and that could potentially be a threat going forward, and which is probably why we haven't seen the kind of FI inflows into India, because we don't have an AI stock per se. On the other hand, the argument is also that this perhaps de-risks us, because if you do have an AI meltdown in the rest of the world, then India perhaps will be in good stead. What do you believe India's role is going to be in this AI era?
Yeah. So look, our view of the world is there are two big trends. Global resilience, where every country is trying to figure out how to create strategic autonomy in key industries. AI would be one of them. Defense industry, industrials, healthcare, and so on. And the second is the AI sort of capabilities. I think the global resilience trend is very strong in India. And so if you build the next generation healthcare companies and defense companies here, and you make them viable and market leaders, they are going to be well positioned to be global companies. So that part is actually working super well. When you think about on the AI side, India has a lot of challenges in my view. I think a few things to just mention. One, we don't have the infrastructure. You don't have semiconductor capabilities or cloud or models. And if you were to start today, you would say it'll take you 15 years to build that, and you don't have 15 years. If Indian companies are going to be globally leading, they can't be waiting for 15 years for those capabilities. So I think that's an issue.
So what should we do?
Well, so I was going to say, but you do have a lot of open source capabilities that are there. So I think India in the short term has to lean into it while figuring out what to do in terms of developing local model capabilities. So I think that's there. I'll tell you the other challenge that's very top of mind for me in India is we also have the youngest demographic here. So on one side, you have to put all those people to work in interesting jobs that sort of create upward mobility. On the other side, if your companies are going to be globally leading, they're actually going to be very efficient from a human capital standpoint, just given the AI productivity. And that tension and thinking about what the workforce demographics need to be, what the opportunity needs to be for the emerging workforce, I think that is probably a really important topic for India to be thinking about uniquely.
You know, but what is happening as far as the workforce is concerned? We've seen, numbers coming in from the Valley, both in terms of layoffs as well as hiring freezes. Even here, people are now talking about the fact that, 18 or 20 or even higher percentage of their coding is being done by Gen AI. So what are the big trends emerging as far as the workforce is concerned, and what the workforce is going to look like 5 years on?
Look, I think the kids getting out of college, my daughter just graduated this year from college, finding a job.
What are you telling her?
It's actually incredibly hard for them because she is in programming, and when to your point about using AI models effectively, I think those the entry-level jobs in AI are being done by Claude, or pick your favorite coding agent. And
which is yours?
We're investors, big investors in Anthropic, so we're champions of cloud. That's why it naturally came out of my mouth. I would say so. I do think that's sort of a challenge, but the key is how do you train these kids to use AI effectively? And if you think about what an enterprise is going to look like that truly effectively uses AI, those enterprises are going to be a workforce where humans are managing agents, agents are managing humans. So it's a very different kind of an organization. And so learning how to work with these agents and having those skills are actually going to be almost as more important than how effectively can you code to be able to work in these technology companies. So I do think the pedagogy has to change in terms of what you're teaching students as well. And that's education sector moves slowly, but we have to figure this out relatively quickly to say, how do you train kids that are getting out of college to be very effective at using and managing AI for the day-to-day jobs.
You talked about Anthropic and also IPOs. So both from a global point of view as well as an India point of view, 2026, another blockbuster year for IPOs?
I'm very optimistic. I think there are a lot of companies that are thinking through going public. Frankly, the second half of this year would have been where a lot of IPOs happened, but given the uncertainty because of geopolitics, I think that got pushed. But I do think now there's a lot more stability in the markets, and the issue never was, are there enough companies to go public? The issue was more, when do those CEOs want to put those companies into the markets where they control their destiny as much as possible? I do think next year is a very exciting year for that.
But so how do you weigh in on the valuation debate as far as AI is concerned? Is it too much? Is it too soon? Are we closer to seeing a correction or perhaps even a meltdown? I mean, what's the read from your vantage point?
So I think I'll give you a nuanced answer to that. First is, Anthropic raised that $160 billion valuation. I would say in the value, that was probably on a multiples basis the cheapest deal that got done. The number sounds big, but their revenue is also big. And so it actually wasn't sort of a crazy multiple in that regard. So these model companies are actually, accreting valuation because they're just on this hyper-growth trajectory. So I think we just have to sort of get our arms around the fact that there's a handful of these companies that got built to be very, very large, very, very fast because of AI, because AI compresses progress. But I would say on the other side, what that does create, obviously, is FOMO. So now everybody wants to fund their next research out of OpenAI or Anthropic in the hopes that they can build the next model. There's a lot of money going in there at extraordinary valuations, and it's very unclear to me what happens to that. Okay, so that to me is where, if you were to say, is there a bubble? There's a dynamic there that's very hard to explain, except that if one of those got to AGI, it would be worth it. And so smart investors are saying, let's index them all, and hopefully one of them works and it'll be a good return.
So you're saying the bubble is outside of the 3 or 4 big guys?
Outside of the big guys. And then I think if you look at the applied AI on top of that, going back to my earlier comment that diffusion did start this year, I actually think their real business is getting built. And then you're going right after the labor spend, and these companies are capturing value and scaling very, very fast compared to the way the SaaS companies and software companies got built 10 years ago. So I think in that sense, it's actually really, the exuberance around will science lead to new models, where I personally feel discomfort. A lot of the other places we're investing, I have a lot of confidence that, wow, they're just some extraordinary businesses to build there.
So discomfort about
research models.
Okay.
That's where I sort of struggle as to how do you fund these research teams with such large amounts being spent, predominantly on compute, not really knowing. I mean, these are science projects.
Yeah.
You don't really know if they're going to work, and then they have to go build a business on top. And so how do you really think about allocating capital to companies like that? Very, very hard to figure out.
So is concentration risk a big concern for you as well today? I mean, it is captured now just by a handful of players in this space in the AI market.
Well, I think the biggest amount of capital is going into these couple of models that have already sort of broken through and have escaped velocity. So that I think is I actually think is rational investing. If these companies were public, you wouldn't be saying what's going on. So it's just public market behavior in the private markets. I just think valuations in the applied AI layer are aggressive, but they speak to the fact that these companies can create progress really fast. That doesn't really, I actually think that's not going to be where the biggest issue is going to be in terms of capital loss and stuff. It really comes down to when FOMO sets in and everybody has to make decisions really fast because so many deals are happening and investors don't have time to properly think, that you start to see undisciplined behavior. We just saw it with COVID. Right after COVID a few years ago, we seem to have forgotten about it, and we're back onto that kind of a behavior again in the
Is
AI
it
bubble.
more undisciplined than it was through COVID?
Well, it feels equally disciplined. I think in COVID, there was this huge sense that remote is the way to live.
Yeah,
and, so
and look where we are today.
Look, we're back, right? So that was just sort of a trend we started to bet on aggressively and see where that goes. With AI, it's different. It's more, are we just going to continue to have these incredible research breakthroughs? It's more like what happened with clean tech on the research side. And then on the application side, it's more like the internet, where there was about distribution, now it's about sort of transitioning labor into productivity. But so it's like two bubbles in one almost. So sort of one is around new modality and what it does to the labor productivity equation. The other is just science going and doing these breakthroughs. And that part is what scares me, and we've been very cautious about how you play in that.
But what about monetization? I'll ask you this in the context of what we're seeing happen, even as far as ChatGPT is concerned. I mean, in India, it's a free-for-all, right? I mean, everyone is throwing their service at the customer for free. So what are we talking about in terms of actual monetization? Is it still like a couple of years on?
Look, I think for ChatGPT, this is going to be the key challenge, which is if you look at their cost structure, and you get effectively charge consumers for the service itself, how's that going to play out, and can you actually converge that over time? I think it's hard to see how that works. Now, the market is so large that it's a very reasonable period to say you can grow into it, and there will be a very large company to build there. But they also have real competition from Google now.
Healthcare, and that's one of the big bets that you're making. How confident do you feel about being able to create those mega billion-dollar healthcare companies?
We're very optimistic about it. So we're doing a lot in healthcare all over the world. In the U.S., it's a $4+ trillion market, and we can't afford to spend $4+ trillion on healthcare. So the question is, how do you really build a proactive, affordable, accessible system there that can get us off of filling up beds in hospitals, which is really what the business model is there today. In India, a lot of what we think about, like, how do we not repeat what happened in the US?
Yeah.
Can we actually, from the beginning, think about scaling the infrastructure in a way that's best for consumers first and foremost, which is their health, and invest in proactive care business models, and then scale the infrastructure. You need more hospitals here. There's, Manipal's another one that's sort of on that journey. And so we did PB Health, as you know. To create that kind of aligned peer-provider relationship in healthcare. I think there's a lot to do there. And there's a whole workforce that needs to be created. And there's so much innovation happening in technology that, especially in AI, that can be brought in to drive that proactive care. So I think India's got an opportunity to leapfrog in health, just like they did in fintech.
And more investments in that space in India. You talked about PB Health, but
we're absolutely looking at more,
Yeah, but speaking of the innovation economy, and one of the key risks for the innovation economy is also regulatory capture, and we're seeing that play out in different ways in different parts of the world. How concerned are you about that?
We're very concerned. In fact, last year we launched the General Catalyst Institute. It's based in DC, focuses on Brussels and Delhi as well. And we are trying to be good thought partners to the administrations everywhere we do business to think about what these technology systems and these industry systems need to look like as we transform them for resilience and for AI. Because if you don't create a level playing field for startups, I think that has a lot of repercussions down the line.
Isn't that chapter closed? I mean, there is no level playing field today.
Well, I yes and no. I think my sort of source of truth is I look at the companies we're backing, right? Companies that are trying to build the language models in healthcare, or they're trying to, transform services companies into AI companies. And there's like real businesses getting built, and I'm very confident that they will be interesting at-scale public companies of the future. So there's a lot of that going on. So I don't think that opportunity has gone away. I just think there's a scenario where the same thing could happen what happened in the last 15 years, where we create a few $100 billion of value in the venture entrepreneurial ecosystem and feel good about it. But then the big tech companies create a few $1 trillion of system. That could still happen again.
Yeah.
And so a lot of our focus is how do we position these companies to scale? How do we give them real unfair advantages to all of our own transformations so that they have a chance to be relevant and at scale in their categories.
So what would be most exciting for you from your portfolio company's perspective in India in 2026, or if you want a longer term point of view over the next 5 years?
When Neeraj and I started talking about the strategy of how do we make a difference in India over the next 10 years, a couple of years ago, one of the things we really leaned on was what we need is platforms in all the key industries. I think we obviously very actively investing at seed stage for all the founders that we think are ambitious and have a good set of values and strategy. But on the other side of it, if we could build one or two platform-defining companies in each of these industries that shape the arc of how they're going to be developed over the next 20 years, like a Misho, like a Zepto, I think that would be really rewarding. Like a Rafi in defense. That to me is where a lot of the value is going to accrete, and we're going to feel very good about the fact that we helped create an ecosystem of innovation here that made a true difference.
So the capital allocation to India between 500 million to $1 billion, do you feel like you might want to spend more in India?
I'm actually, we're talking about this the other day, I'm very optimistic it's going to increase.
By how much?
First of all, not just in dollars, it's going to increase anyways because we're growing.
Yeah.
But I actually think in terms of the percentage of what we're doing, it also could increase. Because you just look at the size of what these opportunities are, and you look at these IPOs that are happening, and you look at the kinds of companies that we're building now, they're as good as what we're doing anywhere else. And so it'll naturally just happen. I think that our allocation could go higher. Could be 1.5 to 2 times that when we look back in 5 years.
So the top 3 predictions for 2026.
Top 3 predictions.
With all the caveats on the table.
Look, I think you will see one of the AI models go public at least.
I think I know which one.
Yeah, well, or a couple. I think we're going to look at workforce transformation will become a much more important topic. I think we're going to start to feel the effects of what these companies are doing, and that I think is important. And I think third one, like for India, and in general, actually, the IPO market is going to be very vibrant. I'm very optimistic we're going to see some great overall market activity.
Well, not just in India, but in the US as well. You think that there's going to be a pickup in the US?
I think so.
After a bit of a lull and a break, Hemant, it's a pleasure. Thanks very much for joining us on Young Turks and appreciate your time. And we look forward to having you back here.
Great. Thanks for having me.
Well, with that, it is time for us to wrap up this edition of the Young Turks Reloaded podcast. From all of us here on the show, thanks very much for watching. Send us your feedback and your comments. We always like to hear from you. Till next week, goodbye and thanks for watching.
"26 years of CNBC TV18.
Hello and welcome to Business 360. I'm Arundhati Ramnan, and these are the headlines that we're tracking for you this evening. Sensex and Nifty gain for the second straight day. Nifty reclaims 26,000, but all sectoral indices end in the red for the week, barring the metal index. Rupee hits a fresh record low of 90.56 to the dollar, but sees a swift recovery. Dealers say the recovery could be attributed to dollar selling by exporters and not just RBI support. Ambassador to India says the telephonic conversation between Prime Minister Modi and President Trump was a great call between two friends. Says Modi reiterated his support for Trump's efforts to bring peace to Ukraine. The Indian government says both leaders reviewed progress in the strategic partnership and agreed to work closely to address shared challenges and advance common interests. Aviation regulator sacks 4 flight inspectors responsible for oversight of Indigo after the mass cancellation of flights. Airline CEO Peter Elber is set to be quizzed by the 4-member panel formed to identify the root causes behind the cancellations. India's most profitable and second largest asset management company is going public. The 10,600 crore rupee ICICI Prudential AMC IPO opens for subscription. The company is eyeing a valuation of $12 billion. Novo Nordisk launches Ozempic, its popular weight loss and diabetes drug in India, prices the weekly dosages at 2,200 rupees and upwards. Novo Nordisk management tells CNBC TV18 that Ozempic clinical trials have not shown a causal relationship in the product and mental health challenges. Government rejects global air quality benchmarks, tells Parliament India sets its own air quality standards. Opposition leader Rahul Gandhi calls for a debate on air pollution, and the government agrees in a rare moment of consensus in Parliament. Disney invests $1 billion into ChatGPT maker OpenAI and licenses its characters for AI-generated short videos and images for 3 years. OpenAI will compensate Disney for using its characters, but the financial terms have not been disclosed. Those were the headlines that we're tracking for you this evening. But first up on the show today, the government has released the retail inflation numbers for November. The consumer price index has come in at 0.71%, which is marginally higher than last month. Lata Venkatesh joins us now with the details. Lata?
Yes, the inflation number has come in almost as expected. Our poll said 0.79%, I mean close to 0.8, and it's come in at 0.71. Okay, 8 basis points below our average, but this is entirely in line with expectations. The food inflation has come in bang in line with our expectation. It's come in, I think, at minus 3.5%, and that is exactly what our poll also forecast, a minus 3.5%. But we have to put it in context. You have to look at the year-ago numbers. The year-ago food inflation number was a tall 9%. So it's clearly the base that is impacting the inflation number. Otherwise, if you looked at the month-on-month performance, I would have expected actually a fall in several food prices a little more severely. It's not. I mean, see, in winter, you normally have this kharif harvest coming in. The vegetable prices start falling because winter is the month for a lot of the reddest of carrots, for peas. It's usually the vegetables and fruit season. As well, the festival season is over. This time, Diwali was in October. So the bulk of demand for food, cereals, pulses, sugar, all that is actually done by October. But for that, you're not seeing a very big fall in some of the areas where you will expect to see. For instance, vegetables. Vegetable prices have come in month on month, actually about, say about 4 basis points higher, or a little more, 4 basis points higher. You would have expected it month on month to be lower. But this doesn't take away from the fact that year on year it is much lower. It is 22% lower in year on year terms, vegetable prices, simply because last year, October, November, we were still pricing onions at 100 rupees and tomatoes at 100 rupees. You know, there was a bad monsoon problem, unusually heavy in October, which led to higher prices of potatoes, tomatoes and onions last year. And that impact is making food prices look very low in the current year. I mean, only with respect to vegetables. With respect to other items like cereals, pulses, I mean, they are really low, even by historical standards, simply because this is 2 good harvests coming in a row. So whether you look at cereals or whether you look at pulses, the month-on-month inflation is hardly there. It's almost the same price in November as it was in October. And the inflation levels for all those items has been like meager, 0.1 for cereals, year-on-year inflation. Likewise, for pulses, it is actually down 16%, 15.86 to be precise. Spices have been falling for a goodish bit. I'm only picking up items which are very heavy in the food index, namely cereals and pulses, and vegetables as well, where the fall is 22%. Among, core inflation items, which is really services items, there you are seeing a bit of a rise in what you call personal care and effects. That personal care, it's a services item, but you know what is the element over there? Gold. Gold gets counted over there, and therefore there is a 24% rise only in that item. But otherwise, we are seeing a genuinely benign inflation number in line with expectations, and therefore, well, from the Reserve Bank, nothing much. I guess they've already factored this low inflation into their last policy.
All right, so numbers in line with expectations. Thank you so much for those details, Lata. Moving on to the day's market action, market gained for the second straight session with Nifty ending above that 26,200 mark. Midcap index outperformed and the market breadth favored the advances. All sectoral indices closed higher in trade with metal and realty stocks leading the pack. For the week, however, the Lal Street ended lower and all major indices closed in the red. Barring metal, all sectoral indices closed in the red with defense and PSU bank stocks leading the decline. From equities to the currency market, rupee hit a fresh low of 90.56 to the dollar but recovered all losses soon after. Dealers attributed the fall to oil companies buying dollars and the recovery to selling by exporters. The rupee is the worst performing currency in Asia so far. Sergio Gore, the US ambassador to India, has said that the telephonic conversation between Prime Minister Modi and President Trump was a great call between two friends. The diplomat also said that Modi reiterated his support for Trump's efforts to bring peace to Ukraine in a social media post. Prime Minister Modi had also posted about the conversation on social media X. The Indian government said that both leaders reviewed progress in the strategic partnership and agreed to work closely to address shared challenges and advance common interests. The phone call between Modi and Trump was their first since Diwali. Remember, a delegation from the US is in Delhi for trade talks. Speaking at an event yesterday, Commerce Minister Piyush Goyal said that US should sign on the dotted line if it is happy with India's offer. This was in response to a comment made by top US trade envoy Jameson Greer, who had called offers from India the best US has received so far. Remember, it has been more than 3 months since the Trump administration imposed 50% tariffs on India. This includes an additional penalty of 25% tariff for buying Russian oil.
US is saying that they've got the best deal yet. Have you offered them anything that they are so happy about?
Well, that only the USTR can answer. His happiness is very much welcome. And I do believe that if they are very happy, they should be signing on the dotted line. In the past, I think 5 rounds have happened. The current visit is not a negotiating round. Current visit is a new deputy USTR who has joined about 3 months ago. It's his first visit to India. We're getting to know each other. He's at the Commerce Secretary level, Vice Minister, so they're all getting to know each other well. He met me also. We had very good substantive discussions.
The assumption is that a trade deal will be beneficial for Indian exports only when there will be addressal of both 25% tariffs, not only the one which is a trade tariff which has been imposed on trade in lieu of the lack of trade deal, but also the other 25% tariff which have been imposed for some other geopolitical reasons. Until unless both are addressed together, it will not mean a meaningful deal for India.
The US Senate passed a mega dollar defense policy bill approving a $901 billion annual military spend. The approved defense spending is nearly $8 billion more than President Donald Trump's earlier requested this year. The bill will now advance to the Senate for approval. The Trump administration has also approved a $686 million defense upgrade package for Pakistan. The deal involves defense equipment and upgrading the Pakistani F-16 fighter jets to extend their life till 2040. The Directorate General of Civil Aviation has sacked 4 flight operation inspectors as part of its investigation into Indigo's widespread flight cancellations. The inspectors were responsible for monitoring the airline's operational compliance. The aviation regulator has summoned Indigo CEO Peter Elbers once again. Shivani Bazaz joins us now with all of the latest updates. Shivani?
Well, yes, the Indigo crisis has now triggered its most serious regulatory fallout yet. In a late evening order, the DGCA has removed 4 of its own flight operations inspectors with immediate effect. These are the officials who directly oversee airline operations, pilot checks and cockpit level compliance, and their sudden exit signals that the regulator is now cleaning up internally even as it tightens scrutiny on Indigo. The DGCA also named these 4 inspectors, naming Rishi Raj Chatterjee, Seema Jhamnani, and also Anil Kumar Pokharial among the 4 who have been sacked. Now, all 4 have been told to leave the DGCA roles right away and return to their parent organizations. Their official access, email and e-office IDs are also being deactivated. FOIs, remember, are typically hired on contract, so relieving them is effectively the DGCA's way of terminating their engagement. But removing 4 inspectors at once, including a deputy CFOI, is extremely rare. It shows that the regulator is responding with strong corrective actions, not just externally on the airlines, but also internally. Also remember that an important meeting today at the DGCA among the CEO of Indigo, Peter Elbers, and the 4-membered newly formed committee by the DGCA. So all eyes on that now. Back to you.
So all eyes on that. Thank you for those details, Shivani. But on that note, it is time for us to head into a short break. Coming up next, Novo Nordisk launches Ozempic, its popular weight loss and diabetes drug in India. Prices the weekly dosages at 2,200 rupees and upwards. Details when we come back. Stay tuned.
"26 years of CNBC TV18. "26 years of CNBC TV18.
Welcome back. You're still with us on Business 360. India's most profitable and second largest asset management company is going public. The 10,600 crore rupee ICICI Prudential AMC IPO has opened for subscription. The issue was subscribed 47% as of 4 p.m., driven largely by qualified institutional buyers. The company is eyeing a valuation of $12 billion. Union Cabinet has approved the Insurance Amendment Bill, which allows 100% foreign direct investment into the insurance sector. The government is expected to introduce the Insurance Amendment Bill in Parliament soon. Finance Minister Nirmala Sitharaman also announced the proposal to raise FDI limit in insurance from 74% in her budget speech in February this year. Novo Nordisk has launched its popular weight loss and diabetes drug Ozempic in India. The pharma giant has priced the weekly dosages at 2,200 rupees and upwards. Speaking to CNBC TV18, Novo Nordisk management said that Ozempic clinical trials have not shown a causal relationship in the product and mental health challenges.
We are launching this semaglutide in 3 strength, 0.25, 0.5 and 1 milligram for the benefit of type 2 diabetes patient. So it is very clear that the 3 strength which we are launching is for diabetes, and till 2.4 milligram which we have launched is for obesity.
Australia has issued a new safety warning against weight loss drugs because there is concern about mental health challenges, such as even suicidal attempts, rising with the use of these weight loss drugs. Your comment?
We have done many of the clinical trials across, and any of the medications which gets launched, whether it is in the US, Europe, Australia or India, it gets launched with a very critical any kind of a causal relationship, and also in our clinical trial and observational use. We have not seen a causal relationship between the product and these kind of a tendency, but we remain watchful.
Global tech giant Microsoft is joining hands with the Maharashtra government to fight cybercrime. All 1,100 police stations in the state will be equipped with a Microsoft AI tool to fight cybercrime. Currently, only 23 police stations in Nagpur are using it. The AI system speeds up investigations and helps organize case files and guides officers through each step.
Now, one of the chances I had, again, was to meet with the team that built this new agentic system called the Maha Crime OS. So this was sponsored by the Chief Minister of Maharashtra, who is here with us. And
the government told the parliament today that it will set its own standards to track air pollution in the country. The response comes weeks after concerns over air quality in Delhi and several other cities. In a written reply in the Rajya Sabha, the Minister of State for Environment, Kirti Vardhan Singh, said that global air quality rankings are cited by various organizations and are not conducted by any official authority. He added that the World Health Organization's air quality norms serve only as advisory values and are not binding standards. He added that countries prepare their own air quality standards based on geography, background levels, and other factors. This statement comes months after a report compiled by IQ Air suggested that India failed to meet the World Trade Organization's air quality standards. As per the report, 13 of the world's top 20 most polluted cities are in India. Meanwhile, leader of opposition and Congress leader Rahul Gandhi has called for an urgent debate on the worsening air pollution. The centre has agreed to conduct the discussion. Gandhi added that the government must present clear national plan to tackle pollution.
Millions of children are getting lung disease. Their future is being destroyed. People are getting cancer. Older people are struggling to breathe. I think a good idea would be that we frame the discussion not on us saying what you have not done and not on you saying what we have not done, but simply saying that what are we going to do for the people in India in the future.
And in international news, more than 10 have died in the Gaza Strip in the last 24 hours after houses, walls and tents collapsed as Storm Byron hit the enclave. At least 12 buildings have collapsed since the heavy rainfall and flooding began. Tents and other winter supplies remain blocked at the border as Israel continues to restrict the flow of aid into the enclave. Russia said Ukraine launched a major aerial attack with at least 287 drones downed over Moscow and many other cities. This as Russian President Putin claimed that the country's forces have taken control of a town in eastern Ukraine. However, Ukraine's military disputed the claim, saying it remained in control of the town. Moscow has also said that it has captured a village in Ukraine's eastern Kharkiv region. Fighting between Thailand and Cambodia has entered the 5th day. Thai forces have reportedly carried out fresh attacks on 3 Cambodian provinces. Cambodia has also accused Thai military of continued strikes. Thailand's Prime Minister has confirmed that he is scheduled to speak with US President Donald Trump. No new casualties were reported following the renewed fighting. The Trump administration has imposed fresh sanctions on 6 more ships after claiming that these tankers are carrying Venezuelan oil. This comes a day after seizing a tanker from Venezuela off the country's coast. Sanctions have also been placed on some of Venezuelan President Maduro's relatives and affiliated businesses. And with that, it is a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Hello and welcome to Startup Street. I'm Arundhati Ramnan and these are the top headlines from the startup world. Toffee Coffee Roasters, a premium coffee brand, has raised 5 crore rupees in pre-Series A round led by IPV. The funds will be used to scale on quick commerce platforms with a target of capturing 5 to 8% of the coffee category and reaching 60 to 80 crore rupees in ARR. Jasper Food Manufacturers has acquired a 10% equity stake in SoupX, a health-focused food tech brand. The deal will enable the company to enter high-growth and complementary food categories as it strengthens its presence in the frozen food segment. Vartis Platforms, the parent firm of peer-to-peer lending marketplace Lendin Club, is preparing for an IPO within 18 to 36 months, says CEO Bhavin Patel. Vartis has set 2 internal targets ahead of the IPO: annual profit above $11 million and restructuring accounting practices to align with listed peers. Microsoft joins hands with Maharashtra government to fight cybercrime. All 1,100 police stations in the state will be equipped with a Microsoft AI tool to fight cybercrime. Currently, only 23 police stations in Nagpur are using it. Disney invests $1 billion into ChatGPT maker OpenAI and licenses its characters for AI-generated short videos and images for 3 years. OpenAI will compensate Disney for using its characters, but the financial terms have not been disclosed. Those were the headlines that we're tracking for you this evening. But on what's brewing today, India's clean tech momentum is getting a major boost. Smart Jewels has raised $10 million in a Series B round led by SBI Ventures' Neve 2 fund, Wari and Spectrum Impact. The fresh capital will power Smart Jewels' next phase of expansion as it scales its efficiency and cooling solutions across factories, commercial buildings, automation projects, and district cooling systems. To break down the fundraise, the scale-up, and the roadmap to 2030, I'm joined by Arjun Gupta, the founder and CEO of Smart Jewels. Arjun, thank you so much for taking time out and being here with us on Startup Street. First of all, congratulations on the $10 million Series B round. Start by telling us how will this capital sort of accelerate Smart Jewels' next phase of growth, especially as you expand deeper into commercial and industrial cooling and energy efficiency projects. If you could sort of tell us how you'll spend these funds.
Yeah, thanks for having me here. Smart Jewels is pioneering energy efficiency in the built environment. And we do that through basically 2 things. One is machine learning technology for automation. And the second is business models where we actually invest in really energy efficient infrastructure like centralized cooling systems. So we're primarily going to invest these funds into both these areas. First is to really champion AI in the built environment, specifically in cooling. Now, a lot of people don't know that cooling is the largest end use of energy in India. And we can expect to see another 3 Indias worth of new power demand just from increasing cooling demand over the next 20 years. So Smart Jewels wants to cut that in half using both technology and business model. So one area of investment is going to be really heavily going into machine learning to optimize each part of the value chain of cooling, starting from design to execution to operations and maintenance. And then the next part is going to be to expand into new industries. Every time we go into a new industry, we have to take a little bit of risk and put a little bit of investment into new projects. So we are looking at a lot of projects in the pharmaceutical sector, data centers, semiconductor manufacturing, hospitals, hotels. All of these cooling intensive sectors require Smart Jewels, and that's what we've geared up for.
Sure, and we'll go into detail into all of them, but you've built 3 flagship products, right? Jewel Pace, Jewel Cool, and DJewel. Which of these is sort of scaling the fastest right now, and what's driving the strongest demand across your customer base?
Yeah, thanks for that question. Yeah, all 3 of them are very complementary to each other, and together they build a full suite cooling and automation business. Lately, the one that's growing the fastest is our Jewel Cool business, which is cooling as a service. And you can pretty much imagine, like most of the buildings that will exist in India in the next 10 to 20 years don't yet exist, right? They're just being built. So Jewel Cool is our business model that services new construction. So that one really has been flying off the shelves and really a lot of demand recently for that. And that's going to continue for sure. There we actually give our customers a very long-term guarantee on quality of cooling, right? Imagine whatever building you've been in, you've either felt hot or cold or damp, a little bit too humid, you've seen the ceilings crack. we give a 10-year assurance on the quality of cooling and also a 10-year assurance on the energy efficiency of the cooling system. So we are the only company that can do that. And so we are seeing a lot of demand in Joule Cool. Joule Pays is currently our largest segment. That one serves existing buildings and factories. Imagine if you own 10, 20 hotels and you want to cut your bill from 100 crores to 70 crores or less within a period of 9 months. The only company that can do that is Smart Joule. So Joule Pays is currently our largest business segment. And in fact, for both of these, D-Joule and Joule Pays, Joule Pays and Joule Cool, you require technology to actually run the system. And that's what D-Joule is. So yeah, Joule Cool, fastest growth. Joule Pays is the largest segment currently. And D-Joule powers these both, as well as is its own BMS technology.
Sure. So you've outlined that very clearly for us. You've already conserved about 32.1 crore kWh, cut 2.4 lakh tons of emissions and saved clients 266 crore rupees, right? So what's the roadmap to doubling or tripling this impact over the next 24 months? If you could quickly tell us that.
Sure. The first thing is going to larger projects. So, the average project size that we've had till date has been about, 2 to 3 crores, and we have a lot of those. Now we've already signed and are executing projects which are 20 to 30 crores per ticket size. So one, immediate scalability comes from doing larger projects. And second, that is allowed by, of course, the Joule Cool model, which is 10x larger than Joule Pays per ticket size, as well as going to industries and not only serving buildings. So when we go to industries like pharmaceutical, data center, electronics manufacturing, solar cell manufacturing, the size of cooling systems is 10x more than a building. So these two things together are giving us a lot of scalability, and that's what we're shooting after.
Sure. And speaking about those larger projects, you are looking to enter sectors like you've pointed out, manufacturing, building automation and district cooling, right? What's the market opportunity here, and how soon can these verticals become major revenue contributors for you guys?
Yeah, as we speak across India, there is very large-scale manufacturing setup being built. If you drive around in Gujarat, you will see one after the other solar cell module manufacturing, battery manufacturing. If you go into Mumbai or you go south to Chennai, Hyderabad, you see a lot of data centers being built. Like, we are really in the gold rush of building these heavy cooling infrastructure across India, and of course buildings, right? So the demand is everywhere, and we are just like trying to scale up to catch up to this demand. So a lot of the funds are, of course, going into capacity building and scaling up our team, which is already very large, 250 people, but we're going to rise to the occasion.
So you are going to rise to the occasion, but in 30 seconds, where are your revenues at, and how do you sort of plan to build this? What are the targets for this year and the year to come?
Sure. The revenues of the company right now are about 70 crores on an annual basis, but we have locked in contracts. So ours is a recurring revenue model. So we've got locked in revenue of more than 400 crores over the next few years. And next year, because we're looking at very large projects, we are hoping to cross 200 crores.
Looking to cross 200 crores. All right, Arjun, thank you so much for taking time out and being here with us on Startup Street. We wish you all the best on this journey going forward.
Thank you so much. Pleasure to be here. And hopefully next year I'll be telling you that 200 is going to 1,000. Thanks.
Hopefully we'll be hoping for that for sure. All right. And moving on, global ride-hailing player Uber says it is hopeful of growing its business multiple times over in the region as it sees large headroom for growth. In an exclusive chat with my colleague Ritu Singh, Uber's president for India and South Asia said the company will raise the bar on innovation with more feature launches lined up for the coming year. He also spoke about Uber's recent metro ticketing launch in Bengaluru. Take a look.
So today, if you're an Uber driver in one of the cities, say on a two-wheeler, you are already carrying a passenger from certain times. Then you are already opted into our courier service, which is our B2C package delivery service. In some cases, they're also participating in our AI solutions and data labeling service, which gives them a chance to earn an extra income during certain downtime. And now they'll get an option to opt into the B2B logistics service. The pricing of that will be a function of multiple factors. The kind of the package, the distance they will have to travel to pick up that package, to deliver that. It will also be a function of time of the day, because this often will be dynamic. So again, this is where the magic of technology and hence optimized pricing will come in. Remember, we are globally go anywhere, get anything company. What that means is we have a very large mobility base, which we also have in India, but we have a very large delivery ecosystem globally, which means that technology has been very thoughtfully fine-tuned for these use cases, which means we can hopefully price these products just the right level, which keeps prices low for merchants and just right for earners for us to build a sustainable business.
You know, you spoke about the ride-hailing network, and that, of course, is the bulk of your business. But at what pace is this logistics arm going to grow? I mean, I'm just trying to get a sense of what the revenue mix would be like for Uber in India when it comes to ride-hailing versus these other services.
I think very early for the new services. It is still early days. We take it one step at a time.
But what's the ambition there? I mean, what's the mix?
Ambition is to make it big and bigger. And
as big as ride-hailing or bigger?
No comments at this stage. I think I avoid crystal ball gazing. Ride-hailing itself is such a massive business and growing rapidly. We are the third largest market globally in terms of volume and one of the fastest growing. And the India market has so much opportunity at the full spectrum of use cases. Today, you can, on an Uber app, you can request for a 4-wheeler, 3-wheeler, 2-wheeler, Uber shuttle in some cities, metro tickets. And on the other end of the spectrum, you can request for Uber Black or Uber Reserve, or also an intercity trip. And our ambition is that these are all individually massive TAMs, and we have a job cut out to really scale this multiple times over the next few years.
Since you're not telling us that, you've started in Bangalore, but where will Uber Direct expand to in the coming year or so?
Our goal is to take it to multiple cities. Obviously, it will follow the network which we've already built on the mobility side. So starting with Bangalore, we'll
That's 125 cities.
125 cities. So we start with one city and gradually take it to the larger cities and then to the smaller cities from here on. And again, our thesis is not about, we don't chase scale or a vanity metric, hey, number of cities launched, right? What we care for is, even to master the experience and service in Bangalore will take time. Because you need to navigate it, you need to optimize, you need to make sure SLAs are living up to the standards which either ONDC or its merchants expect. So we'll focus on the consumer experience, and once we feel comfortable, we'll continue to scale rapidly.
You know, just to be clear, there is no plans to enter the B2C space in food delivery for Uber, something like Uber Eats again?
Hard to say. Right now, my hands are full with building this massive mobility business and incubating the new B2B logistics space.
You know, a quick word on the metro ticketing also that you're announcing now in Bangalore after the 3 other cities. How quickly do you expect this to scale here, and what next? I mean, in terms of, again, cities which you don't count, but how quickly do you see the service expanding?
Look, this is our 4th city this year itself where we have brought metro ticketing on the Uber app. And we've got just great feedback in the 3 cities like Delhi, Chennai, Mumbai, where we are already live with it. Bangalore is an incredibly mobility conscious city. And I believe that consumers in Bangalore are going to embrace booking metro tickets on the Uber app in a very material way, because a large number of our consumers are already getting to the metro station using a Uber service, whether it's a 4-wheeler, 3-wheeler, or other modes of services available. And hence, they will find it more convenient to book the Namma metro ticket also. And I think my sense is this will also then attract a completely new user base who's using Namma Metro already, and they can now use the Uber services because they're going to come to the Uber app. So I think that I'm very bullish on how Bangalore will embrace. Bangalore is a tech capital of India and arguably the world, and we should, I'm hoping they will set the tone in the new benchmark.
Any teaser for consumers? For instance, you've got that price lock feature. For instance, this year you had Uber Pets launched this year. You had a simplified app for senior citizens. Anything else you'd like to tell our viewers that's in the offing from Uber?
We'll come back when we have more to share. Will give us a chance to connect again. But this year has been remarkable in terms of the innovation for the India market. We spoke on metro ticketing, logistics, but this is the year where we've launched Uber Teens. Huge demand from our consumer base where teens can onboard to a new service with better safety features. Uber Simple Mode, which is particularly designed for the elderly, so that they can actually use a simpler version of the app. We're also premiumizing our portfolio. You're seeing Uber Black scale. You're seeing us bring specific airport tie-ups across the country. We've also innovated on multiple subscription models for consumers and drivers, for example, memberships for consumers, subscriptions for drivers. So it's been a busy year and a year of innovation. And hopefully next year we'll raise the bar further.
On that note, it is time for us to head into a short break. But coming up next, India's homegrown platform Adalat.ai is transforming courtrooms with real-time AI transcription, replacing manual typing and paperwork across 9 states. At Charcha 2025, we speak with CEO Utkarsh Saxena about the platform's impact and what lies ahead. Stay tuned.
"26 years of CNBC TV18. 26 years of CNBC TV18.
Welcome back. You're still with us on Startup Street. India's justice system is witnessing a quiet technological shift, not in verdicts, but in how courtrooms work every single day. At Charcha 2025 by the Nudge Institute, one innovation drew unprecedented attention. Adalat AI, a homegrown platform now replacing manual typing and paperwork with real-time AI transcription across over 4,000 courtrooms in 9 states. CNBC TV18's Aishwarya Anand brings you the inside story of Adalat AI and what this shift means for every citizen waiting for a case to move.
India's courts handles crores of cases every year. But behind every delay is a quieter problem. Judges still rely heavily on manual typing, paperwork, and handwritten notes. For many, justice is not delayed, it is slowed down by clerical work. Adalat AI is trying to change that by using artificial intelligence to assist judges and court staff, not in making decisions, but in cutting down time for transcriptions and paperwork.
Our venture is actually a twin-engine venture. The first is tech innovation, AI innovation, which my co-founder Orgo Bhattacharya leads. But the other engine is social programming, is training and workshops and skilling. So we actually do training programs with the judicial academies of the various states. We go to each district court and do training programs and sessions to answer the questions of judges. So to enable the uptake of technology, that second engine of skilling, workshopping, office hours, WhatsApp communities on which we answer questions, tutorials, all of those are extremely important to be successful in this mission.
Adalat AI works across multiple Indian languages and accents, allowing courts to record proceedings as they are spoken without forcing witnesses or lawyers to switch to English.
We work with a large team of linguists from different states who actually help us create data sets and annotations so that the models that the AI tools are getting trained on are not generic English-speaking models of folks from Delhi and Bombay, but from across the country and representative, so that when the user is speaking in that specific accent, the AI model is already familiar with it.
But introducing artificial intelligence into courtrooms comes with high stakes. This isn't about replacing judges, it is about accuracy, accountability, and earning trust inside one of India's most traditional institutions.
So that's why one of our big solutions is speech to text, which is what you say is transcribed verbatim using AI technology in multiple Indian languages. But some of our other tools where we use things like summarization or document navigation, we actually implement guardrails where we insist that any AI output has to be referenced back to the document that it's referencing so that any risk of making up a case citation or hallucination is eliminated.
Using artificial intelligence inside courtrooms also raises serious concerns around data privacy and security, particularly when sensitive testimonies and legal records are involved.
We have a threefold approach to our security infrastructure. One, we ensure that all our work is localized in India. Second, we have our own AI models so that no third party gets access to the work that we are doing. And third, we implement user-level encryption, which means that each judge, each court staff gets a unique encryption key, which is decentralized. It's generated on their local machines. Even we don't have access to it. So that even in the worst case, if someone hacks the entire system, unless they have each judge's decentralized encryption key, each judicial staff member's encryption key, they can't understand what's going on in the system.
Once judges began using the system, the impact started to show, not just in speed, but in daily output inside courtrooms.
India has about 22,000 courtrooms depending on vacancies, so we are in nearly 20% of India's courts. I think our impact is the kind where the output per judge per day is going up. And so the idea is that because we have very few judges per million people in our country, our judge population ratio is low, how can we create more time per judge that creates more hours of work in the judiciary and reduces delays and backlogs? We are estimating that court delays and backlogs are going down by 30 to 50% because of a series of our solutions, depending on the case stage and type. We also want to automate not just the pain points we've identified right now, which is transcription, translation, case flow management systems, but also things like e-filing. We're building solutions so that regular citizens who don't understand the law find the law more accessible. So we want to build an end-to-end justice tech stack.
What began as an experiment has now reached scale. More than 4,000 courtrooms across 9 states are now using AI-based transcriptions, cutting out manual typing altogether. With high courts in states like Kerala mandating its use, Adalat AI is no longer a pilot project. It is now part of how court proceedings are being officially recorded, marking one of the clearest use cases of artificial intelligence in India's justice system. With camera person Balbir Singh and Lakshman Singh, Aishwarya Anand for CNBC TV18.
On that note, it is time to take stock of all the deals from the startup world. According to Venture Intelligence, this week saw a total of 20 deals worth $131 million. Some of the notable deals this week include digital lending startup Five, which got $35 million from IFC. Women's fertility monitor maker Inito bagged $29 million from Bertelsmann India Investments and Fireside Ventures, while jobs portal Work India is set to raise $13 million from Avishkar, BNext and others. That's not all. Solar EPC solutions provider Solio Solar raised $12 million from GVFL and others. Finally, cross-border payments enabler Skydo raises $10 million from Sasquina Asia VC and Elevation Capital. According to Venture Intelligence, this year has seen a total of 897 deals worth $90 billion. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
"26 years of CNBC TV18.
for me to be here on the occasion of the Motira Oswal Wealth Creation Study. It's a 30th edition. It's a milestone. And we're all gathered here to sort of, discuss the takeaways, the insights. I mean, the Wealth Creation Studies have really become a sort of landmark document which we look forward to every year. It kind of documents the journey of compounding, the journey of markets, but also, of course, highlights one theme every year. And the theme this year, of course, is the multi-trillion-dollar opportunity, as Ramdev ji said. I'm not sure if Ramdev ji chose the topic deliberately, given the slightly downbeat mood that we are in. So kind of sort of, to enthuse all of us and to remember that, 1 year does not make, does not make or break investing records, and one should have a longer-term time frame here. What I thought we will do is, I think Ramdev ji, of course, has made a detailed presentation on the Wealth Creation Study. I urge all our viewers on CNBC, who is watching us on television and, of course, watching us on YouTube as well, to grab a copy of the Wealth Creation Study and read it. But I have with me Ramdev Agarwal ji, Ramesh Damani, of course, is with us as well, needs no introduction, and Mr. Sunil Madhani as well. What I thought we will do is we will ask each of the three to run us through their own investing journeys, how they found compounding stocks over their 30, 40 years of investing experience, how they held on to it, mistakes, as they say, mistakes they made along the way, what they shouldn't have sold, what they should have sold, etc., etc. I thought we could look at this investing, this document, the Wealth Creation Study, through the lens of the three gentlemen who are with us here. So with that short preamble, let me get straight into it. Ramdev, let me start with you, sir. In your document, in the Wealth Creation Study, you say that you analyzed 500 stocks.
Yeah.
And there were only 7% of that 500 stocks over the period that you analyzed, what you describe as the next trillion-dollar era, right? And that's a long period of time, which compounded at 23%. You moved early. You had a portfolio of 225 odd stocks back in the day to a concentrated 15-stock portfolio, which kind of changed your investing life. So I wanted you, so you got onto this idea early. You're putting this in the Wealth Creation Study now, but you got onto this idea, long back. So talk to us a little bit about that. What triggered that transition?
Yeah. So as I said, I was a very voracious stock buyer right from 85, 84, whenever I got little money. But till 94, because of these bad deliveries, one of the problems was, of course, we were buying 1,000 shares, 2,000 shares, but there were a lot of bad deliveries, and we were in broking business, institutional business. So a lot of these companies, my shares will be given to the institution, and bad delivery will come to me. Like that, we ended up making like 225 companies in our portfolio, finally. And then I read Buffett. That was the biggest impact. They talked about focused portfolios, because you should not have too many companies which you cannot understand, not take care of them. So they said 15 to 20 companies good. So I took help of my wife in 95, and I said, please help me bring it down to 15 or 20 companies. And she would methodically every day sell 10, 15 companies. And in a year's time, it took 1.5 years, 2 years to bring it down to 15, 20 companies. And that very year, the portfolio doubled. And then since then, the journey has been few companies and very chunky allocation, 4, 5, 10%. I typically don't want to buy less than 2.5% of my total portfolio. Like even now, if it is a 5,000 crore portfolio, I would like to buy minimum, 2%, 3% of the portfolio in every stock, because otherwise it will not make an impact. So, and then want to sit long. So that's a whole thought process. But it started in 95, 96.
It's almost impossible now, sitting here in 2025, that there was a period of time when Buffett was not as well known as he is now, right? But as you say, you learned about Buffett in 95, about his principles and concentration of portfolio, and that prompted you to whittle down the portfolio to this concentrated stock.
Yeah, so in 94, Sanjay, I keep telling him always. So Sanjay told me, why don't you just read this guy's annual report? He sounds a little different. That's how he told. He gave me one copy of the report. There was no all the copies. He gave me one copy of the report. We read. We figured out it looks very different than what we know. I think by reading the one report, I realized that we don't know anything of investing. And then we found all the 20, 25 reports, got Xeroxed, and then we read the whole thing, and that changed the life. So now with the internet, blogs, all kinds of gurus are there all over the world, and you can get them on tap. So, and now books are available digitally free of cost. So it all depends on how much curiosity you have, how much you want to learn, and there is no dearth of gyan. Gyan ki ganga bahut zabardast bah rahi hai.
कभी-कभी बाढ़ आ जाती है, but it is important and it's interesting. So three names I want you to reflect on: Hero Honda, Hero MotoCorp now, of course, Infosys, Eicher. These are your three iconic multi-baggers. What common early signals did you see across them? If you can kind of piece a thread to it.
Yeah, so my style of investing was always buy high growth, high quality, high growth at a very low price. Very early in stage, but peg one or half peg. Half peg is my, like if something is going at 25%, I want to buy it not more than 25p. Preferably 15, 17. I mean, now these P multiples have gone 60, 70. These are new things. I mean, I wanted to buy Asian Paints. Always I liked the Asian Paint. But when I wanted to pay 15, it was 20. So I didn't buy. When I wanted to pay 20, it became 25. And then finally, once I agreed to buy at 23, and again, my dear friend, he said, let's wait for some more time, and it went to 90. So I never made a single penny out of that. So, once you identified a stock, you understand the company, that these companies are going to grow and they're going to create wealth, then you have to buy at reasonable price. I have never negotiated on buying at reasonable price. That is the first thing which I do, and the quality of business to be good. Because of Buffett, quality investing, I always looked at franchises, high ROE. First thing is look at high ROE. Does the company earn not even 15, 20, 25% return on equity? That's my first criteria. Second is, does it have good terms of trade? Like, say, can he collect his money in 30 days? The debtors are not more than, if you have a 25% ROE, but 100, 120 days, God knows what you are writing. So these are the few things I see, and once that is there, then we try to go and figure out from the company what magic he is doing that he can keep earning 25% ROE in his business for not only now, but over the next 10, 15, 20 years. And then we go and buy the company. If we like the company, then I buy the company. The only thing was, once the company goes from, say, 100 to 300, 400, that time some other ideas come because money was limited. So, you would sell that and buy something else. I remember one compounder I bought, that was BKT Tire, Balkrishna Tire. Today it is a very famous company, very large company, but when I bought it, it was a 100 crore company. And I bought it 1p with a 40%, 30% ROE. And there was no taker. I went to the company refused, we don't want to meet you. And then next day, through somebody I went, I met them. They not only offered me, they offered me Rasgulla, and they told me the whole story. Then we bought. The stock went from 100 to 1200 in 2 years. We sold everything. Today it is 50,000 crores. It is one of the best compounders. But the issue is that, do you understand power of compounding? What can happen? So I think we were kid or whatever. I mean, we didn't, but there are a lot of stories, and many more stories are going to happen. That is a beauty of this market.
Absolutely. Mr. Damani, you've spoken about publicly as well, about being early into Infosys, buying Infosys early. Can you tell us what was the thinking then, and what signs could you see that this is going to be a big compounder for you from the time that you bought it?
I didn't know that. I was lucky, Prashant. Thank you so much for hosting me, and thank you, Ramdevji. What a lovely study there. Thank you. Let's give him a round of applause again. I really enjoyed this study. I think it's probably one of his best studies that I've seen so far. I think I came, Prashant, when the cement boom was going on in India in the 90s. And even my jobber knew the price of cement in Raipur and Bhopal and Coimbatore, and I didn't. And I was an MBA from America, so it was pretty embarrassing for me. But luckily, I used to work in the technology industry in America, so I understood technology in India. And most people in India want plant and machinery and, fixed asset base. I understood intellectual property, understood the value arbitrage. So we happened to buy a little bit of Infosys at that time, and that turned out good. I think the journey of compounding started a bit later than that. That was my first lucky foray, which made me a lot of money. But I think the understanding came much later. But to add to a point, when were you introduced to Buffett? I always find that very fascinating because you all are Buffett fans. Ramdev said 95. In 1977, I went as an MBA student to America to study from MBA. I'm actually old guy, so I went in 1977. And most people going to Los Angeles in those years would tell the local host, take me to Disneyland, take me to Hollywood Walk of Fame, take me to, you know, the tech industry, whatever. I remember telling my sister to drive me to the See's Candy store. There was one See's Candy store in that area, and there was one Walmart in that area at that time in 77. So obviously I'd heard about Buffett. I don't know how, but even when I was 20 years old, I'd heard about Buffett. But it took me until maybe 85, 87 to kind of understand that this guy was actually something extraordinary that he was doing.
This is 77 when you kind of...
1977,
wow.
Yes.
And he kind of migrated away from what he used to call cigar butt approach to kind of buying high quality stuff?
Yeah,
that had already happened. I mean,
no, it happened much later. He bought Cap Cities in 1985.
Right.
And I know some uncles that bought Berkshire Hathaway stock, and they told me they bought Berkshire Hathaway. But in the 87 crash, they had sold it.
Right.
And then they were very happy because it had gone down from $3,000 to $2,500. And today, of course, it's some other number, so let's not discuss that pain. But I want to make this point and ask you and the rest of the audience. When I was a student in America, the price of Berkshire in 1977, I checked it afterwards, it was $75 a share. So 1,000 shares would have cost me $75,000 to buy in 1977. Can anyone tell me what that investment of $77,000 in 1977, $75,000, is worth today? And please don't use your smartphones. Just raise your hand. What do you think
or
it's worth
ChatGPT. No.
No, don't put ChatGPT. Just anyone raise your hands and tell me that if I had made $75,000 investment in Berkshire and gone and sat at the beach, played the craps table in roulette in Las Vegas, or bummed around the world, what would I be worth today? Yeah, you know you're a cheater. He knows, of course. He's a Buffettite too. See, the fact of the matter is that the stock is at $750,000, and that $75,000 has become 750 million USD. 750 million USD. That's about 250 million short of $1 billion for doing nothing. That's the power of compounding. But there's a corollary to that, that the longevity of the compounding is what makes you money. So while Buffett's stock has gone up by 20% compounded for 45 years, the 45 years of compounding has made it into 750 million.
Mr. Adani, when did you finally grasp this idea about compounding and the power of it? Was it?
As you know, surprisingly, his and mine journey have been the same. As Chandrakant Sampath explained to him compounding, he explained to me. Imagine a guy who probably didn't pass college in India explaining to MBAs and owner Motilal Oswal what compounding is and what it does. He used to come to my office and he'd like to have a cup of coffee, and I would give him a cup of coffee. Then he'd explain to me how this company will compound, how Lever will compound, how Colgate will compound. And it seemed bizarre to me. He would tell me that, and he would tell me, Ramesh, you're very young. Avoid depreciating assets, buy appreciating assets. You know, I never kind of understood that till many years later. So it was a slow burn, if you will. I wish I had learned it at 77. I didn't. But probably around the same time, Ramdev kind of understood Buffett. I started understanding Buffett.
Mr. Adani, let me ask you this. I mean, it's a much abused word, but multi-bagger, best, I mean, you know, great compounder in your career, best captures the power of it staying invested through cycles?
I mean, there are a lot of stocks. India has given us such a great opportunity. Sometimes I feel like hitting fish in a barrel because there's so many multi-baggers and compounders. It's actually unbelievable how many multi-baggers you got. But the one that I think that people don't know and I think they should study, in fact, I would urge Ramdev to do a special study on that because it's created that kind of wealth, is a company we bought in 96, 97 called Bharat Electronics. I bought it after it IPO'd at 40 bucks. It went to 20 bucks. At 40 bucks, it had a 5% yield. At 40 bucks, it had a 5% yield out there. I think, if I'm not mistaken, if you bought 100 shares, I think they're worth 25,000 shares today by splits, bonuses, whatever. And for 400 rupee price, that's about 1 crore worth of investment. It's about 28-30% compounded over long periods of time. And to address a more fundamental question, Prashant, people often say, oh, gold has been in the Sensex and all this kind of nonsense I keep hearing from people. Now, here's the fact of the matter, that when you buy a securitized asset, as Ramdev has pointed on the study, not only do you get the splits and bonuses, but you also get dividends. So if you had bought an ounce of gold in 1980 at $1,000, today it's $4,000. All you got is the price appreciation in the gold. If you bought Bharat Electronics or HDFC Bank or Reddy's or Apollo Tyres or whichever stock there, the splits bonuses would have increased your value dramatically. The P ratio would have inflated your wealth. And the dividends would have added extra 2-3 percentage points of return. So I think people conveniently tend to forget that. I think over 150 years, I think gold's given 3%, equity is given 11-12% without dividends. So you know where you should put your money.
No, absolutely. And I think that's very, very well put. Mr. Matani, you're a Buffett fan, and but you're also a US market investor, right? I mean, you've been investing for a long time. What were the first true compounders you owned, and what made you trust them early in that sense?
So let me back up a bit. Is it okay?
Will you speak into it, sir? Maybe, or...
They'll control. You speak.
Is the mic on?
Okay.
Yes.
So, yeah, just backing up. So I went to the US in the early 80s and first heard about Buffett in the mid-80s. Ramdev, I think you said 95? So I had a big lead over him. In 1987, there was a book that came out called The Midas Touch, which is the first biography. And when I read that, I was completely hooked. And the first time I went to Omaha for a Berkshire meeting was in 1994.
Wow.
And I met Ramdev soon after that. And I think 1999 is when he first went. And I've been going there with him every year since. I follow him to carry his suitcases. But so I discovered Buffett before he did. And I went to a Berkshire meeting before he did. Somehow he's become a multi-billionaire. And I'm still sitting here. So there's, obviously something off here. But the learnings have become very clear over time as to what the approach is. One of the things that Buffett repeats almost every year is the confidence he has in America. And he says he'd always bet on America, he'd never bet against it. I think that if he was sitting here today, seeing what Ramdev has been talking about and understanding the facts, he would probably be betting on India. And I think that's it's a great place to be right now, because the US's best days, I think, are behind it. It'll still grow, it'll still do fine, but not the way India will. So then I'd like to ask Ramdev a question about his study, if I may. So, Ramdev, you talk about the wealth creation, and you talk about the movement to paper assets and securitization. But that's not really what wealth creation is about, in my view, in the sense that you had in the report, I think, a number which said that the market cap of all the securities in the world is about 147 trillion today, right?
Not now. In 2001, it was about 123 trillion. This is only market cap.
Only market?
Yeah. So today it is about 141 trillion, global market cap. 140.
Yeah, I saw 147.
170. Yeah, something.
In any case, if tomorrow, everything goes up 10%.
Okay.
Has 15 trillion of wealth really been created? Because the wealth creation...
That's how it is created.
Yeah, but that's on paper, right? Because if the next day it goes down 10%, has the wealth been destroyed?
Yeah, of course. I mean, if you are calculating your wealth on a 24-hour basis, that's what is happening.
Right, but the way wealth is really created is by stuff happening at the micro level, right? I mean, an easy example is productivity on a farm. Yeah. If a farmer is making ₹1 lakh of crop every year from his land, and you can show him more productive ways to do it, so that it becomes 5 lakhs a year, that's wealth creation.
Yeah.
If a company grows, that's wealth creation. So the things that have happened here is, one big thing has been access to capital for entrepreneurs, right? It's much easier now for someone with a good idea to get the capital and to start a company and to employ people and to create new products.
But from where this capital is coming? It's coming from the wealth.
No, that's right. It's coming from savings, etc.
Yeah.
But how is additional wealth created?
Yeah, I'll tell you. Don't go very far. Look at Motilal Oswal. Motilal Oswal, my net worth is about 12,000 crores. Okay, that's lying in the business. It's busy with all kinds of working capital, this, that. But my market cap is 60,000 crores or 50,000 crores. Today, I want to donate 1,000 crores worth of for a hospital. Can I take it from the till, or will it do it from the market cap? I will do it from the market cap.
Right.
And the moment you spend, say, 2% of that for building a hospital, now the economic engine starts. Because the company is working without any problem. But this 2% is going and creating a hospital. It is creating jobs for hundreds. That's how America became rich. That is the power of securitization. See, securitization is a machine of foreseeing the future profits and the present value of that. See, if I am not capitalized, there is no question of you bothering about what could be the value.
No, that's right. But the action that created the wealth was actually doing something in building the hospital and creating the jobs.
Beyond doubt. Right. There is a securitizable asset.
Right.
So if the world over, there are assets which can be securitized. These roads can be securitized. The companies can be securitized. The issue is like in US, now USSR, there is no securitization. The whole economy is one of the largest economies in the world. There is no securitization. That machine is gone, shut.
The 10th Global Economic Summit and the 6th World Trade Expo came together on one platform in Mumbai under the theme accelerating global trade, fostering partnerships, connectivity and resilience. As the summit progressed, the exhibition and conversations explored opportunities that are shaping the future of global commerce. A candid fireside chat followed, featuring insights from the Executive Director of Muthoot Microfin on India's rapidly evolving microfinance ecosystem, in conversation with the Senior Director of AIAI.
How do you see financial inclusion shifting from access to real ownership in Bharat?
Initially, it was just having an entry into the financial market, right? Now things have changed so much that people want choice, people want to see the access what they are using with the financial product, right? So for example, if you look at our microfinance business, where the customer is focused on how she needs to repay the amount, what the amount she has to save up at the end of the month, and when she has to repay it, right? And also we have added few initiatives like how she can save up going forward to create a alternate source of money for her family. That is on the microfinance side. And if you come to our gold finance, Muthoot FinCorp, where we give working capital. So if you look at it, from earlier time where gold loan was used as an emergency loan, things have shifted from emergency loan to a working capital loan, where customers are using these products to enable themselves to look at creating a working capital loan to enhance their products. And through this, we could also start providing MSME loans or LAP, where they can go to the next level of expanding their business.
Okay, the next question is, how is technology changing the way people understand and manage their money? Obviously, now technology is taking over. Whether we have to pay, we don't have to always have our cards or cash with us. If we have a GPay, Paytm, PayU, I think there's so many other gateways started.
As an organization which is focused on the development of Bharat, we believe all-inclusive growth is the way forward for a country like India. And with technology, we want to bring that inclusiveness in the best way possible. And if you take each of our organizations like the Microfin, which works literally at the bottom half of the pyramid, we kind of educate these customers how to start saving basic savings products. We teach them how they need to digitally repay. So most of these customers have just maybe graduated themselves to starting using to how to repay and all that. And obviously India Stack has helped. That is the Google Pay and all those jam facilities which we see. And more as we go deeper, we are educating them to use digital means more responsibly. And the whole digital capability which we have built helps these customers to put a face to these, the digital aspect of it. So what we kind of focus on is enhancing our digital capabilities through our platform, which is Muthoot FinCorp One, where we have a digital avatar plus a physical avatar.
Next, the High Impact Panel discussed the future of global trade through the lens of AI and fintech, highlighting how new technologies are expanding access, improving efficiency, and enabling more inclusive participation in global markets.
Firstly, I think if you think about trade, and when you think about in your context, what you have been able to do, what do you feel is really the trade today, given the trade barriers and the tariffs that we have had situations in around the world? And when you think about really the data protection in that context, how do you see whether data needs to be protected or shared? Because the trade assumes sharing of the data.
The purpose of data protection legislation is to remove trade barriers. That's set into, for example, in the GDPR, it's one of the founding principles of the GDPR, is to enable the free flow of data across borders. And so with India now introducing the DPDPA, the intention behind that is in part to open up India's information economy and allow data to flow in and out. So it's part of that Indian export opportunity. But it only works if the data is used responsibly, because only if it's used responsibly will people choose to share it and share it accurately. So a proper commitment to the principles of data protection and proper attention being paid to the implementation of effective data protection programs is part of that opening up.
The context of what Ben mentioned in terms of data sharing, how does the governance play a role in this, in facilitating the trade across the nations?
India is very involved in the technology. It's not only adopting technology, it's defining technology for the rest of the world. For centuries, the West believed that the East are the students. They have to learn from the West. But now the time is over. The secular change. And what we are trying to do with our foundation is to see, we will take the technology from India and bring it to Geneva, wrap it, and make things that to be sure that one Indian entrepreneur, one is developing amazing business in India, the global financial system doesn't take it like a risk, but like an opportunity. So that is our goal, is not to be a teacher, but to open the gate. Because for us, there is no choice between heritage and global access. You can have the both, and that is important for us.
Now, let me ask this question to you, Bruce. Doctor mentioned that there is an acceleration to be done from India across the world. And you have been in India for some time, and you have been at the forefront of looking at AI and innovation. What's your take on this? Are we ready? Are we not ready? Where are we in terms of our trade?
If I think about AI and fintech for a second, financial services is made up of two things. It's made up of manufacturing and it's made up of distribution. And from a manufacturing perspective, and that's my business, Investor AI, works in manufacturing. So we're all about manufacturing, investment recommendations and portfolios and intraday trading for individual investors. What I see AI is doing is AI is allowing us to drive down the cost of manufacturing. And if you can drive down the cost of manufacturing and make it work in an Indian context, you can start to make it work in a global context. So for me, AI is kind of really working in that. And I think the change that AI is doing is it's meaning that time and materials, so service companies are going to find it harder and harder to make money. And actually, you need to have some IP. You need to be a product company. And I think that the India challenge today is not to rely on other people's AI, but how we develop our own AI in country and how we develop our own products.
Let me turn to you, Debbie. You have been doing some very interesting work in Madrid registry, right? Now, I would take a bet that probably 80% of the people present here do not know about Madrid registry. Would you be kind enough to just explain first what it is, and then think about explaining to the people what context does it have in trade?
So the Madrid system is the international system for registration of trademarks. So it means working with your local IP office, and you can file one international application in English, and you can designate up to 130 countries. So instead of having separate national rights you need to manage and maintain through different local attorneys, you have one international registration and one renewal date. So using the Madrid system will give you a much easier access to your export markets. No need to have local attorneys in different countries when you file. No need to pay for translations. And you have one right to manage centrally through WIPO. So this is going to make your export business so much more speedy.
Thanks to everyone on the dais. I really love it. Thank you so much.
Building on that momentum, a dynamic panel examined cross-border opportunities, stronger market linkages, and emerging sectors that are drawing global interest toward India's rapidly expanding economy.
Let me start with you, Amit. Would you like to talk about your role and then talk about what your first impressions about this summit And then in terms of what do you see as the investment opportunities?
So our role as an authority is to promote the Kingdom of Saudi Arabia to be the investment hub globally. And I am, as Ahmed, it's my role is to focusing on the India investment file from the Kingdom of Saudi Arabia. The Saudi Arabia is one of the fastest growing economy and most resilient economies. And I believe with India, we have a lot of opportunities to work together in different sectors. We have more than 13 sectors in the kingdom where we are looking to attract more expertise from global and India, one of our partnership.
Let me turn to the left. What do you think, let's start with you, sir. What do you think is your goal going forward in terms of your intentions with India? In terms of both the trade, India in and India out. How do you see that happening in goods and services and in terms of the commitments made by either of?
First of all, I think Sudan is one of the very important countries in Africa. It used to be the biggest country until 2011. And then after the secession of South Sudan, now we are the third largest country in Africa. The next phase for us, for Sudan, is reconstruction, the reconstruction phase. And here, this is where India comes as one of the partners that Sudan needs to work with. We believe India has much to offer in terms of the reconstruction efforts of Sudan. One of the areas that I believe we can have good partnership in India with is agriculture. Actually, considering the great achievements that India managed to make in the last decades in agriculture, in transforming the whole agricultural sector in the country through different mechanisms and different policies. For example, the experience of the FPOs, farmers, producer organizations, which is a very successful experience in developing rural areas and empowering rural communities. Sudan can learn from this experience.
Now let me come to you, sir. From your point of view, what do you think the potential lies between India and where you come from?
We have a national development strategy. We're looking at the 2030 plan, which is around a low carbon development program. We're focusing on food security, energy security, and climate security. 87% of our land mass is covered by standing forests. We are being paid currently by some organizations and some countries to keep those forests standing and to do sustainable harvesting. Like I said, we are looking at climate security as one of the pillars of our development agenda. And, sometimes food security, energy security can come into conflict with climate security. But because of our program, our low carbon development strategy, we want to be carbon neutral as early as possible. And that is why there are significant investments by Indian companies in solar energy program, in hydroelectric program, and also in construction.
And let me take this opportunity to welcome on stage High Commissioner of Tanzania, Mr. Kanuti Mosha. Welcome. And he's the person responsible for investment in Tanzania. And in fact, in the interest of time, probably we'll just do a quick roundup of what Tanzania has to do with India, both India in, India out. If you could just summarize from the trade, investment, and business point of view.
Now, Tanzania has a lot of investment opportunities available for investors from India and globally. We have a very big arable land. So we have investors that are investing in agro-processing. We have Indian companies investing in cashew nuts, also in spices and other produce. But we also have opportunities in forestry. We have opportunities in mining. We have several Indian companies now investing in mining because we have a piece of land in Tanzania that has been found with a lot of graphite. So we have a lot of now applications from Indian companies doing investing in minerals.
This was followed by a focused fireside chat on sustainable trade, highlighting the responsible practices, green supply chains, and conscious innovations that are driving long-term global business growth.
Given everything that's going on with geopolitical tensions around the world, economic tensions around the world in terms of tariffs, the MSME sector and the agricultural sector, in my opinion, have become very focal points of the conversation. Since we're talking about this and tariffs is something that's on top of the agenda when anyone talks about trade in today's world. What are your first thoughts when it comes to trade balance across the world, looking at how disruptive the environment has become for MSMEs particularly, which are more vulnerable in my opinion?
While it becomes a very hot topic today to talk on an American tariff, we have actually not done our homework in terms of what are the available things on the plate. For example, the SEPA. The agreement, the partnership agreement, which we have already done with United Arab UAE, which says more than 90% tariff reduction happens, and we have our gems and jewelry industry getting benefited out of it. That is one part, which is SEPA. We are not studying CETA now, which is with United Kingdom, where again, ladies and gentlemen, we have 90% free trade agreements happening now. That is a market to look after. I feel we have to balance this out. We just cannot be focused on one part and say that the tariffs have increased. We have to see the other parts also from a geopolitical angle where we are opening markets.
"26 years of CNBC TV18.
What's going to be Bajaj Auto's game plan for 2026 in terms of EV launches, pushing exports and the overall growth of the company? Rajiv Bajaj is in conversation with us. Rajiv Bajaj, always a pleasure to have you here on CNBC TV18. We complete 26 years today. Give us a sense of your association with CNBC TV18 and the role that the channel has played in reporting on the automobile industry and the milestones of the automobile industry in the country.
Well, Parikshit, first and foremost, congratulations to all of you. And thank you so much for having me here on your special day. I must tell you that my first most significant business interview was on CNBC almost 24 years ago. So it was 2001. Govind did it. It was on the occasion of the launch of the Pulsar. So whether it's India, whether it's Bajaj, or whether it's me, the association goes back almost to the beginning of CNBC. And I can tell you from my experience, I like to call it the ABCD of CNBC. A for authentic, B for balanced, C for compelling, and D for delightful. You know, authentic because you're probably the only channel that doesn't this nonsense about source-based information. You know, everything is so credible. Balanced because there's always both points of view put before your viewers. Compelling because, you know, it is said discipline is repeating the boring brilliantly. So sometimes it may appear to you internally that what you do is getting boring, but to us on the outside, you know, it seems brilliant because it is so finely honed, and finally delightful because there is always an X factor in what you do, you know, from young Turks to future female forward and everything in between. It's a delight to watch CNBC. So, you know, I've had a great 24 years with you.
All right. Thank you so much for your compliments and support, Rajiv Bajaj. Now, let me come back to the two-wheeler business. Now, with the acquisition of KTM complete and approved, how do you now plan to scale up in India and global markets?
Yeah, so first let's take India. So in India, Parikshit, as you may be aware, for the last couple of months with KTM, we have pretty strong tailwinds, primarily due to the launch of new products. From the new Adventure to the Supermoto, most recently the Duke 160, etc. As a result of which, we have been now experiencing our highest ever retails in India. Also from India, in terms of exports, the new products are helping us to, move to the next level in terms of KTM volumes. And in fact, in that context, I must share with you that even in terms of exports to the US, which are not insignificant, we export about 10,000 KTM motorcycles every year to the US. Let me share with you something very interesting, that when confronted with the 50% tariff, Bajaj reduced the FOB price out of India to absorb most of this 50% impact. And yet we are able to export at a EBITDA that is greater than our 20% corporate EBITDA. So this is not about the power of KTM or the power of Bajaj. This is about the power of India. It is so cost competitive to manufacture out of here that really more of us should be taking this strength out, to other markets. So that's about KTM in India. As far as KTM globally is concerned, I said to you when we spoke the last time that at the heart of the turnaround globally is going to be, the concept of less being more. Less in operational terms, in the sense that KTM was brought down by this 12-month plus inventory that had piled up in its network.
Right.
So I'm happy to say that, retails are on course. That inventory is more or less depleted now, will be at the end of the year. And even strategically, it is about resetting the brand. Less is more. Get rid of the bicycle business, the car business, the smaller brands like MV Agusta, etc., and just focus on KTM Husqvarna going forward. So with this less is more approach, I feel quite confident that we are on the right path for the medium term.
How do you plan to increase your market share in ICE two-wheeler segment in India? What's going to be the game plan for 2026?
Well, when it comes to ICE two-wheelers in India, Parikshit, basically it's about motorcycles for us because we don't make ICE scooters. Within that, our focus has always been on the 125cc plus space. And as Rakesh shared with your colleagues just ago, whatever we are doing now in product and marketing terms is already yielding results. Between August and November, our share, as we calculated in the 125cc plus segment, has grown by 2% already. And I think, I just told you that 2001 was the launch year of the Pulsar. So next year is the 25th year of the Pulsar. And you will see that it will be the year of the Pulsar. Already as we speak, we are rolling out the first wave of new products, which will be reaching dealerships very soon. And you will see wave after wave of new stuff coming out of the Pulsar platforms all through 2026. And since in the domestic market, Pulsar is like 2/3 of our volume, I think if the new Pulsars do well, then this is going to be the primary basis for share gain in the domestic market.
Any investments in bikes over 350cc, considering that the government has hiked the GST there?
Well, I'd like to start by saying that I certainly hope the government will reconsider what it's done. And without dwelling on it too much, clearly this action is going to marginalize motorcycles above 350cc in this market. And if that happens, then, it greatly handicaps the manufacturers from developing such motorcycles and taking them out to the world. So I sincerely hope this will be reviewed. Meanwhile, our plans continue unchanged for now, Parikshit, because I don't know how many people are aware that when it comes to, and we measure it as 250cc plus, not just 350cc plus. So in the 250cc plus segment, between our like Pulsar, Dominar, KTM, and Triumph, we are neck to neck with Royal Enfield in terms of export leadership. With 4 brands across 108 countries, there is no reason for us to kind of put our plans on the back burner because of a domestic adversity. But as I said, I hope that will be relooked at. So for now, in terms of both development and investment, our plans remain unchanged.
Right. You've become number 1 in electric two-wheelers as of November and for several months in this year. What next in terms of consolidating your EV position, making it even stronger in the EV space?
Well, it's been a bit of 1-2, 1-2. It's between TVS and us, really. Between the two of us, we have almost 50% share now. And some months we are ahead, and more than that in other months, TVS is ahead. I think, but more important than the number game, as I've always maintained with electric vehicles, especially with the Chetak, what is important to us is the qualitative side, the learning curve. And I'm candid enough to say that both in terms of product quality and service quality, I think at least when compared to the standards that we at Bajaj are used to, I'm still not satisfied. None of us are satisfied. So our primary focus continues to be to get up that learning curve of product and service quality. In the meantime, certainly to grow the business, to take it forward, we have to do what we always do, which is new products. So in fact, we have just started, I think in the last few days, the production of our second all-new model. So this is not some variant of the existing. It's a new Chetak because we want to grow the Chetak portfolio. So that production has started. It will be dispatched to dealers soon. We are expanding our capacity here at the Akurdi plant, where we make the Chetak, from where I'm speaking with you. And of course, expanding the distribution of Chetak, because Chetak is not sold through the Bajaj motorcycle dealerships. It has its own exclusive dealers. So this is how we have to keep it moving forward. And I'm also happy to share with you, I think I've done that before, that finally most of Chetak now has not just a positive gross margin or something like that. It actually has a positive EBITDA. So we now make money on most of the Chetak that we put out.
There are players like Revolt, Ola and Ultraviolet which have already launched electric motorcycles. Royal Enfield will launch the Flying Flea electric motorcycle early next fiscal. Will Bajaj Auto be waiting any longer, or will you be unleashing a electric motorcycle offensive soon?
No, at least for the domestic market, at least for the near term, I would think that our focus will continue to be on scooters in the Chetak brand. Our vision for Chetak, is inspired by brands like Vespa or the Mini. Again, this is something I've shared with you before. We have now in the pipeline several new developments for Chetak. We see it growing into a portfolio of possibly 7 very distinct scooters. So I think we must remain focused on that, at least for the domestic market for the next few years. But yes, Rakesh did mention, I think again on CNBC, that Bajaj is working on electric cycles. This is true. We have started work, but it is primarily for the export markets.
All right. I would also like to ask you what...
26 years of CNBC TV18.
Hello and welcome to India Business Hour. I'm Ashmit Kumar. Here are the headlines that we're tracking this evening. Sensex and Nifty gained for the second straight day but ends the week in the red. Rupee hits a fresh record low but sees a swift recovery. Dealers say the recovery could be attributed to dollar selling by exporters and not just RBI support. Inflation rises from record low of 0.71% in November, remains well below the RBI target range of 2 to 6%. Food prices shrink by nearly 4%. Economists see scope for another rate cut by the central bank. Aviation regulator sacks 4 flight inspectors responsible for oversight of Indigo after the mass cancellation of flights. Union cabinet clears 100% FDI in the insurance sector. New legislation provides more teeth to regulator IRDA and allows merger of non-insurance companies with insurance companies. Composite license and open architecture clause not part of the bill for now. Cabinet also approves 11,700 crore rupees of the much-awaited delayed census exercise. The population count will begin next year in what will be India's largest administrative and statistical exercise after a prolonged gap. India's most profitable and second largest asset management company is going public. The 10,600 crore rupee ICICI Prudential AMC IPO opens for subscription. The company is eyeing a valuation of $12 billion. Novo Nordisk launches Ozempic, its popular weight loss and diabetes drug in India. Prices the weekly dosages at 2,200 rupees and upwards. Novo Nordisk management tells CNBC TV18 that Ozempic clinical trials have not shown a causal relationship in the product and mental health challenges. Government rejects global air quality benchmarks, tells the parliament that India sets its own air quality standards. Opposition leader Rahul Gandhi calls for a debate on air pollution, and the government agrees in a rare moment of consensus in parliament. Disney invests $1 billion into ChatGPT maker OpenAI and licenses its characters for AI generation short videos and images for 3 years. OpenAI will compensate Disney for using its characters, but the financial terms have not been disclosed. Well, let's start with the day's trading action. And the market gained for the second straight session, with Nifty ending above the 26,200 mark. The Midcap index outperformed and the market breadth favored the advances. Now all sectoral indices closed higher in trade, with metal and realty stocks leading the pack. For this entire week, though, the Lal Street ended lower and all major indices closed in the red, barring metals. All sectoral indices closed in the red, with defense and PSU bank stocks leading the declines. And from equities to the currency market, rupee hit a fresh low of 90.56 to the dollar, but recovered all losses soon after. Dealers attributed the fall to oil companies buying dollars and the recovery to selling by exporters. The rupee is the worst performing currency in Asia so far this year. And well, from currencies to commodities, silver's gold run continued today, with the metal hitting a new record high once again. Prices have more than doubled this year, supported by strong industrial demand. Dwindling inventories and its inclusion on the US critical minerals list. Back home, silver crossed a major psychological milestone of 2 lakh rupees before cooling off slightly. Well, the government has released the inflation numbers for November. The consumer price index has come in at 0.71%, which is marginally higher than the last month. However, this number is still below the Reserve Bank's target range of 2 to 6% for the 10th month in a row. Lata Venkatesh now joins us to help us understand, to help us decode these numbers. Lata.
Yes, the number has come in exactly as the street expected. 0.71% inflation. I mean, that's hardly anything. Way below the Reserve Bank's mandate of keeping inflation between 2 and 6%. 0.7 was expected even by the Reserve Bank because their average for October, November, December is 0.6. We had a September number of 0.25. So the average for October, November now stands at 0.5. With the December number coming below 1%, the Reserve Bank's forecast of 0.6 for the quarter will more or less be achieved. Food inflation has come in at minus 3.9. I must warn you that all this is partly because of a very high base. We had a 9% plus inflation a year ago in November 2024, that is, and therefore this inflation number, or food inflation number of minus 3.9 is very much in line with our poll forecast of minus 3.5%. We have seen a slight uptick in food prices in November over October, especially in the prices of vegetables, about 2.5%. But the overall inflation is extremely benign, given the lower prices of pulses, cereals, spices, and milk, meat, a whole lot of other products. The key to watch now will be what will the bond market do. The bond market did not move after the numbers come. We are still at a very tall 6.6%. In terms of the bond market, despite the rate cuts announced by the Reserve Bank in the policy on December 6th and promising adequate liquidity, the bond market is unmoved, and that's largely because the bond market is worried about the supply of paper. In the last quarter of every year, the state governments raise a lot of money, what is called SDLs, State Development Loans. That is expected to be over 4 lakh crore. But even more important is February 1st, the next budget. There it is expected that the government will not have too much elbow room to reduce the fiscal deficit, simply because they've already cut taxes a goodish bit. And therefore, a large borrowing is expected from the central government as well. And that's why at the moment, the bond market is unmoved to the inflation number.
Right, Tata, thanks a lot for that. Now, the Union Cabinet has approved the Insurance Amendment Bill, which allows 100% foreign direct investment into the insurance sector. The new legislation also aims to give more teeth to the insurance regulator. Sapna Das is joining us now with more details on this proposed legislation and its likely impact. Sapna, take us through this bill, and when can we expect it to be tabled in the Parliament?
Well, the second question first, of course, the expectation is in the coming week. It's going to be tabled in the Parliament, maybe as early as Monday. That's what we are getting to hear very clearly in terms of tabling of the bill. And there will also be a certain sense of urgency in getting it cleared as quickly as possible. So, all eyes on that, and there will be a lot of action in the coming week. That's one. Second, very quickly, of course, 100% FDI, raising the cap from 74% currently. That's a big one. It's more of a signaling by the union government. If you look at the current FDI, the kind of flows that have happened in the insurance sector, there is still a bit of headroom available even to reach 74%. So this is an important signaling from the part of the government to basically invite more foreign investment. Please come to the Indian market and put in money in the insurance sector. I think that's a message loud and clear. That's one. Second, some other important changes have also been proposed in the amendment bill. Number one, of course, is setting up a new consumer protection and education fund for the insurance policy holders. It was not the case so far. So that's one. Second, also giving more teeth to IRDA in terms of disgorgement of wrongful gains. Now, SEBI, as a market regulator, already has this power since quite some time. The same is now being given to the IRDA. Third, of course, also in terms of merger of non-insurance companies with insurance majors. Now, we did try to find out what this really means. So given to understand, say, for example, it's an insurance major has an SPV and they would like to merge it with the main insurance company. That's how it's going to be. Or even non-insurance companies for that matter. So this is basically more in terms of promotion of ease of doing business and giving some kind of scale. Of course, post-merger, the insurance entity is what will continue. Apart from this, of course, we are also given to understand that, the composite licensing clause, as well as the open architecture that was being spoken about, that has been actually removed from the bill, at least for now. The understanding probably on that front is that, a bit more time is required for the regulator and for the industry to come to terms with it, to understand and have the capacity building to basically handle this kind of a thing. So broadly, these are what the amendments are. We have to wait and watch and see what happens on Monday in the Lok Sabha when the finance minister tables the bill.
Right, Sapna, thanks so much for those updates and for breaking that story as well. Moving ahead, the Cabinet has also approved a program to conduct census in 2027 with an approved outlay of over 11,000 crore rupees. Addressing a press conference, Union Minister Ashwini Vaishnav has said that census will be conducted in two parts, in listing houses and population enumeration. Vaishnav added that the enumeration will include social status and caste census as well.
बहुत वेल प्लान्ड तरीके से इसको किया जाएगा and lot of digital technologies will be used in census this time. इसका लीगल बेसिस हम सब जानते हैं सेंसस एक्ट है और सेंसस के रूल्स हैं. 16 जून 2025 में गैजेट नोटिफिकेशन पब्लिश हुआ था सेंसस 2027 का. आज इसके लिए बजट अप्रूव हुआ है 11,718 crore rupees का.
The Directorate General of Civil Aviation has sacked 4 flight inspectors as a part of its investigation into Indigo's widespread flight disruptions. The inspectors were responsible for monitoring the airline's operational compliance. The aviation regulator has summoned Indigo CEO Peter Elbers once again. Shivani Bajaj now joins us with the latest updates on the Indigo crisis.
Well, yes, the Indigo crisis has finally culminated into a regulatory fallout. The DGCA has removed 4 of its flight operations inspectors with immediate effect, signaling a rare and tough internal cleanup by the regulator as it tightens scrutiny on airline operations nationwide. Now, FOIs form the backbone of India's aviation safety oversight, and they are almost always hired on fixed-term contracts. So when DGCA relieves them and sends them back to their parent organization, it effectively means that their contractual engagement has been terminated. Removing 4 inspectors together, including senior officials, is extremely unusual and underscores the seriousness with which the regulator is responding to the gaps exposed during the Indigo crisis. Now, this decision comes after back-to-back DGCA meetings questioning Indigo's top leadership on scheduling and rostering and its ability to operate the published winter schedule. And in a major development, today Indigo's board has also brought in Chief Aviation Advisors LLC, led by global aviation expert Captain John Nilsson, to conduct an independent review of the disruptions and identify contributing factors. There is also a sign of recovery on ground. Indigo crossed 2,000 flights today for the first time since the crisis began, indicating that the airline is slowly getting back on its feet after days of cancellations and curtailments. Back to you.
Right, Shivani, thanks so much for that. Now, today also marks 6 months since the tragic Air India plane crash outside Ahmedabad airport. The flight, which was headed towards London's Gatwick airport, crashed moments after takeoff, killing 241 out of 242 people on board. A preliminary report released by India's Aircraft Accident Investigation Bureau in July had highlighted that the fuel supply switches for both engines were almost simultaneously placed in the off position just after takeoff. Pilot associations had criticized this report, saying that dialogue between the captain and the co-pilot, which the report merely paraphrased, suggests the possibility of human error without providing evidence. Now, India's most profitable and second largest asset management company is going public. The 10,600 crore rupee ICICI Prudential AMC IPO has opened for subscription. The issue was subscribed 72%, driven largely by qualified institutional buyers. The company is eyeing a valuation of $12 billion.
Unless we generate alpha, unless we generate more than the benchmark, we can't sell. Right? It won't sell, because then people should buy passive. No? If I am being paid fees to beat the benchmark. So unless I beat the benchmark, I cannot get money. Then otherwise ETFs will grow. 90% of our AUM over a 3-year basis has beaten the index right now. So one is, and second is, if you invest in ETFs, there is a taxation advantage versus mutual funds. That is not there in India. So these are the 2 reasons. If I don't beat benchmark, why should I get money in active funds?
In news now from the pharma space, Novo Nordisk has launched its popular weight loss and diabetes drug Ozempic in India. The pharma giant has priced the weekly dosages at 2,200 rupees and upwards. Speaking to CNBC TV18, Novo Nordisk management said that Ozempic clinical trials have not shown any causal relationship in the product and mental health challenges.
We are launching
this semaglutide in 3 strength, 0.25, 0.5 and 1 milligram for the benefit of type 2 diabetes patient. So it is very clear that the 3 strength which we are launching is for diabetes, and till 2.4 milligram which we have launched is for obesity.
Australia has issued a new safety warning against weight loss drugs because there is concern about mental health challenges, such as even suicidal attempts, rising with the use of these weight loss drugs. Your comment?
We have done many of the clinical trials across, and you know, any of the medications which gets launched, whether it is in the US, Europe, Australia or India, it gets launched with a very critical review by the regulator, and same is the case in India. And in all those reviews, we have not seen any kind of a causal relationship, and also in our clinical trial and observational use, we have not seen a causal relationship between the product and these kind of a tendency, but we remain watchful.
Sergio Gore, the US ambassador to India, has said that the telephonic conversation between Prime Minister Narendra Modi and President Donald Trump was a great call between two friends. The diplomat also said that Modi reiterated his support for Trump's efforts to bring peace to Ukraine. In a social media post, Prime Minister Modi had also posted about the conversation on social media X. The Indian government said that both leaders reviewed progress in the strategic partnership and agreed to work closely to address shared challenges and advance common interests. The phone call between Modi and Trump was their first since Diwali. Remember, a delegation from the US is in Delhi for trade talks. Now, the US Senate has passed mega defense policy bill approving $901 billion annual military spend. The approved defense spending is nearly $8 billion more than President Donald Trump's earlier requested this year. The bill will now advance to the Senate for approval. The Trump administration has also approved a $686 million defense upgrade package for Pakistan. The deal involves defense equipment and upgrading the Pakistani F-16 fighter jets to extend their life till 2040. Global tech giant Microsoft is joining hands with the Maharashtra government to fight cybercrime. All 1,100 police stations in the state will be equipped with a Microsoft AI tool to fight cybercrime. Currently, only 23 police stations in Nagpur are using it. The AI system speeds up investigations and helps organize case files and guides officers through each step.
Now, one of the chances I had, again, was to meet with the team that built this new agentic system called the Maha Crime OS. So this was sponsored by the Chief Minister of Maharashtra, who is here with us.
And coming up, Messi mania grips Kolkata. Football fans across age groups ready to pay big bucks to catch a glimpse of the greatest footballer of our times. And you can also catch all CNBC TV18's news and updates on YouTube, Facebook, Instagram, X, and Jio Hotstar. Do subscribe to CNBC TV18 Access for exclusive stories.
"26 years of CNBC TV18. "26 years of CNBC TV18.
The government has told the parliament that India sets its own air quality standards and that WHO guidelines are only advisories meant to help nations frame metrics. In a written reply in Rajya Sabha, the Minister of State for Environment, that's Kirti Vardhan Singh, said that global air quality rankings cited by various organizations and are not conducted by any official authority. He added that the World Health Organization's air quality norms serve only as advisory values and are not binding standards. A report by Switzerland-based air quality monitoring company IQ Air earlier this year had highlighted that 13 of the world's top 20 most polluted cities are in India. Lok Sabha's leader of opposition and Congress MP Rahul Gandhi has called for an urgent and cross-party debate on the worsening air pollution crisis. The centre has agreed to conduct this discussion.
Millions of children are getting lung disease. Their future is being destroyed. People are getting cancer. Older people are struggling to breathe. I think a good idea would be that we frame the discussion not on us saying what you have not done and not on you saying what we have not done, but simply saying that what are we going to do for the people in India in the future.
In international news, Russia has said that Ukraine launched a major aerial attack with at least 287 drones downed over Moscow and many other cities. This as Russian President Putin claimed that the country's forces have taken control of a town in eastern Ukraine. However, Ukraine's military disputed the claim, saying that it remained in control of the town in question. Moscow has also said that it has captured a village in Ukraine's eastern Kharkiv region. And fighting between Thailand and Cambodia has entered the fifth day. Thai forces have reportedly carried out fresh attacks on 3 Cambodian provinces. Cambodia has also accused the Thai military of continued strikes. Thailand's Prime Minister has confirmed that he is scheduled to speak with the US President Donald Trump. No new casualties were reported following the renewed fighting. And the Trump administration has imposed fresh sanctions on 6 more ships after claiming that these tankers are carrying Venezuelan oil. This comes a day after seizing a tanker from Venezuela off the coast of the country. Sanctions have also been placed on some Venezuelan President Maduro's relatives and affiliated businesses. Speaking on the tensions between the US and Venezuela, Nobel Peace Prize winner Maria Corina Machado has said that United States helped her leave Venezuela, adding that the country has been invaded by criminal enterprises.
I am very hopeful Venezuela will be free and we will turn a country into a beacon of hope, an opportunity of democracy. And we will welcome not only the Venezuelans that have been forced to flee, but citizens from all over the world.
Disney has announced that it will make a $1 billion investment in ChatGPT maker OpenAI. This deal will allow users to make videos with its copyrighted characters on its Sora app for 3 years. OpenAI will compensate Disney for using its characters. The financial terms have not been disclosed.
First of all, what we're doing here is we're licensing about 200 characters for users of Sora to create their own, basically, videos using Sora and those characters. We are not including name and likeness, nor are we including character voices.
We hear so much from users about how much they love Disney's characters. Disney, I think, is the greatest storytelling company in the world, bar none, and people really want to connect with Disney characters and express creativity in new ways. And we are confident from everything we've heard from our users that they're going to respond very well to being able to do this. And I hope that it'll unleash a whole new way that people use this technology and a new model for the companies making the technology and rights holders to sort of responsibly figure out how to get this done together.
French spirits major Pernod Ricard's India arm is placing bets on the country's premium Alcobev market. The company aims to sell 1 million cases within the first 12 months of launching its new offering, Exclamation, which houses 5 homegrown products. CNBC TV18, Shivani Bajaj reports on Pernod Ricard India's strategy. Take a look.
After the strategic sale of its Imperial Blue business to Tilak Nagar Industries, Pernod Ricard India is doubling down on the premium segment. Exclamation. A new multi-category premium brand is spearheading this pivot. CEO Jean Toboul says this is the biggest innovation bet for Pernod Ricard India.
We are bringing to the world of spirits a new premium admix brand that is catering actually 5 categories of spirits, namely whiskey, of course, which is the most important category in this country, but also rum, brandy, vodka, and gin. And this is for us a way to innovate into a space where consumers really want to have a repertoire of consumption at a unified price point.
The brand is positioned as what the company calls an affordable premium entry point, targeting young, modern, legal drinking age consumers. Jean says the premium market intent is embedded not just in the look and feel of the brand or the packaging of the product, but the product itself, whether it's the whiskey or the rum.
The liquid is premium, using Scotch whiskey as a mix with Indian grain spirits for the whiskey part, using French grape in the brandy, using Jamaican rum into the rum that we propose, and so on and so forth.
The launch is in keeping with the larger play that saw Pernod Ricard India sell its mass market brand Imperial Blue. It's about concentrating on segments where growth is faster.
We want, in the pyramid of spirits, when you look at that, the higher the price point, the higher the growth, if I summarize very quickly. So we want to be exposed to this higher segment, to be able to allocate our resource where it matters most and where we can grow faster and be the key growth engine for the Pernod Ricard Group. When you go even below 500 rupees, it's a market that we have never addressed. Yes, it has been a market with hardly any growth in the past, and actually it's a market that fuels our segment through the premiumization. These consumers which are sitting into this country liquor or local spirits, they aspire to drink better, and when their revenue grows, their disposable income grows, they go to higher brand, and we are there to give them premium experience at that level.
The company is also betting on developments like the India-UK Free Trade Agreement to open up new opportunities in the premium spirits business. As this FTA and others like it materialize, Pernod Ricard is confident it will see rapid growth in India, which is already its second largest market. So more premium offerings are on the cards, even as the company allocates its resources more effectively towards its other high-growth brands like Royal Stag, Blender's Pride, and international brands like Chivas, Jameson's, Absolute and Ballantine's. In New Delhi, Shivani Bajaj.
Well, speaking of spirits, Kolkata is in high spirits and is currently gripped by Messi mania. The legendary footballer will kickstart his India tour in the city tomorrow. He later travels to Hyderabad, Mumbai and Delhi as well. He's scheduled to play a friendly match at the iconic Salt Lake Stadium. From 17 to 70, fans from across age groups were seen queuing up for tickets for the event. Tickets start at around 4,000 rupees, going all the way up to 25,000 rupees. Here's that story.
Kolkata is all gearing up for the Messi magic. And Kolkata is a football fever city, a city which lives in football. And you can see huge line is there behind me, and everybody is grabbing the tickets from 3,500 to say 25,000. The tickets cost definitely 25,000 are the VVIP tickets, but everybody is here in line to grab, to give money and grab the ticket. 10,002 tickets, so is it not pricey? Why?
No, it is not pricey.
Why?
I'm seeing Messi after 7 years. For the first time in my life, it's not pricey.
It's every money is worth it for him. And he has been my idol all my life.
In one side, their tickets are being sold. On the other side, you can see that already these jackets, these T-shirts of Messi and other T-shirts are being sold. Have you bought the ticket?
Yes. B1 5,276।
मेसी के लिए कुछ भी हो सकता है, पैसे का मैटर नहीं है, एक बार ही सुझेगा, लाइफ टाइम ऑन।
घर में डांट नहीं रहा है,
क्या बोल रहे तो क्या कर सकते, लेकिन मेसी तो एक बार ही आएगा ना, तो इस अपॉर्चुनिटी अगर चला जाए तो बहुत बुरा लगेगा इसमें।
Last time when he came to India, he was in Calcutta 14 years back. So now he's coming as a world champion. So I thought, it has to be a tribute to a country, because although football is not so popular all over India, but Lionel Messi is the biggest icon.
And on that note, it's a wrap on this edition of India Business Hour. Thank you so much for watching. News and updates will continue right here on CNBC TV18.
"26 years of CNBC TV18. "26 years of CNBC TV18.
The Dalal Street ends the week lower despite a Friday's surge. Except for metals, all sectoral indices end in the red. Defense, PSU banks are the top laggards. Over the next 30 minutes, we'll decode the week on Dalal Street. We'll put the spotlight on the 10,000 crore rupee ICICI Pru IPO, which is opened on Friday and closes next week. And we'll tell you why brokerages are betting big on India's CDMO space. Hello and welcome to Editors Roundtable. I am Reema. With me are Prashant and Ekta. And joining us is Pankaj Tibriwal of Ikigai. Guys, all's well that ends well. I mean, the start of the week was tough, challenging. And I remember the words we were using, right? Midcaps, people are throwing in the towel, capitulation. But Thursday and Friday, the price action, midcap performance was far more encouraging.
Stopped falling, basically, right, I guess. And let's hope that that is more, we see more of that. By the way, it's a bit of a triangle, right? Not a round table.
I think it's going to happen on a Friday.
Pankaj is in BKC. Pankaj, you could have hopped across the ceiling and been here.
Sorry, Prashant, I missed you. There was some disturbance. Can you?
I'm saying you could have hopped across the ceiling and been here. You're in BKC, right?
Yeah, there was back-to-back meetings, so I couldn't be there at the studio. My apologies.
No. I'm just kidding. But I have the weekly stats. Maybe just kind of for our viewers, run through what the week kind of looked like by the end of it. This is Friday to Friday. Of course, we went all over the place, as Rima said. This beginning of one day, Tuesday was particularly bad, right? Wednesday was bad, but not so bad. Thursday was much better. And of course, Friday, we ended about 100 points higher. Nifty down 0.6% Friday to Friday. Bank Nifty down 3/4. Midcap index down about 0.75%. Small cap index down about 0.8%. Look at sectors. Defense as an index was down 3. The PSU bank index was down 1.8.